Hello all. So good morning to one and all. So we are in the class of CMA final. Okay. CMA final group 4. In group 4 our subject name is corporate financial reporting. In shortcut we would like to call it as a CFR. Here afterwards I will refer it as a CFR, corporate financial reporting. Paper number paper number 18, corporate financial reporting subject. The subject is in group 4 of CMA final level stream. So by the way, my name is ARUN Kumar. I am a mentor for corporate financial reporting of group 4 at CMA final level stream. Not only mentor, I am the teacher, I am the professor. Okay. So with regard to the corporate financial reporting subject, so everything is new to you guys. Okay. Whatever doubts you have, you can feel free to ask me. Then in group 4 or with respect to group 3 also, CFR plays a crucial role. Why? Because for the scoring purpose, for the aggregate purpose, group 4 is better than the group 3. So most of the students try to attempt for the both groups and they will try to get more marks in group 4, which will be used for getting the aggregate in the both the groups. Okay. For getting more marks in group 4, so this is a practical subject, right? So as a practical subject, there is a high chances of getting more marks if you attend the exam perfectly. Okay, there is no chance of, generally in theory subject, it depends on the mentality of the valuationer. Okay, but with respect to the CFR, if you got this answer, if you presented the format well, so definitely you will get the better marks. There is no chance of cutting down the marks. In theory, if you write for 10, for example, if you write down the 10 lines, there is no need to allocate the full marks for you. Okay, if he corrects down the paper and depends on his mood, if he allocated the 5 marks, that's all. There is no point of increasing marks even though you applied for the revaluation. But coming to CFR, there is a high chances of getting more marks if you presented perfectly. Okay. So there is no factor of luck in corporate financial reporting. So be focused on it. It will decide the group 4 and group 4 decide your entire group 3 and group 4 CMA final, and CMA final will decide our future. Malli why are you coming again to CFR? So CMA final will decide your future. Okay. So keep it in that mind. So attend for all the classes and ask the queries. Whenever you have the queries, just ask it immediately. But please don't interrupt in between the classes. Okay. Then let's get into the chapter index. So we have divided the entire CFR subject into 19 chapters. So generally in your board book, they have classified our entire CFR subject into A, B, C, D and E. Okay. So in A, it covers the entire Ind AS. Okay. Indian accounting standards. Okay, I will discuss what is the Indian accounting standards. And again, valuation of shares and goodwill, valuation of shares and goodwill. Okay, this chapter is very important, not only in the corporate financial reporting subject, in the SFM and as well as SPMBV. Okay, in few topics is also coming from cost audit also. Okay, valuation of shares and goodwill is very important chapter, not only with respect to the CFR, but with other chapters also. So in SPMB, if you able to learn this chapter in CFR itself, there is no need to learn in SPMBB or vice versa. Okay, so one shot, two birds. Next one, accounting of accounting of financial instruments. The next chapter is accounting of financial instruments. The next one is NBFC. NBFC means masking meaning not. Okay. NBFC is non-banking financial corporation. So let's see what does it mean. So there is a specific definition given in the act. That and all we will discuss at the while we have started the chapter. And then Ind AS 103, accounting for business combination and restructuring. Ind AS 103, repeat with me. Accounting for business combinations and restructuring. So as per the understanding of the CMA inter-syllabus, we have learned the amalgamation. Do you remember? Amalgamation concept is there. So same concept, similar concept is here. Okay, few concepts have not been detailedly discussed by the AS14 actually, but here there is a brief description of the remaining aspects also. Then restructuring means, say, internal reconstruction. Sorry. So there is a chapter called internal reconstruction, isn't it? Is there any chapter called internal reconstruction in your CMA inter-syllabus? No? Okay, CA inter. Okay then. How many of you from CA inter? Okay. Okay, cool. Remaining people, don't worry. She's looking like so cool. No need to worry. So there is a chapter called internal reconstruction in CA inter. So we will discuss it here also. Okay. Then consolidated financial statements and separate financial statements. So there is one chapter called consolidated financial statements. Here afterwards I will refer it as a CFS. Then separate financial statements I will refer it as SFS. So these are the shortcuts used to describe consolidated financial statements and separately financial statements. So then recent developments in financial reporting and government accounting in India. So in our CMA final CFR curriculum, so most of the chapters are practical aspects only. So but apart from these two chapters, so these two chapters are theory chapters, and remaining everything is a practical oriented. Then, so in our board book, all Indian accounting standard chapters are classified under A. Then valuation of shares and goodwill, accounting of financial instruments, and NBFC. So these three chapters are one set. So I am just writing down the syllabus as per the ICMA module. Then Ind AS 103 and consolidated financial statements. And then last one is recent developments in financial reporting and government accounting in India. So they have divided the entire curriculum into A, B, C, D and E. Okay. So from this I have classified the entire chapters. I have given the serial number for each and every chapter. So all Indias has been covered here. After that, valuation of shares and goodwill, accounting of financial instruments and NBFC. Then Ind AS 103 one part, and consolidated financial statements is one part, and recent developments in financial reporting and government accounting in India. These are the index for our CMA final curriculum. Then let's see the weightage and important chapters. Let's have some small synopsis regarding with the weightage of the chapters. So valuation of shares and goodwill, definitely there will be a 7-mark question. Okay. and that too it will be useful in other subjects also. There is no chance of leaving it as a choice. So there is a compulsory question of 7 marks, and as well as maybe in SPMBV also there is a high chances of asking for it as 7, or depends on, I don't know exactly. Okay, but if you read it here itself, it will be useful. Then accounting for financial instruments, from here also they are asking for 7 marks. And NBFC, so every time they may not be asking for this chapter actually. So if they asked only, there are few questions regarding with the norms. Norms means provisions, percentage of provision on standard assets. Did you remember? Regarding with the banks. So calculation of norms provision. So only that question only is going to be asked with regard to the practical aspect. So maybe there is a chance of 2 mark MCQs. That's all. And last attempt there have been asked for 7 marks. So there is no chance of asking for this attempt. Okay, the chances are very remote. So this is 2 marks only this time. And India's 103. This is very important chapter. 114 mark question. Okay, then 1 4 mark question. There is a chance of coming for 2 MCQs. So total how many marks? 22 marks. From the India's 103, there is a high chances of coming for 22 marks. Every time there is one 14 mark question and one 4 mark question in the last question. Okay, I will tell you the exam pattern also. Then consolidated financial statements, 114 mark question. Then recent developments in financial reporting, 1 7 mark question, practical aspect. Okay, I told you right. So these 2 chapters are theory chapters. In this recent developments in financial reporting, it's a combination of theory and practical aspect. Okay, so from theory there is 7 mark questions. For the practical, 1 7 mark question. So for the practical, there are only 3 concepts. Okay, and that too every time the question is repeating, like question is asking in the simultaneous way. If the question is asked from the EVA from this time, next time they are asking from the value added statement. So last time already the question is asked about the value added statement. Okay, and this time there is a high chances of asking for economic value added concept. So economic value added concept, there is a concept in SFM also. Got it? So if you write both groups, there is some edge always. So try to attempt the both groups. Got it? So if you if you are going to write the both groups, there is a concept called economic value added in brief in SFM subject. So there is no need to revise it again in recent developments in financial reporting. Got it? So always there is some edge. So try to use that edge. Then government accounting in India. It's a completely theory chapter. So there is a chances of asking for 10 marks. 2 5 mark questions are there. So every time this pattern is repeating every time. Okay, government accounting in India 10 marks. Then recent developments in financial reporting 14 marks. Of course, with respect to the theory, there is a little bit more topics are there. So there are some lengthy topics and we need to cover more with respect to the theory of recent developments in financial reporting. But coming to government accounting in India, there are only few theory topics. In that few theory topics, they are asking for about 10 marks. So this is the focused area, because with the investment of flow time, you can get the more marks. So these are the index. And coming to section A, Indian accounting standards, the important Indias are India 16, property, plant and equipment. So in your CMA inter there is called accounting standards, right? So accounting standard 10. Similar concepts only. Okay, the basic theme is the same. Then the important chapter is India's 38, intangible assets. Then again India's 36, impairment of assets. These 3 chapters are one set. you cannot read it separately, and you cannot solve the problem by looking at the Index 16 only. So if you want to solve the problem from Index 16, you should have the knowledge with respect to the impairment of assets also. Okay, and as well as for intangible assets also, always if there is a question from intangible assets also, always they try to add the element of impairment assets. Okay, so if you wanted to attend for the second question, most of the times from these three chapters the question is in the given in the second question of your exam paper. Okay, so first question is all MCQs. I will discuss the paper pattern also. So these three chapters are one set. So we will start our discussion with these three chapters only. Okay. And apart from this, for this attempt especially, India's 10 is also very important. Share based payments. ESOPs are there, right? Employee stock option plan. So same concept. So share based payments. Then next important topic is India's 115 revenue recognition. What is AS9? What is AS7? So India's 115 is the combination of AS9 and AS7. So the construction revenue aspects and normal revenue from normal operations, both the aspects are covered here in it, India's 115. Okay. Then the important topic is India's 116 leases. And the next important topic is India's 12 income taxes. So there is no chance of taking these chapters as a choice. Okay, all these chapters are interconnected, and that too, this India's 12 is there, right? Income taxes. There is there is no possibility all the time. There is a question on India's 12 income taxes, but one thing is there is a connection between India's 103 and India's 12. Okay. So one element is there in India's 103. If you want to draft the balance sheet, you need to do the adjustment, right? For doing one of the adjustment, you should have the knowledge of India's 12 income taxes. So if you want able to solve the entire problem of India's 103, you should have the knowledge of India's 12. If you are lucky enough, there may be question on India's 12 for 7 marks also. So there is a dual benefit with respect to the income taxes. So in that aspect, this chapter is also very important. So remaining chapters are there. So India's 12, always there is MCQ. There is not much possibility of asking about the 7 mark question. And remaining India's 21, the effect of changes in foreign exchange rates. There is a accounting standard called AS11. Okay. Then India's 23, borrowing cost. Whatever the borrowing cost you have already read in your lower level of CMA. So maximum that concept only. So have you heard about, so okay, yes, 16. So have you heard about substantial assets? With respect to the borrowing cost, we always used to listen the words substantial period of time and qualifying assets. So the same definitions and the same meanings are attached to it, but the level of computations are little bit different compared with the AS16. But remaining the basic principles is the stick to the same. Then what are the remaining chapters? Operating segments and fair value measurements. These are very small chapters. Within one day we can revise it, the entire chapters along with the questions. Okay. So are you getting sleep, ma'am? So do you feel difficulty in any of these chapters, like by looking at it? Sir, how I feel difficulty by looking at these chapters, sir? After we are getting into the subject, then only we feel whether difficulty or whether it easy, then only. So normally by looking at the marks, weightage of the marks and length of the chapters. So India's 103 is a very vast portion, and there are a lot of questions and concepts also. While we are doing, there is a chances of doing some calculation mistakes also. So And consolidated financial statements also, there is a 14 mark question. Obviously this is also a lengthy question. But coming to recent developments in financial reporting and government accounting in India, these are my two favorite chapters always, because the amount of time invested in these chapters is very less, but the return we are getting on these chapters is very high. Okay, compare with this proportion. Here also NBFC, sorry, India's 103 and consolidated financial statements also we are getting more marks. But the thing is, we need to invest more time. Okay. And in our last attempt, so generally, while I am giving the guest paper, I have discussed about NBFC and I am giving the chapters in order. So before the exam, have given the chapters orders. So in which order you are going to start your preparation after completion of your before exam to the CFR. So in that order, I have given NBFC as the first choice. So for your first and topmost priority is the NBFC, because so last 4 attempts they haven't asked about the NBFC question with respect to the 7 marks. So there is high chances of asking question from the NBFC. So how much time do you need to invest on NBFC to solve that problem? Literally it is almost 5 minutes, that's all. With that 5 minutes we can able to read the percentages. So there is a standard asset, there is some substandard asset, and there is some doubtful assets also. On standard asset 0.40, there is some percentages. We need to remember just 3 percentages. For remembering that 3 percentages, it will not take more than 5 minutes, right? By remembering those 3 percentages, we can get how many marks? 7 marks. That too, you haven't opened the books with respect to the NBFC also, you can able to score that 7 marks. Okay, so normally why I am quoting this example is our approach is towards like this only. So with minimum efforts, where we are trying to get good marks. Okay, until your completion of exams, we are there for you. Okay, so we will guide you. So first we will start we will try to complete the each and every chapter. Okay, not try. We are going to complete each and every aspect of the problems. And after that, I will brief you what are the important areas you should focus on it. Okay. So what are the resources we are going to provide in your classroom? Concept book. Okay. Workbook. Handwritten notes also. Whatever we are writing in the class or whatever I already wrote down in the class. So I am trying to provide those notes also. So it will be useful. And then one MCQ booklet. So but these booklet will get you at the end of your lectures. Okay, not only at the end of the day, after the completion of your portion you will try to available it. Okay, so concept book, workbook, handwritten notes, MCQ booklet, these are the resources we are going to provide for you. And then what is the duration? I will try to complete it within 120 hours. Okay, so this is a practical subject, right? We need to practice in the classroom itself. Few problems we are going to solve it in classroom itself, and few problems I will write it down before itself and I will present it to you for the recording. Okay, and few aspects I will share it in the group, you can write it down. Okay, I will discuss in the classroom itself. So each and every problem I will discuss with you in classroom, and apart from that few problems we are going to solve it in classroom only. Okay, then this is the duration. And next thing, what is the approach, how we are going to conduct the classes? Like our classes is most of I will try to put it in the morning session, so then at that time only your energies are very high. So at later point of time, depend on the situation, It's not about all the time CFR class is at morning time only. So depends on the situation. We will, there is a change in the timings of the classes. Okay. And apart from that, so whatever the concept already we have discussed in the previous class, so I will try to revise it in the current class, okay, within 10 to 15 minutes. Then you can revise the previous day concept, and sometimes few of us might be, there is a chance of missing the classes, right? So at that time also, by revising or by revising in these 10 to 15 minutes, it will be useful them for two, okay. So by taking up this advantage, please don't taking too much leaves, okay. It will be useful for revision only, okay. You cannot revise the entire concept within that 10 to 15 minutes. Then, hi. Exam pattern. So our favorite student entered into the class. That's why everyone is cheering up. The first question is completely MCQs. Okay. I'm talking about the exam pattern of CFR. So, in first question, all MCQs. MCQs means, tell me, Ray. MCQs means multiple choice questions. Okay. Mean in foundation level, whenever we quoted the MCQs, what was that, sir? What do you mean by MCQs? So they don't know, right? So they're giving such expressions. Please don't give that expression, okay? We already write it down in our CMA inter, right? So there are all are multiple choice questions. So the exam pattern is as CMA inter pattern only with respect to the question. First question is the all MCQs 30 marks. There is 15 MCQs into 2 marks. Okay. If you choose the correct option, there is no need to deduct the marks with respect to the first question, right? So there is high chances of getting full marks in this first question only. So if you get full marks here itself, 30 marks, then remaining aspects, it will be easy to score up to 80 marks also. Okay, so the MCQs are very crucial, and that too we are going to provide the special session on the MCQs. Already we have conducted in the previous attempt people. So don't worry about this. Then so this is so first question is practical aspects, all multiple choice questions. Remaining 2 to 8 questions are completely descriptive. You need to write it down the answers for the each and every question. So how many questions are here? 7. 6 or 7? 7. Okay. So there are total 7 questions. Out of 7 questions, there is 2 choice. So 2 questions, choice. So should write 5 questions. Each question carries 14 marks. And how many marks? 70. Okay. So, but don't try to take the choices from now itself. Okay. But we don't know how many, like how the questions are going to be posed in some chapters. Let's say India's 103 is right. So there are little bit lengthy chapters. If you are trying to take the choice of that chapters, so if they ask a very easy question with respect to that chapter, what you are going to do? You are losing one chance, right? And that too, remaining chapters are there. Where those are very normal chapters. There is no too much complexity. So if you are taking those chapters, if they have asked too much complicated question from those chapters, got it? So don't try to take the choices from now itself. Try to take the choice in exam. Okay, so pick the question, correct question. And most of the times, why they're giving choices. So as a CMAs, okay, as a future CMAs, so what is the important quality? One of the important quality is the judgment, right? You should pick up the correct decision. There are a lot of options. You need to pick up the right thing. So to increase your judgmental capacities also, to test your judgmental capacities, they are giving choices. Okay, not for living few chapters. So okay, so by having pity on you, he's not giving choices. So he's giving choices to test your judgmental skills. So by giving all these 7 questions, so which questions I will try to get more marks and which question I will try to solve it in minimum time. So all these aspects taken into consideration. So be prepared for the each and every chapter. So don't take choice. So 7 questions, right? Most of the times, second question is coming from this first set. Second question coming from this one. India is 16, then 36 and 38. Okay. So most of the question, 7 mark question coming from this set only. So but in last attempt, 2 7 mark questions are coming from these 3 chapters. But this time I'm not expecting 2 7 marks. At least I'm expecting 1 7 marks. But other 7 marks might be coming from India 116, or it also might be also coming from again these chapters only. Okay, so this is the second question pattern actually. So then again third question, fourth question, fifth question, remaining one of the question coming from India's 103 and another question coming from consolidated financial statement. But last question number 8, so completely government accounting in India. 2 questions are coming from theory and 1 question are coming from India's 103 on 4 mark question, and remaining question will come from anywhere from these Indian accounting standards. So this is the paper pattern and this is our classes pattern. Okay, and whenever there is a requirement, I will try to take the extra classes also. So be available. Don't make plans on Sundays and Saturdays. Okay. So please forget there is Sundays in our life up to 6 months. Okay. After that, every day is a Sunday. Yeah, you will work up to 5 o'clock, right? After that, you can go anywhere. If you clear it in first attempt, okay, in both groups, or even though it is a multiple attempts is also okay. But if you clear the both groups in one shot, there is a high chances of jobs in PSUs, public sector units. Okay, so what is the most important aspect of CMA, or what is the aspect which I liked especially with CMA is so their campus interviews. Okay, so CMA's campus interviews, I mean there is a lot of PSUs coming to the CMA's campus interviews, public sector undertakings. If you got job over there, that's it, you can settle in life. Especially boys, you can get lot of gifts. Okay, you can get lot of gifts. We are not supposed to use that word, so treat it as a gift. Okay, and our chairman sir, founder, who is the chairman or founder of BCCA? Huh? Ravi sir, CMA Rav Kumar sir. So he's a dual qualified, like he cleared CA and as well as CMA also, but he chose the job based on the CMA qualification. But he attended for the campus interview. So in that CMA campus interview, he got job in public sector undertaking. So it's a central government related, directly get into the posting. His salary, while he, after that he resigned from that job after a few years. At the time of resigning, his salary is 2 lakhs. So he resigned at early age only. So after 3 years of service, he resigned it. So what is his salary? 2 lakh rupees. Got it. So after that, he started this organization. Normally, he started another organization. After that, he started BCCA in his own village, Mittagodam. So the main campus is BCCA Mittagodam. So he actually, the Ravi sir concepts and the theories are very different, and which is very, socially oriented. He tried to provide the services to the people. Okay, so that's why he started this organization in Mittagodam. So he tried to give the employment opportunities to his own people, and that too few students are, not us. So most of the rural students are afraid of coming to the cities for studying purpose. So especially with respect to the girls. So they are very good at academics. Okay, but their parents, the only aspect is their concern about, sir, we don't want to send my children to that much distance, and that to Hyderabad, Vijayawada. So no, sir, we can't. So that's why we have started this organization in one village. So their atmosphere, everything, so reflects the Gurukulam aspects. So long back ago, okay. So long time, how their Gurukulas are there. So teachers are there only, and students are there only. So that bonding will be there between the students and teachers. So we will try to incorporate those kind of environment. And after that, on the request of the so many students who are doing industrial training here in the cities, so we started our Hyderabad branch here. Okay, because most of the students are here, they are going for the industrial training, so it will be difficult for them to coming over again there. Every day they cannot come to Newsbed, right? They cannot do up and down. So that's why we have started with respect to the CA final and CMA final in Hyderabad, to avoid those practical difficulties which are facing by the students. Okay. So before going into the main chapters, so let's discuss some few practical and basic concepts. What is the purpose of accounting? Our subject name is corporate financial reporting, which mainly deals with the accounting. Okay. So what is the purpose of accounting? Why you are conducting exams for you? So we will conduct weekend exams for you after completion of the respective portions, and after the end of your sessions also there is some grand exams also. There is a test series in BCCA. Okay, and there is a test series with respect to MCQs also. So you can use that facility too. So it will be available on the BCCA app. And apart from that, so what is the purpose of writing all these exams? So we are conducting the exams for you at every weekend. What is the purpose of this exam? Hmm? Loud. Please increase your frequency. Am I unable to hear? Performance. Your name? Huh? Satvika. Clap for her. Okay. He's ready actually. Your name? Ready to clap for. Okay. Actually, that is a good quality, right? So to appreciate the talent, you should have the talent. So clap, clap. Okay. So to know the performance, why you are conducting the exams? To know your performance. Okay. What is the main purpose of accounting? To know the performance of the company. So to know the performance of business. So instead of writing company, write it as a business, because the main purpose of accounting, it will not be useful for only, not only company, right? So it will be used for partnership firm as well as sole proprietary, everything. So what is the common aspect? Business. So if you want to know the performance of your business, so it will serve the purpose. Okay, the accounting serves those purpose. And then one more thing. After conducting of your exams, what we are going to do? We will give the results. At that time, you compare yourselves, right? So last exam I got these marks. This time I got these marks only. Or your name Satvika, right? So Satvika got these marks, but I'm unable to score the marks as like as Satvika. So here are their comparisons. Why you are comparing? So to normally to know the performance, actually comparison is also important. Okay, so let's say, so I got 68 marks. Okay, I got 68 marks. Can I say how? I mean, I'm just asking how I am perform. I got 68 marks in weekend exam. Whether my performance is good or bad. Okay, you are saying okay, above average, 68 marks. But 1 minute. So rest of the class, the paper is very difficult. Rest of the class got only 42 marks. On an average, everyone got only 42 marks, but I got 68 marks. Then tell me how is my performance? Okay. So here, to know the performance, exactly here, first aspect is to know the performance. So one aspect serve, and second aspect to compare with each other. Okay, then only I know the exact performance, how he performed with the compare with the others. Okay, let's coming to COVID situation. This COVID situation, one company earns 500 crore rupees. How much? 500 crores. Normally, this company is earns 1500 crores previous year. Generally, in its previous years, this average sales turnover is 1500 crores. But this year, they earned only 500 crores. Is it performed well? No. When compared with my previous performance, it haven't performed well. But compare with other industry, there are a lot of companies in the similar industry, right? When compared with other, I'm the number one. So remaining all companies earned only 100 crores. You got it? Because of this COVID situation, I have earned less when compared with my previous year. Here, I'm not supposed to do compare with myself. I need to compare with others. Okay, to gauge my performance. So in the similar way, to know the performance of my business and to compare, or write it as for inter and intra comparisons. So these words already you have learned in GST, right? In same inter. Inter means with our company, with other company. Okay. Intra means within our performance. So compare with previous years and the current financial years. So these are the two basic aspects the accounting is solved. In second aspect, so we have taken the example of your exams, right? So tell me one. So I have given paper for you. For boys separate paper, for girls separate paper. Huh? Sorry? It's an example, man. It's not real, okay? Okay, why this partiality here? Because I like you more. Okay. Listen to me, yeah. Okay. So I have given one paper, one set of paper for you, and I have given one set of paper for you. So comparatively, okay, I'm taking normally. So girls are more intelligence in academics, right? So I have given difficult paper for them. Okay. And for you guys, I have given very easy paper. All you have scored well. Okay. all you got average scores for the boys is 70 marks, but with respect to the girls only 60 marks. Okay, boys performance 70, girls 60 marks. Can I compare the boys performance and girls performance? Why? Sorry, base is not same, so I am giving difficult paper for you, I am giving more liberal paper for you guys. So to compare with each other, there is some standardized paper, right? So there is a common paper. Standardized means common, so I use the word here afterwards, standardized. So there should be standardized comparison, mean there is standardized base to compare with each other. So if I given the same paper to all you guys, then can I compare with each and everyone, right? So can I compare with your previous performance? You can compare with the previous performance also. Okay, so here in the same way, for the purpose of accounting also, here what we are going to do, we are compare our performance with other performance. So here for comparing we need something, right? Okay, to know the performance we need to focus on some things. So what was there? To know your performance, what is my exact point? Your marks. How I getting these marks? How I am knowing these marks? By looking at your valuation of your papers, right? So in the same way, to know the performance of the business, what are the aspects we are looking into the company? Profit, usually profit, after that assets. Okay, so to know the performance of the profit or to know your profit levels, there is statement of profit and loss account, and to know your financial position, balance sheet, and third aspect, so notes to accounts also. Next one is cash flow statement. Next thing, changes in, write it as a statement of changes in equity. Okay, all these elements we will call it as a financial statements. Okay, this is called financial statements. So every company should prepare financial statements. There is a specific rule in the Companies Act. Every company should prepare financial statements in accordance with the specific format. Okay, in accordance with specific format. Why we are insisting everyone to prepare in the same format? To compare with each other, there should be a standardized format. To compare your performance, I should give the same paper for you guys, right? So in the same way, to compare the performance of the companies, so Companies Act insisted all the companies to prepare your financial statements in the same form and manner. So for preparation of your exam paper, I need to follow some rules and regulations, right? So from this chapter, this is the weightage, and the first question should be all MCQs, and second question should be from these chapters, and eighth question should be some theory. I should add some theory. So these are the basic principles and aspects for giving your exam paper. Then what are the basic principles or basic principles and norms with respect to the preparation of the financial statements? Where it has been mentioned, it is called accounting standards. What do you call? accounting standards. What do you mean by accounting standards? These are the rules and regulations for the preparation of the financial statements. One more thing, after once your class is over, I will verify all your workbook, all your notebooks. You should write in classroom itself, okay? This is not warning, okay? This is my sincere request. Okay, please, okay, sweet warning, okay. So, please write it down in the notes itself, okay? Whatever I am trying to write it in this one, so please note it down. It will be useful, okay? Do you know what is the second advantage of writing the notes? Not getting sleep. Really, while you are writing the things, you may not get the sleep. Am I right? Name. Your name, please. Huh? Tejaswini. Okay. Hi, Tejaswini. Where are you from? Huh? Hyderabad. Okay, local. Like Chandigarh. So, at CMA inter level, you have accumulated the knowledge and you got the knowledge of accounting standards. Then why again there is called Indian accounting standards? So in our syllabus there is Indian accounting standards. One more one thing I need to specify, accounting standards are different from Indian accounting standards. So both are different. So already there is accounting standards. In accounting standards, what is accounting standards? So the combination of the rules and regulations for the preparation of financial statements. What is the purpose of the financial statements? To know the performance and to compare the performances with each others. Then the fourth point is, what is the need of Ind AS? Already there is accounting standards. Then what is the need for Indian accounting standards? So in shortcut we would like to call it as Ind AS. So wherever it is mentioned as Ind AS only, Indian accounting standards. Indian accounting standards are different from the accounting standards. Accounting standards we have learnt at CMA inter level, but this is the CMA final level. So we are try to or explore the knowledge of Ind AS. The main purpose of Ind AS is, accounting standards are followed by which companies? Whether Indian companies or foreign companies or all the companies in the world. All the companies in the world. Accounting standards are the rules and regulations, right? Who set these rules? For example, normally our classroom purpose, I set one rule. Please write down the notes in classroom itself. Who issued this rule? As a CFR faculty or CFR mentor, I have issued this rule. And one more thing, so maybe due to of lack of your time, you are bringing the some biscuit packets. Okay. So after eating it, you are throwing it in the class. So management issued one rule. Please don't throw it in the classroom itself. Throw it in the dustbin. Who issued this rule? BCCA management. In the same way, who issued accounting standards? ICAI. Okay. There is a board called ICAI. So it issues the accounting standards. Okay, then. Then why again they are asking for the Ind AS? Because these accounting standards are issued by ICAI. ICAI means Institute of Chartered Accountants of India. So this is a special statutory board there in the India. Okay. So it will be applicable for which companies? The companies who are doing their business in India. Okay. Who are doing their business. I am not talking about the incorporation point. So if it is if I talking about the incorporation point, foreign companies are incorporated outside India, right? So I am talking about, so accounting standards are the rules and regulations issued for the purpose of preparation of financial statement by ICAI. Okay, the accounting standards are applicable to the each and every company who are doing business in India. Okay, then your name. Okay, okay, sorry, I forgot. Okay, Srival. I remember that name, but somehow I'm thinking something. Okay, so our Srivali initial Neelam. Okay, so our Srivali start. That's why I read it in Neelam. Okay, Srivali started on business. Which business? Do you have any thought? Do you have any thought of starting any business? Firm. Okay. So audit firm. Doc- Audit firm. Okay. So Srivali started one international firm. Okay. She wanted to do it in. So Srivali is not national. She is international. Okay. So Srivali started one company, international dealing services private limited. Okay. So she wanted to do the business in each and every corner of the world. Okay. So she went to which country? You want to expand your business? Huh? Canada. Okay, good. Actually, good choice. No, no, really. I got a call from my friend who is doing business in Canada. So he has a restaurant. So he asked me to allocate any article assistant. If you have any article assistant, allocate me for every day 2 hours. So there is some accounting work. For 2 hours, he's ready to pay 15,000 per month. Just that article student needs to invest only 2 hours. Okay. So there is a high chance of earning in Canada. And how do you know it? Yeah, it's great. So she wanted to start the business in Canada. So if he started business in Canada, she need funds. Okay. So after went to Canada, so as already told you that I have a friend in Canada, right? So she only asked me, sir, do you have any network or connections in the Canada? Then I said, my friend is there. He's doing the business. So he has more money. So we will approach him and we will try to convince him to invest in our international dealing services private limited by Srivali. Okay. So what he is going to ask? So already there is a business in India. Okay, he's in now Canada, right? What he is going to ask about our performance of the business? How you are conducting the business and what is your business performance in India? What we are going to do? We will submit our financial statements. His name is Nikhil. Okay. So we will submitted all the our financial statements to Nikhil. Financial statements prepared as per accounting standards. Nikhil, he is able to understand these financial statements? No, because he is a Canada citizen, so he is unable to understand our financial statement because the Canada rules and regulations are different. Okay, here what they are missing, so they cannot appreciate whether you are good or bad. They don't know. Okay, they are unable to understand our financial statements. To so to encourage, so here what Shivali do? she need to prepare the financial statements again, right? In the manner which is understandable by the Nikhil. So to get the investors. So this problem is faced by so many Indian companies. Did you hear about the LPG concept? Liquid, not liquid petroleum gas. What is LPG? Liquidation, privatization, globalization. Okay. LPG means liquid petroleum gas. We are not science students, so we are the art students. So try to in contact with the subject. So whatever we are reading, try to link it with our subject. Okay. So LPG means liberalization, globalization, privatization, not liquidation. Okay. So because of these concepts, so many, India has opened the gate for the foreign investments. Foreign investors are try to invest in the Indian companies, but they are unable to appreciate the performance of the companies. Which company is the better performing the company? So to avoid all these concepts, they introduced the concept INDAS, Indian Accounting Standards. So generally, rest of the world following IFRS. So most of the countries following IFRS, International Financial Reporting System. Okay. So of course there is gap also, not that gap in between you and your girlfriend. This is GAAP, generally accepted accounting principles. So this word, as if all you know that. So these GAAP principles are used in only US. So in most of the US companies prepare their financial statements based on the GAAP provisions. But almost in 180 countries, all their companies have used the IFRS, International Financial Reporting System. So if you take the entire IFRS into our system, is it possible? Our constitution is there. How our constitution is drafted? So we are taking we will not directly incorporate the entire each and every law of British law. Okay, we have taken few laws and we will make changes according to our environment. Okay. So in the same way, we are not taking the entire principles of IFRS. Just we have taken the most of the basic principles and we have made some changes. Okay. And we have introduced the Ind AS. But what is the base for Ind AS? IFRS. Okay. So Ind AS means converged IFRS. Okay. We have not, it's not copy paste. We are not copying it. We have pasted in Ind AS by giving new name. So we have taken most of the rules and regulations from the IFRS and we have made some changes in the according to our Indian economy systems. Okay. What is the purpose of Ind AS now? So now the companies need to follow. So we are introducing the rules. Every company should comply with the Indian accounting standards while preparation of their financial statements. So after, Nikhil is not able to understand the financial statements, right? So what Srivali came back to India and then again do in business, but in her thought process, so I need to start the business in Canada. Still there is there. So by taking into all the opinions and considerations of the great professionals like Srivali, so Indian government has introduced the Indian accounting and Indian accounting standards. So by using this Ind AS, again Srivali prepared financial statements. Okay. Now these financial statements, okay, should be appreciated by almost 180 countries. Okay. Just she came back from Canada, right? Now she entered into almost 40 countries. So with these financial statements, she entered into every country and she presented her financial statements. So which is in convergence with IFRS, right? So which is easily understandable and appreciable by the rest of the world investors. Then all the investors are investing into our International Dealing Services Private Limited. Okay. So to encourage the entrepreneurs or to encourage the business or to encourage the foreign investors, So our accounting system or the way of presentation of financial statements is changed to compare with the global financial reporting system. Okay, to compare and as well as to compete with the global financial reporting system, we have introduced Indian accounting standards. Okay, how they introduce Indian accounting standards? It's not a like our banning of 2000 notes. One day they have, they conducted a conference. From today onwards, you should follow the Indian accounting standards. From today onwards, you are not supposed to follow the accounting standards. That is not the case, right? So then, how they are introduced? So I will try to incorporate one rule in our classroom. So from tomorrow onwards, everyone should wear formals. So that is the rule I am going to introduce. Is it possible? Or otherwise I am going to introduce one uniform for all. Okay, there is no specific uniform, right, with respect to our these professional courses. So we will try to introduce one uniform to all. What can I introduce from tomorrow onwards? No, right? So you need to go to the shop and you need to purchase the clothes and you need to stitch it. Okay, there is lot of process. For this lot of process, for converting from civil code to uniform code, you need some time. Okay, and that too, with respect to the girls, it is too much difficult. Okay, so that's why what I did first phase for the boys. So I will give the from Monday onwards. Okay, sorry, today is Monday, right? From next Monday onwards, so every boy should be here in uniform code only. So that is the rule. So after 2 weeks of time, there is a rule for you too. Okay, so I introduced this uniform code in phase manner, not at a point of time. Okay, so for them it is been easy to follow the uniform code, depends on their personal reasons. Okay, but for you it will be difficult. Okay, so that's why I have given more time for you. So in the same way, Indian accounting standards also introduced in the phased manner. So phase 1, 1/4/2016. Okay. So whenever I have introduced the new rule, to which companies I need to applicable it? Whether listed companies or unlisted companies. So most of the rules and regulations are applicable for, tell me, listed companies. So in our example, you are the listed companies and you are the private limited companies. So to comply with the rules, it will be easy for the listed companies because they have the perfect procedural aspects. Okay, so phase 1, 1/4/2016. So all these discussions, these are the important discussion with exam point of view. MCQ. So only one thing you need to remember, one date, 1/4/2016. So remaining it will come automatically. Next, 1/4/2017. Third one, 1/4/2018. The fourth one, 1/4/2019. Okay. So on 1/4/2016, the Indian accounting standards are introduced in the economy system of the India. So Indian accounting standards are applicable to all the listed companies. Okay, and unlisted companies. So whenever for applying the rules and regulations, one criteria will be there. What is the criteria here? Loudly. So most of the times, and there is a criteria of turnover or profit or sales, but here the criteria is net worth. What is the criteria here? Net worth. Net worth of How much? Fix it. 100. Greater than or equal to 500 crores. So the Indian accounting standards are applicable to the listed companies and as well as unlisted companies whose net worth is greater than or equal to 500 crores. Okay. So for those companies, so they need to prepare the financial statements according to the Indian accounting standards. The second phase is again listed companies. No criteria. So all listed companies. This is phase 2. Okay. In phase 1, it will be applicable to all listed companies as well as unlisted companies. The only criteria is net worth criteria greater than or equal to 500 crores. Coming to phase 2, in phase 2, Ind AS is applicable to all listed entities irrespective of these net worth. So tell me now whether Ind AS is applicable to all the listed entities. Yes, Ind AS is applicable to all the listed entities from 1/4/2017. Then what about unlisted entities? So for unlisted companies, they are not trying to apply for the entire unlisted companies. Again, they fixed the net worth criteria. It is greater than or equal to 250 crores but less than 500 crores. What about the unlisted companies greater than 500 crores? Already it is applicable from 2016. Then no need to again discuss about the applicability of Ind AS with respect to the unlisted companies whose net worth is greater than or equal to 500 crores. Again, then what about 1/4/2018? He's giving the expression. Okay, this is called phase 3. So write down one point from phase 1 and phase 2. There is one exception. They are talking about the companies, right? But except NBFC, banks, and insurance companies. Okay. So the Ind AS is applicable to all the listed companies or unlisted companies. They are mentioning about the companies only, but these are the rule, general rule. I will try to incorporate the things in the way of general rule and exception to the rule. Okay. So what is the general rule? On 1/4/2016, Ind AS is applicable to all the listed companies or unlisted companies whose net worth is greater than or equal to 500 crores except NBFCs, banks, and insurance companies. There is no need to check for the net worth of these three companies because tightly Ind AS is not applicable to NBFC, banks, and insurance companies from 1/4/2016. Okay. Then when it is applicable? Again, so our important discussion is NBFC. But with respect to the NBFC, Indian accounting standards are applicable from 2018, 1/4/2018. Is it applicable to all NBFCs? No. Again, the net worth criteria is 500 crores. On 1/4/2019, it's a phase 4. So again, NBFC greater than or equal to 250 crores but less than 500 crores. Phase 3 and phase 4 is with respect to which companies? Please tell me which companies? NBFCs. So, in the entire our discussion, the only MCQ purpose, for the MCQ purpose, only two things: the dates and net worth criteria. That too, not 500. Only the amount you should remember is 250 crores. Currently, what is the limit? If the company's net worth is greater than or equal to 250 crores, then that company should comply with Indian accounting standards. That is the rule. For the listed companies, there is no need to check for the net worth criteria. Current situation this is. And for the NBFCs also, what is the net worth criteria? Greater than or equal to 250 crores. Okay. And again, what about dates? So the MCQ is, the Indian accounting standards are applicable from which date? 16, 16, 17, 18, none of the above. 16, okay. Then, Indian accounting standards applicable for NBFCs from which date? Entama? Sorry. 1/4/2018. Okay. So with respect to the NBFCs, 1/4/2018, and with respect to the normal companies, 1/4/2016. Okay. So this is the phase 1 and phase 2. From this entire discussion, I am trying to remember only two concepts, two aspects. One thing, 1/4/2016. Second thing, 250 crores. That's all. Sir, remaining no need to remember. There is no point of remembering everything. So the starting date is 16. 16, 17, 18, 19. 16, 17 is for other companies and 18, 19 is for the NBFC. And in the first phase, the limit is 500 crores. In the second phase, the limit is 250 crores. Okay. So that's why in our concept book, I just mentioned this 250 crores or more, that's all. Okay. But the dates are also equally important. Mention those dates in our concept book also. 1/4/16. So write it as 1/4/16 and 17. Okay. For companies other than NBFC. So, as per our discussion, just restrict to NBFC, of course. Exact definition is except NBFC, banking, insurance companies, but our main objective is NBFC because there is a separate dates for NBFC. For 16, 17, for the companies other than NBFC, and for 17, 18, sorry, 18, 19. Okay. For 1/4, 18 and 19 for NBFC. These two aspects you should remember. And that to 250 crores. Okay. And one more thing. If they wanted to ask too much difficulty on this point, so how they are going to ask? Here, listed NBFCs are there. Which NBFCs? Listed NBFCs. This is a special point. So for listed NBFCs, yeah, I need to check net worth criteria. I need to check net worth criteria. No need to check net worth criteria. So all listed NBFCs, but unlisted NBFCs whose net worth is greater than 500 crores, it should be applicable. Again here, unlisted NBFC whose net worth is greater than or equal to 250 crores or less than 500 crores. It is stage 2. So when I compare with this normal companies, for applicability of Ind AS, I need to check listed companies net worth criteria. Do you got my point? With respect to the NBFC, there is no need to check net worth criteria for the listed companies. Okay. But with respect to other companies other than NBFC, for the listed companies also, in the first phase, I need to check net worth criteria. So this is the special point. Okay. So are you able to appreciate this difference? Then. So we are talking about Indian accounting standards, right? These are the Indian accounting standards notified by the MCA. So almost there are 42 notified Ind AS. Out of this, 3 were omitted for our goodness. No need to read it again. So not only our CMA final curriculum, in practical aspects also, you no need to, there is no point of using it. Then coming to, these are the Indian accounting standards. So please identify the Indian accounting standards which are in our syllabus. Already I revised it 2 times, right? Then you should be able to. Share based payments. Super. Business combinations. Next. Yeah. Financial instruments. Operating segments. Again, financial instruments. So, one more thing. 1 minute. So, here 107 is deal with the disclosure requirements of the financial statements. But here, measurement principles. So, there is one separate MCQ. Okay, Ind AS 107 is deals with the disclosure requirements of the financial instruments, and Ind AS 109 is discuss with the or deals with the measurement principles of financial instruments. Then again, Ind AS 110 consolidated financial statements. Next one. 1 minute. Ind AS 111 joint arrangements. This is also in our syllabus, but not too much. There is one some definition is there only with respect to the joint control. So only just introduction, and you should know the name of the standard. That's all. Then Ind AS 112 disclosure of interest in other entities. So there are almost 4 or 5 lines with respect to the standard. Those lines should be remembered. That's all. Okay. So technically speaking, there is nothing with respect to the Ind AS 112, but there is some concept. So that's why I have included 112 also. So 1110 is the consolidated financial statements, 111 is joint arrangements, 112 is the disclosure of interest in other entities. Then what about 113? Fair value measurement is also in our syllabus. Okay, then revenue from contracts with customers. So actually, while I have introduced initially, they used the Ind AS 11 and Ind AS 18 discussed about the revenue from the contracts. So all these aspects are discussed in Ind AS 11 and Ind AS 18. After that, Ind AS 11 and 18 has been removed, and they have introduced one concept, Ind AS 115. So the currently the revenue from contracts with the customers is dealt by Ind AS 115. Then next thing, leases. Presentation of financial statements. No, there is no specific chapter in CMA final curriculum. So there is a concentration of on this chapter in CA final curriculum. So there is no need to include it. Then Ind AS 2, Ind AS 7, 8. Ind AS is 8 is also there in our syllabus. Then Ind AS 12. Then property, plant and equipment. This is an important chapter also. Next one. Employee benefits. Sorry. Okay. Income taxes. Oh. So income tax is also there in our syllabus. Then what about employee benefits? No. Then government grants. Then Ind AS 21. Yes. So the effect of changes in foreign exchange rates. Next one, borrowing cost. The next thing, separate financial statements. It is in our syllabus. Then Ind AS 28 is also in our syllabus. Investment in associates and joint ventures. So it is there in business combinations and as well as the consolidated financial statements also. Then next here presentation, Ind AS 32, financial instruments presentation. So our MCQ is going to be asked in the same way. So there give in which standard is dealt by the the presentation of the financial instruments. In days 107, 109, in days 32, none of the above or all of the above. So 32, 107, 109, all of the above. What is the answer? In days 32 deals with the financial instruments presentation purpose. How financial instruments are presented in the financial statements. That presentation requirements are discussed in Ind AS 32. Then Ind AS 107 is discussed about the disclosure requirements. Ind AS 109 is the principle. So in these three concepts, this is our focus area. So all the practical aspects are going to be discussed in this financial instruments Ind AS 109. Then impairment of assets. Next thing, intangible assets. So that's all. So you are able to identify the accounting standards, Indian accounting standards, so which are applicable for our exam purpose. Okay, so these are the Ind AS which are there in our syllabus. Okay. Then for the preparation of the financial statements, we should follow Schedule 3. Schedule 3 format. Okay. So for accounting, so Schedule 3 is divided into 3 parts. Division 1, Division 2 and Division 3. So Division 1 is for AS complying financial statements. So please tell me the parts of the financial statements. So, no, it's not like that. In the balance sheet, what is the format? Like how many elements are there? Mainly classified into 3 types: assets, equity and liabilities. So generally assets is on one side, equity and liabilities is another side. Okay, in assets, non-current assets and current assets. In liabilities, non-current liabilities, current liabilities. So coming to AS complying financial statements, tell me the basic format. The AS complying financial statements start with liabilities or assets. So it starts with equity and liabilities, then assets. But coming to Ind AS complying financial statements, it starts with assets. Okay, then equity and liabilities. And more or less there is a similar format, but here the few aspects are discussed in brief than the AS. So now for our discussion, the relevant schedule is Schedule 3 Division 2. Okay, and Division 3 is for NBFC. Okay, so in our earlier discussion, so we have applied the Ind AS in a phased manner, right? So it will be applicable to normal companies, listed companies and NBFCs, that and all we have discussed. But in that we have classified the entire companies into normal companies and the companies other, NBFCs and companies other than NBFCs. So NBFCs, we should comply with the Division 3 schedule, and remaining companies I should comply with Division 2. But the companies who are still following the AS accounting standards, those need to prepare this financial statement as per Division 1. So simply this is for small companies, this is for large companies, this is for NBFC. Okay. So the following is the format for Division 2 Ind AS complying financial statements. What is the relevant discussion? What is the relevant schedule or relevant division for our discussion? Division 2, because I need to prepare the financial statements by complying with the Ind AS. So this is the balance sheet format as per the Ind AS. So it starts with assets, and again equity and liabilities is the second part. So the first part is assets and the second part is equity and liabilities. Remaining everything same. That to current reporting period and previous reporting period. The previously also current year, previous year, in the same way. So in in assets, there is called non-current assets and current assets. And equity and liabilities, equity, non-current liabilities and current liabilities. Okay. We will elaborate our discussion tomorrow. So we will discuss each and every concept, and I will try to derive the how these are basics of how they are preparing the financial statements, and we will try to link up we will try to fill this balance sheet. How we are trying to fill this balance sheet? So here there is called non-current assets, there is property, plant and equipment. So I should fill in the balance sheet property, plant and equipment. How it came into this balance sheet? Sorry, not notes account. From trial balance it came into here. In trial balance, how it came? Ledger. To ledger? Journal. So for passing of journal entries, I should use the word property, plant and equipment. For some transaction, okay, so I should use the word property, plant and equipment. All those basic concepts and the basic derivations we will discuss in tomorrow class. Okay, take break and enjoy your day. Okay. Good morning, everyone. So, what's the today plans? Is there any special plans? No. Only coming to the college and studying like good students. So, sorry, it's not audible. Okay, wait, I will. So I'm just starting, right? So I will use my full frequency, okay? So we have discussed our yesterday we have a discussion on the balance sheet. So for complying of India's financial statements, we are following the Schedule 3 Division 2 format. Schedule 3 Division 3. Division 1 is for AS complying financial statements. Okay. And Division 3 is for NBFC. So in our syllabus, so only Division 2 is there. So most of the problems are solved based on the Division 2 format. So of course there is NBFC, but they will not ask anything regarding with the preparation of the balance sheet with respect to the NBFC companies. Okay. So only our discussion is restricted to Division 2 financial statements. So let's see the format of the Division 2 financial statements. So this is the balance sheet. So so India's complying financial statements starts with assets. Okay, starts with assets. Generally, AS complying financial statements start with equity and liabilities. Okay, India has been started in India. India is applicable from which date? India is applicable to the companies from which date? What is the applicability date? 1/4/2016. Okay, then with respect to the NBFCs, what is the applicability date? Okay, 16 and 18. So 17 is the phase 2. Okay, and 19 is the phase 4. Okay, phase 1, 2, 3 and 4. Phase 1 and phase 2 with respect to the companies other than the NBFCs and banks and insurance companies, and phase 3 and phase 4 with respect to the NBFC companies applicabilities. What is the net worth criteria, net worth or turnover or capital? Net worth. What is the net worth criteria? Present net worth criteria for the applicability of the Ind AS. More than 50 crores or 250 crores? 250 crores. Okay, initially the limit is 500 crores. Whether Ind AS is applicable to all listed companies or we need to check any net worth criteria? All listed companies. Okay. So this is what we have discussed yesterday. Then, so we need to look at the balance sheet of the Ind AS complying financial statements. So assets, property, plant and equipment, capital work in progress, investment property, goodwill, other intangible assets, and intangible assets under development, biological assets other than bearer plants. Biological assets other than bearer plants. Then bearer plants is covered under which Ind AS? Property, plant and equipment. Okay. So property, plant and equipment covers the bearer plants. So here there are lot of assets. Our generally our curriculum is like we need to fill this balance sheet. How to fill this balance sheet? So I need the value, okay, the closing ledger balance of the property, plant and equipment. Okay. What do I want? I need the closing ledger balance of so property, plant and equipment, right? So let's say the balance is 5 lakh rupees. Okay. So what I going to do? I need to prepare the financial statements. How I need to prepare the financial statements? Already they have given the format. So in that format, assets, under non-current assets, the first line item is property, plant and equipment. It means there is some ledger balance with the name of property, plant and equipment. In this I need to fill this 5 lakh rupees. Got it? How this 5 lakh rupees have been reflected here? From the trial balance. Okay. Then what is the source for this trial balance? Ledgers. For the ledgers? Journals. So in journals how many aspects are there? One debit aspect, one credit aspect. So here what is the debit point? What is the debit ledger account? Okay. What ledger account I am going to give the debit aspect and what is the credit aspects? Then what is the debit amount and what is the credit amount? Got it? So I am observing two things. First thing is the what type of ledger account and what is the name of the ledger account, and after that amount. Okay. So what type of ledger I have been using here? Property, plant and equipment. Separately there is a ledger called property, plant and equipment. So PPE. For example, if you withdraw some profits out of the business, so how you are passing the journal entry? You withdraw some profits out of the profits. What is the journal entry for it? Profit and loss account. There we should use the word drawings, right? Drawings account debit to cash account, because the cash is going out of the business. Okay, so drawings account debit to cash account. Here why you have been used the drawings? Because drawings is the word I need to use for describe the taking the profits or taking the cash out of the business, right? This is the definition of the drawings. Then what is the definition for use the ledger account? Property, plant and equipment. Okay, for which type of transactions I could use this property, plant and equipment definitions. Got it? Then after that, what is the debit amount? How we need to find out the debit aspect, and how we need to find, obviously if you find out the any amount, and obviously the credit amount is the same. Okay, and how we are going to find out the amount? First thing is the definition, second thing is the amount. Got it? Then, so our discussion is going to be like this. So, for each and every asset or each and every liability, they are giving some specific Ind AS. For example, for property, plant and equipment, for noting down this amount, I need to follow so many procedures. I need to pass some journal entries. For the passing of journal entries, I need to follow some rules, right? With respect to property, plant and equipment, for the adjustments or the calculations, I need to follow Ind AS 16. Okay. Here they are giving specific Ind AS for filling each line item in the balance sheet. So how I am going to fill this balance sheet? By complying with the specific Ind AS with respect to the specific line item. Got it? Then capital work in progress is there. Investment property, there is separate Ind AS is there for investment property, but that is not in our syllabus. And goodwill. Goodwill is coming under Ind AS 103 and as well as impairment of assets, Ind AS 36. Okay, the goodwill is covered in these two aspects. And other intangible assets under development is covered under Ind AS 38, intangible assets. Okay. So in the same way, there are specific standards to describe the accounting treatment or to fill the amounts with respect to the each line item. Okay. There are financial assets and deferred tax assets. Ind AS 12, income taxes. Okay. So inventories, financial assets, again these are the current assets. Apart from that, the equity and liabilities, equity share capital and other equity, and non-current liabilities, financial liabilities and current liabilities, total equity and liabilities. This is the balance sheet format. Then after this, there is a statement of profit and loss account also, but in our portion or in our curriculum, there is no questions or there is no concept with regarding to the calculation of statement of profit and loss account. Then there is a concept called statement of changes in equity. You can call it as SOKI. Statement of changes in equity. Okay. So this statement shows the what is our equity balance at the beginning of the year, what are the changes made to the equity during the period, and what is the closing balance. All these aspects are we are going to show it under statement of changes in equity. Okay, all types of reserves and surplus are going to be shown here. And as a part of reserves presented under equity instruments through other comprehensive income which is realized in cash shall be disclosed separately. Here they have used the word other comprehensive income. OCI, other comprehensive income. So actually this is the new concept. This concept is not there in our AS, accounting standards. So what we have in accounting standards, there is statement of profit and loss account. What we are going to do with the statement of profit and loss account? All the expenses or all the incomes or all the losses are routed through the statement of profit and loss account, right? So whatever the expenses, whatever the incomes, whenever we have looked into the profit and loss account, we can get the information with respect to those aspects. Then what is the purpose of other comprehensive income? This also serves the purpose of, okay, this also serves the purpose as like as P&L account. Okay, but not the P&L account. It's a separate one. It's called other comprehensive income. Generally, there is sometimes there is unrealized gains and losses. There is some unrealized gains. Okay, there is some unrealized losses also, but which are we cannot route it through the P&L account. Okay, got it? So there is some unrealized gains and unrealized losses. So most of them, not all, okay, most of the unrealized gains and unrealized losses are routed through other comprehensive income. So to differentiate between realized gains and realized losses and unrealized gains and unrealized losses, in under the concept of Indian accounting standards, they have created the separate statement called other comprehensive income, which is used to describe the unrealized gains and unrealized losses. But one more thing, but it doesn't mean that the other comprehensive income contains only unrealized gains or unrealized losses. Few of the other, few of the realized gains and losses also routed through other comprehensive income. Those the same point have been given in this para. So any part of the reserves presented under equity instruments routed through other comprehensive income which is realized in the cash shall be disclosed separately. So what is giving? Generally in other comprehensive income, okay, the reserves which are not realized in cash should be presented. But here they are asking specifically if any reserves which are realized in cash but routed through the other comprehensive income should be mentioned separately. Why? Because general rule is unrealized cash reserves are routed through the other comprehensive income. So if any realized cash reserves are routed through other comprehensive income, it should be highlighted. Okay, so there are 4-5 lines are there. In these 4-5 lines, one different line is there. Got it? One different point is there. These 3 points are generally you can able to remember, but the 4th line is completely, it's a different. Okay, so then what you are going to do? You need to highlight it, right? So in the same way, here in other comprehensive income, what is the general rule? So all unrealized reserves are routed through the other comprehensive income, but any realized reserves are routed through the other comprehensive income, we should disclose it separately. Okay, so what is other comprehensive income? It's a kind of the statement, okay, which is used to describe the unrealized reserves. Okay, so give me the example for the unrealized reserve. Revaluation reserve. One asset is there. Whenever I have sold this asset, then I can got the amount, cash amount. For example, I bought one asset for 100 crores. How much? 100 crores on 1/4/2021. I am going to use this asset in my business for the production of the goods or providing of services. Then 1/4/2022, the market value of this asset is 150 crores. Okay. So what is the market value? 150 crores. Okay. So market value is 150 crores. When I got this 150 crores? When will I get this 150 crores? Whenever I sell this asset, then only I can get this 150 crores. But here I am not selling it. Here I am not selling it but I am following the revaluation model generally. So I will tell you what is the revaluation model that and all, but just remember it. I am following the revaluation model. So if I follow the revaluation model, I need to show my asset at the market value. Okay, so not exactly market value, generally fair value. In this case, I assumed it fair value is the market value. So what is the revaluation amount? Extra revaluation amount, generally it is 100 crores. Now it becomes 150 crores. Extra 50 crores is called revaluation reserve. Revaluation reserve. So what is the journal entry? So I need to increase the value of the property, right? So in accounting, okay, in our accounting purpose, so whenever I need to increase or whenever I need to decrease the amounts, how I am going to do? I cannot do just like the calculation. Sir, here 100 crores, how I need to increase the 50 crores means 100 plus 50. You cannot say that. Or, sir, you need to increase 50 crores, right? I will do one thing. Here 100 crores, right? 100. You want 150 crores, right? Plus 50 equal to 150. You are not supposed to do that. How I need to increase? By passing the journal entries. Whenever I need to make changes to the financial statements amount, I need to make it through the passing of journal entries. So now what is my question? I wanted to increase the property, I wanted to increase my asset value by 50 crores, right? So for increasing of the asset, I need to debit the asset account, right? So asset account debit. So already my asset balance is 100 crores. I need to increase by 50 crores. Then asset becomes 150 crores to revaluation reserve. Okay. What our concept is generally, this is unrealized reserves, right? Am I getting 150 crores now? Okay. If I getting 150 crores now, already 100 crores is my cost. Then I am getting extra 50 crores is my profit. But here I am not getting 50 crores. This is not realized. Whenever I sold it, I realized it. Then why you are showing it? You are not selling it, right? Then why you are showing it in our balance sheet or in our financial statements? Why you are preparing the financial statements? Of course, current position, to know our why you are passing the journal entries. I need to pass the journal entries. What is the triggering point for passing the journal entry? Transaction, right? Whenever there is a transaction, I need to pass the journal entry for the respective transaction. That's it, right? So here, so the transaction is, what is the transaction? It's an act. No, I'm not talking about example. I'm just asking generally, what is the transaction? It's an activity, right? It's an activity with respect to the changes in the business transaction. Business. Okay, business operations. So transaction is an activities, okay, with respect to the changes in the business operation. So whatever change reflected in the business operations, that should be reflected through your books of accounts, right? Got it? So what happened? So 100 crores asset becomes the 150 crores. So the objective of the financial statements is it reflect the true and fair view. Means true and fair view means whatever happening in the business, it should be reflected through your financial statements, right? So here I purchased for 100 crores and it becomes the 150 crores. This change has to be made in the financial statement. So I wanted to present it to my stakeholders. So how I need to present? By passing the journal entry. Whenever anyone comes and whenever they look into the books of accounts, they should appreciate the fact that 100 crores asset becomes 150 crores. So to present this fact, I need to pass the journal entry. I am just explaining the basics only. We are not yet started, okay? Just I am trying to inculcate the thought process or the logic behind the passing of the journal entries. Okay. See here, asset equal to revaluation reserve. So in here, I want to reflect this fact. So I have passed the journal entry 50 crores into 50 crores. But what happened? The rule is, what is the purpose of other comprehensive income? So revaluation reserve is a unrealized reserve. So I want to use it here. So normally before, so please take it off this other comprehensive income. So before that, what was there? Profit and loss account. So all the reserves are routed through profit and loss account, or whatever the aspects is happening to routed through the profit and loss account, or directly we will transfer as a capital reserve sometimes. Okay, here revaluation reserve is there, right? So I am not supposed to use the word revaluation reserve. I can use the other comprehensive income in India's complying financial statements. Got it? What is the word I am going to use it? Other comprehensive income. So asset account debit to other comprehensive. Sir, am I need to use the other comprehensive for each and every transaction with respect to the unrealized ones? No. But most of the unrealized transactions are routed through the other comprehensive income, because if I routed through the profit and loss account, what is the impression what is the impression I am trying to give to the stakeholders? They are thinking that all these are realized ones. So profit is 5 lakhs. What I am thinking, oh, profit 5 lakhs. But whenever I look into the cash flow statement or in the cash in hand balance, there will not be balance, or there will not be tally. Why? Because all these balances are not yet realized. So that's why they introduced the concept called other comprehensive income, which is most of the times used for the reflecting the unrealized gains and unrealized losses. Okay. Are you habituated to, okay, now with this other comprehensive income? So other comprehensive income is the new concept. So try to take it. Okay. Then one more thing. Venkatesh. Cool. So Venkatesh is there. Sai, okay. So every class one Sai every time. Sai Krishna, Sai, very famous in Instagram memes also. So Sai is there. So they are doing the business. Which business? Huh? Cotton business. No. Okay. They are doing the marble business. Okay. They are purchasing the marbles from the Rajasthan and they are selling in the Andhra Telangana states. That is their business. So our Venkatesh has own building. Okay. Our Venkatesh has own building in Hyderabad. So he is doing the business through his own building. Generally, the rent of the building, okay, he is doing the business in 4-floor building. Okay, the rent of the building in Hyderabad, let's say 4 lakhs. How much? 4 lakhs. Rent equal to 4 lakh rupees. The profit earned by the Venkatesh is 10 lakh rupees. How much? 10 lakh rupees. Our Sai earned 8 lakh rupees. So this is the profit with respect to the Venkatesh, and this is the profit with respect to the business of Sai. Who is doing the business very well compared with each other by looking at the profit? Sai, director Sai. So generally, okay, I understand your logic. Okay, I am trying to give this logic. So whenever I am giving the profit figures, so if you look at the profit figures, what is the assumption it's giving to the normal stakeholders? Of course, you are going to be qualified CMA, right? So that's why you identified the fact so easily. So I am talking about the layman perspective. Whenever they look at the profit figures, they are feeling that Venkatesh is doing the business effectively because he is earning the profit of 10 lakh rupees. But coming to the real facts, here Venkatesh is doing his business in own building. So here rent is 0. Rent is 0. Here rent is 4 lakh rupees. So before deduction of this rent, what is the profit? I need the profit before deduction of the rent. So profit before rent, still it is 10 lakh rupees. Then profit before rent equal to 12 lakh rupees. So from the perspective of the business, who is doing the business effectively? From the business, he earned the profit of 12 lakh rupees. Okay. From the business, he earned only 10 lakh rupees. Okay. So what is Venkatesh is also losing 4 lakh rupees of opportunity cost, right? If he is not doing any business, what he is going to do? He can give this billing for the rent. Then he can earn the 4 lakh rupees. But this 4 lakh is, am I presenting it in the financial statements? So there is some loophole with respect to this preparation of the financial statements with the previous accounting standards. Got it? So am I reflecting this rent amount in this one? No, right? So logic is okay. So notional rent is also taken into consideration to assess, okay, exact the performance, to assess the performance of the business. So our Ind AS, okay, our Indian accounting standards are designed in such a way, okay, to reflect the real performance of the business. To reflect the real performance of the business. Here I am just taking the rent, but normally why I am quoting this example is, let's take the example of interest. So interest, same thing. Venkatesh is doing the business by taking the funds from his uncle. So here his rate of percentage is only 2%. What is the interest rate? For our Sai, it is 24%. Okay. Got it. What is the interest rate? 2%. Here 24%. But whenever I reflecting the financial statement, what is I am going to do? What is the interest amount here? Interest amount equal to, let's say they have taken 10 lakh rupees for the initial capital. 10 lakh into 2%. What is the amount? Sorry? 2000. 20,000. Here 10 lakh into 24%. Okay, 2,40,000. So whenever I am showing it to the financial statement, what I am going to do? Here I am showing the 20,000 rupees. Here I am showing it as a 2,40,000 rupees. Here what I am missing? Here notional interest is also there, right? Notional interest. Actually, why I am taking 2% is, instead of 2%, I can take 0. So I am using my own funds. Then what is the interest amount? 0. But instead of taking 0, I am taking at the lower rate. Okay. So this is the 2% and this is the 24%. So one of the most important framing in Ind AS is how they are framed it, like they are taking into notional interest. They need to take into the notional interest into consideration while preparing financial statements, which is going to be reflected in financial instruments Ind AS 109. Okay. At that time, please don't ask me, sir, why are they taking the notional interest? Why they are introduced different mechanism? So don't do that. So generally, by taking of this logic, they are preparing the rules and regulations based on this logic, our notional rent and notional interest. Okay. Then one more thing. One more basic aspect. Asset is there. What is the definition of the asset? What is the definition of the asset? It's a resources controlled by an entity, okay, embodying the economic benefits which will flow to the entity, and cost should be measured reliably. Okay. So it's an asset so what is the asset? Asset means it's a resources. Okay, and that resources is controlled by the organization, which is used to getting inflows or getting benefits in the form of economic benefits flow to the entity, and cost should be measured reliably for getting of this asset. Okay. Without knowing the cost, I cannot record it, right? I don't know what is the expenditure I am going to spend for acquiring this asset. I cannot record it, right? Why? Because for the passing of journal entry, I need two things. One thing is the name. What is the debit aspect name and debit amounts? So without knowing amount, can I pass the journal entry? No, right? So that's why cost should be measured reliably. And one more thing, there are two viewpoints with respect to the asset. One thing, for the recording of the asset, what is the amount? At how much amount I should record the asset? One aspect is cash outflows. Cash outflows. Second aspect is cash inflows. Okay. Normally, we have learned only the concept of cash outflows generally. So, what is the at what amount I should record the asset in my books? Venkatesh, what is the cost of that book? 150 rupees. So, he spent 150 rupees to purchase that book. So this is an asset. Let's say this book is an asset in the books of Venkatesh. So how he is recording this book? Book account debit to cash account. What is the amount? What is the what is the amount? 150 rupees. How he calculated that amount? Because this is the cash outflow. 150 rupees have incurred, okay, to get that book. So here, what is the amount? 150 rupees. On which aspect I have recorded this asset in my books? On the aspect of the cash outflows. Okay. Cash outflows may be present and future. Okay. Which cash flows? Present cash outflows and future cash outflows. So he paid 100 rupees today. Okay. And after 2 days he paid 50 rupees. So I need to consider the today cash flows and future cash flows also for the calculation of the cost of the asset. This is the viewpoint of the cash outflows. But not all the time we need to calculate the amount of the asset in terms of cash outflows. Sometimes I need to consider cash inflows. Sir, how? Give me the example. Sale of assets, then sale of asset. Okay, you are saying sale of assets, that's okay. I need the asset. Sale of assets in an activity, right? You are getting the income. I am talking about, I understand your point, but think further. You are coming nearby, so think further. So the cash outflows. So what is the example? Example, I bought one plant or machinery or something building. So all these kinds are examples for the assets, which are how these assets values are calculated by using the cash outflows. Then what is the example for assets which are which are calculated by using the cash inflows? The value of the asset is recorded, okay, by calculating how much cash outflows are incurred, okay, for acquiring that asset. This is one point of view. Here I need the cash inflows. Asset is recorded at a value, okay, at how much cash inflows are going to be received in the future. Tell me some few line items from the balance sheet. Please tell me the few line items from the balance sheet. So this is your balance sheet. By looking at this, tell me, property, plant and equipment, capital work in progress, investment, goodwill, other intangible assets, financial assets, investments, trade receivables, loans, others to be specified. At least pick one, yeah. Trade receivables. At what amount trade receivables is recording? Whether trade receivables are asset or not. Asset. Okay. So this asset recorded at a value of how much cash inflows are going to be received in the future. Okay. Are you comfortable with the example? So there are two aspects for the calculation of the amount at which asset should be recognized in our books. Got it? So these kind of all property, plant and equipment, these types of assets are recognized in our books by the viewpoint of the cash outflows, and these kind of assets are most of the financial assets. Okay, most of the financial assets are recorded in our books with the viewpoint of the how much cash inflows are generated or received in the future. Okay, then let's dive into the concept of property, plant and equipment. This is the first chapter we are going to be discussing in our classroom. So now my main objective is I need to fill this line item, property, plant and equipment. So for any transaction, I need to pass the journal entry with one ledger, with one name item, right? So how I can give that name? So if I need to give any transaction as a property, plant and equipment, it should satisfy some conditions. So I need to learn the definition of property, plant and equipment. So all the accounting treatment of the property, plant and equipment has been discussed in Ind AS 16. Okay. Ind AS 16, property, plant and equipment. Property, plant and equipment. This standard does not apply to, first one is applicability. This standard Ind AS 16 is applicable to property, plant and equipment. So let's see the definition of property, plant and equipment. First our focus is applicability. Ind AS 16 is applicable to property, plant and equipment, and they also mention the then Ind AS 16 is does not apply to property, plant and equipment classified as held for sale. Classified as held for sale, and biological assets other than the bearer plants and assets used in the exploration of mineral resources and mineral rights and mineral reserves such as oil, natural gas. So first, so in these four concepts I will discuss about the bearer plants. So this standard does not apply to the biological assets but other than the bearer plants. Generally bearer plants are also biological assets, but Ind AS 16 does not apply to biological asset but except, so there is an exception for the biological asset. What is that? Bearer plants. It means bearer plants are covered under Ind AS 16. Okay. Then what is the biological assets? Bearer plants. Sorry, biological assets are the living plants and animals. So whatever the living plants and animals, so those are covered under the biological assets. There is a separate standard to dealing with the accounting treatment for the biological assets. That means living plants and animals. What is the purpose of bringing separate standard for the accounting treatment of these living plants and animals? Who is doing the agriculture before? Now also farmers are also doing. Okay. So generally agriculture is doing by the individuals before. Now what happened? Now corporate culture is came into existence. So now corporates also doing agriculture. So they are taking the 100 acres of land and they are growing the plants. Okay. Then they sold at then they are selling the agriculture produce and they are maintaining the farms. Heritage. Okay. Amul. All these types of examples for the companies which are running the dairy industries. Dairy industry means they are buying the cows and buffaloes and they are taking the milk and selling in the industry. So what happened now? All the companies are doing the business with respect to these biological assets, like living plants and animals. Living plants and animals. So they are earning crores of rupees. So if you are not giving any guidelines with respect to the accounting treatment of such business, then what will happen? Everyone follow their own rules, right? So that's why they have introduced the concept. They have introduced the specific Ind AS but with respect to the accounting treatment of biological assets. Okay. Then in this biological assets, they specifically excluded the bearer plant. What is the bearer plant? Bearer plants means useful life is more than one accounting period generally. Useful life is more than one accounting period and it's going to give the agricultural produce. And what is the third condition? Not intended to sell as a plant. Okay. What is not intended to sell as a plant? So I will I will tell you the example, don't worry. First thing, it should produce the agriculture, it should give the agriculture benefits more than one accounting year. Let's take the example of paddy. So you see the plants, how many years it give the paddy? 6 months. After 6 months what will happen? You cut down those plants and you need to seed the plants. Here these plants are giving economic benefits or giving agriculture produce for less than one accounting period, right? So all these are seasonal crops. For every 6 months I need to sampling the seeds again or growing the plants again and again for getting the agriculture produce. Let's take the example of mango trees. So if you seed the mango tree, every year you need to cut it down. No. If you seed the mango tree, it gives the mangoes every year. So almost one mango tree will give the almost 5 to 6 years. They give the agricultural produce for 5 to 6 years. Got it? So here in the definition, if you covered under the bearer plant, it should give the agricultural produce for more than one accounting period. So all the seasonal crops are not covered under bearer plants. Why? Because it gives the agricultural produce only for 6 months or 8 months, though most of the time same thing. Okay, it gives the agricultural produce at one stretch only, at one accounting period, not more than one accounting period. So simply saying. Then the last point is not intended as a sale. Not intended as a sale of the plant. What is the example for this? Coconut trees. Anyone from Godavari districts? Is anyone from Godavari districts? Where are you? West Godavari. Okay. Do you have any idea about cadmium? I think cadmium. So what they are selling? So we are getting the plants. Sorry? Not this cadmium. Okay. There is a place in East Godavari called cadmium. So they are selling the plants. Whenever we are getting the different kinds of plants, we will go and we will take from there. Okay. So in cadmium, they are available all the nurseries. Okay. They are growing the plants. So what is the purpose of growing this plant? To sell. To sell the plant as it is. Got it? What is the purpose here? To sell this plant, for selling this plant as it is. So This is not covered under the definition of bearer plant. One decorative plant is there, one money plant is there. What is the purpose of selling? Are they giving any agricultural produce for more than accounting year? And are you getting it for producing agriculture or something? No. So they are selling it. What is the intention of growing this plant? For selling the plant as it is. Okay. Their intention is not selling the produce of that plant. Their intention is selling the plant as it is. Okay. Selling of small this mango plant. Selling of this mango plant covers under bearer plant. So I have lot of small mango plants. Okay. What I am going to do? My intention is I need to sell this mango plants, mango seedlings to everyone. So I am selling it this small mango plant as it is. They are using the word as it is. Okay. So is it covered under the definition of bearer plant? No. So if I have the mango tree, then it covers the definition of the bearer plant. Why? It covers the entire definitions. Here my intention is growing the plant is not for selling it as a plant, by selling its agricultural produce. Got it? So there is no standard with respect to the biological assets for you, and there is no concept of bearer plants also. For just understanding purpose, I just told about the bearer plant. Okay. Then what is the PPE classified as held for sale? Sorry? Cost? Showroom ki? Not getting. No, their intention is not like that, right? Okay, I got it. By looking at the word, is getting some knowledge, he trying to give it. But here the definition is, what is the purpose of PPE classified as held for sale is one thing. Whenever I look at the balance sheet, whenever I look at the assets, what is the intention? So this company has these many of assets, right? Let's say our Sai Krishna went for the alliance. She went for seeing a girl. Okay. So matches. So their parents are looking a girl for our Sai Krishna. Tell me name, yeah. Sai Krishna. Okay. So what they are looking? So I am talking about the net worth. So Sai Krishna has told to them, so I have 5 cars. How many cars? 5 cars, 2 buildings. Okay. How many cars? 5 cars and 2 buildings. So by looking at these net worth property, what is the impression? What is the impression of this girl parents? So Sai Krishna has, wait, listen, yeah. Sai Krishna has these many of assets. Okay. But what happened is, he purchased it in installments. He paid for only one installment. After that, all the installments are defaulting only. Okay. Within the next month, what will happen? All these are seized by the respective financing companies who are financed for this. He knows it. He intentionally doing it. Okay. Why? What is the purpose? He wanted to deceive the decision of the others. Okay. He want to deceive the decision of the others. By looking at this network, they are having the impression that Sai Krishna has these many of assets. So that is the purpose. What is the real intention? So real intention is, he is going to lose these assets or in the nearby future. Okay. In the same way, one company is there. In this company's balance sheet, if I show it under property, plant and equipment line item, 10 buildings, almost 10 buildings, net worth of 500 crores. What is the impression the stakeholders getting? What is the impression the stakeholders are going to get? The company has the worth value of 500 crores as on the 31st March something 2025. Then after April 15th, all these assets have been sold. Okay, the management has an intention, I want to sell all these assets in the nearby future. Okay, not only transactions. So through financial statements, the main objective of the Ind AS is each and every intention and each and every aspects of the business that should be reflected in the financial statements. That should be reflected in the financial statements. Here, what is the intention of the management? It is going to sell all these property, plant and equipments in the nearby future, right? But this intention is is this intention reflecting in the financial statements? No, right? So that's why they have introduced the concept non-current assets held for sale. Non-current assets held for sale. There is a separate line item here. Other non-current assets, right? So they are giving the separate line item. Other non-current assets. In this other non-current assets, there is some separate line item. Non-current assets held for sale. For dealing accounting treatment, they are giving separate Ind AS 105. Okay. So you no need to learn the entire concept of Ind AS 105. Just remember that name. What is Ind AS 105? Non-current assets held for sale. So whatever the assets, if you wanted to sell it in the nearby future, you are not supposed to show it in the respective heads. What is the respective head for the property, plant and equipment? So there is a property, plant and equipment. For the one building is there, I need to show it as a property, plant and equipment as per the definition. But now I intended to sell it in the nearby future. Am I need to show in property, plant and equipment or non-current assets held for sale? Non-current assets held for sale, because I am going to sell it in the future. This intention should be reflected in the financial statements. That is the main agenda. Okay, that's why it has been excluded. Which type of PPE is excluded? The PPE which has been classified as held for sale. Those PPE accounting treatment are not dealt by Ind AS 16. It should be dealt by Ind AS 105. And all biological assets are dealt by Ind AS 41. Of course, there is an exception, bearer plants. Bearer plants is also biological assets, but bearer plants are dealt by Ind AS 16. Okay. Ind AS 16 bearer plants. There is an MCQ with respect to this one. So you just need to remember this thing, that's all. Bearer plants are covered under which Ind AS? Ind AS 16. Okay. Then whether bearer plants is covered under the definition of biological assets? No. They are specifically excluded the bearer plants from the definition of biological assets. Then remaining two aspects are normal things only. In non-applicability, especially in most of the non-applicability of the accounting standards also, these two aspects are there. What was that? Assets used in the exploration of mineral resources and mineral rights and mineral reserves such as oil and natural gas. Did you see the KGF movie? So they are using lot of machineries, right? For why? Where they are using? For the exploration of mineral resources. All kind of machineries are not accounted as per Indian accounting standards. Generally, so before introduction of Ind AS, there is accounting standards, right? There is no specific accounting standards with respect to dealing with those kind of assets. Okay. Why? Because they are doing the accounting treatment based on the industry practices. So how everyone is doing? So in that industry, everyone is following some kind of norms and principles. So that only following. But in Ind AS, they introduced the concept of Ind AS 106. Ind AS 106, it gives the guidelines with respect to the assets used in the exploration of mineral resources. Then mineral rights and mineral reserves. Okay. What was this? Have you heard about Galjanardhan Reddy? Ballari. So what is going actually? What he have? Minings, gold mines. So generally government will give rights to explore that with respect to explore that mineral resources with respect to the land. So I have the right of digging and taking out the minerals with respect to the 100 acres. What is my right here? So what is my asset? I have this right, right? I have this right. So I need to show it in my balance sheet as an asset. Why? Because it's going to give economic benefits in the future. So it satisfies the asset definition. So that's why I need to include it in my balance sheet as a mineral rights and mineral reserves. These are also assets, right? Then what is the specific accounting standard deals with it? So India 16 is not applicable to those kind of assets. Mineral rights and mineral reserves such as oil, natural gas. Okay. So I have the right to take the oils and natural gas from the Godavari basin. You know that? So Godavari, they have the right to take off the gas and minerals from Godavari basin. So I have the right to take that gas from that aspect. So I have the right. This right is treated as a separate asset. Okay. That asset is not dealt by Ind AS 16 and there is no specific Ind AS also. Still it is followed the rules and regulations of the industry. There is no specific industry. These are the definition aspects, applicability aspects. So from this definition or from this discussion, you no need to remember everything. The only thing you should remember is the bearer plant. Ind AS 16 is applicable to bearer plant or not. And one more thing, and this non-applicability is used for MCQ purpose. Ind AS 16 is not applicable to Ind AS 105 like PPE held for sale. Second thing, biological assets. Third thing, assets used in the exploration of mineral resources. Fourth one is all of the above. Ind AS 16 is not applicable to following. So these are they are going to how ask the MCQs. Very easy. Why I am reading is I need to just identify in the MCQs and they will not be asked any question. What is the non-applicability of Ind AS 16? Though there is no, usually they are not going to ask such type of questions, just only used for the MCQ purpose. Whenever they are giving MCQs, just you need to able to identify the what kind of non-applicabilities. Okay, please no need to mug it up. Then what is the definition of property and plant and equipment? I bought an asset, so I need to check whether it satisfies the definition of property, plant and equipment. If that asset satisfies the PPE definition, then I can record that assets with the name of PPE. Then what is the PPE? PPE are tangible items. PPE are tangible items. Tangible means we can see and touch it. Okay, so it have some physical form. PPE, property, plant and equipments are the tangible items. So whenever I bought that asset, which are in the tangible form, tangible means I can see and I can touch it. So these tangible items are covered under the PPE. Whether all tangible items covered under PPE? No. First thing is it should be tangible item. Second thing is what is the purpose of holding it? Okay. What is the purpose of holding it? Depends on the purpose. Okay, the classification might be different. So I need to check the purpose. Why you are holding this asset? What is the purpose? Okay, and what is the nature of the business? Purpose of asset and the nature of the business. Okay, so I will ask few questions. Okay, it's not recording with Ind AS 16, general questions. I sold one furniture. I sold furniture. Tell me the journal entry. Sorry? Cash to furniture. Cash to furniture. Okay. Here, 1 minute. I am dealing in the business of furnitures. Then tell me the journal entry for the sale of furniture. Sales, sales to cash. Cash or debtors, depends on the transaction. Okay. Okay. Cash to sales or cash or debtors to sales. So I am not dealing with the furniture business. Then what is the journal entry? Instead of sales, I need to use the word furniture. Okay. So here, for passing the journal entries, what is the criteria point here? I should check the nature of business. Then, purpose of the asset also I need to check it. Okay. Purpose of the asset also I need to check. Then, so I am dealing in the 1 minute. I am dealing in the furniture business. I sold one furniture. Okay. I sold one furniture. What is the journal entry? Cash account to sales. But I am twisting that. I am twisting some fact. So I sold one furniture, but that furniture is I am using it in my office. Of course, I am doing the furniture business. So I am selling the every furniture and I am buying the furniture. I am selling the furniture. But this time I sold the table. One table is there in my office, and this table is used for administrative purpose. So I want to sell this table, and what is the journal entry? Okay. Don't give that much complex. Okay. So normally cash account debit to furniture account. Why I use the word furniture here? Because that asset is used for administrative purpose. So asset is used for administrative purpose. So I have classified it as administrative asset. So instead of stock, if that furniture is used, if I kept this asset in the godown, okay, and I wanted to intend it for the sale in the ordinary course, then what is the journal entry? It might be the sales. Okay. So here passing of journal entry depends on the how you are going this asset. Okay. What is the purpose of the asset and what is the nature of your business? These two aspects are decide the journal entry. Got it. Here our focus is going to be on purpose of the asset. Depends on the purpose assets, your definitions are changing, right? So coming to here, property, plant and equipments are the tangible assets held for what is the purpose? Used in the production or supply of goods or services. What is the second purpose? For rentals to others. What is the third purpose? For administrative purpose. Okay. What is the purposes? Held for used in the production or supply of goods or services, for rentals to others, for administrative purposes. Whenever you use one tangible item for production of goods or services, for rentals to others, for administrative purposes, it covered under the definition of PPE. Okay. This is one aspect. And there is a word that they have been used the word and. So you should satisfy the definition of condition of 1 and 2. What is the second one? Expected to be used for more than one period. So you can write it as one accounting period. So I bought one asset like it's okay. We are in the business of providing educational services, right? So I bought one monitor. 1 minute. I bought one monitor today and I have sold it after 10 days. Okay. I bought it today and I have sold after 10 days. Is it classified under the PPE? Why? So I bought it today. How I recorded in my books? I bought it today, right? So how I am going to write it in my books, this projector? Hmm? Hmm? Asset? Asset only, right? Asset. Then what type of asset it is? There are lot of assets, right? There are separate line items. Whether can I record it as a property, plant and equipment? No or yes? We can record it. Okay. Here, I am expected to be used, but reality is different. I have sold after 10 days, but it is not my intention on the day one. I bought it with an intention to use it for more than one accounting period. But by the practical difficulties or something, I sold it after 10 days. Okay, here I need to observe only expected to use it or not. Whether I have the intention to use it in the long future or not. But the reality may be the different. Don't go by the reality. You don't know, right? On the first day, you are going to sell it in after 10 days. So that's why we can record it. So what I am trying to sell is, even though if it is sold within the 1 year, it cannot be excluded from the definition of the PPE. Only it's about intention. If you have the intention to use it in more than one accounting period, you can classify it as a PPE. Okay. So for tangible items, PPE or tangible items. So whenever you bought one tangible items, one thing, I need to check the purpose. And the second thing, I need to expect it to be used for more than one accounting period. What type of purpose you can use it? Production of goods or services, rentals to others. Okay. And there is some exception here. Except land and building. Right. Please write it down. Land and building. For rentals to others except land and building. Write it as Ind AS 40. So there is a separate Indian accounting standard called Ind AS 40. It deals with the investment property. It deals with the name of the Ind AS 40 is the investment property. Invest property means, so there is a definition. Here they are giving the definition for PPE, right? In the same way in Ind AS 40, they have given the definition for investment property. Investment property means land and building held for the purpose of giving rentals to other or capital appreciation or both. Okay, what is the asset here? If you purchase any land and building for the rentals or for capital appreciation, for both the purposes, it should come under the definition of the investment property, and investment properties are dealt by the specific Ind AS called Ind AS 40. Okay, so these kind of land and buildings are discussed over there with respect to the accounting treatment of this. That's why they have excluded these kind of land and buildings. Okay, so I have given the definition of Ind AS 40 and Ind AS 16 also. I am giving the examples. I will give the examples. Tell me under which category you are going to be classified this kind of assets. Okay, Shivali. Okay, write it. Note chesa. Okay. Sir, just listen to me. I bought one land or I bought one building. I am using it for providing of classes. So the company name is BCCA Private Limited. So which are in the providing of educational services to the students. So I bought one building. Okay. How I need to classify this building? Whether PPE, investment property, or something else. Investment property. So whenever for the classification of the asset, what is the main aspect? I need to check the purpose. What is the purpose of this building? To run the classes. So, to providing the educational services. So the building is used in the providing of educational services. Whether the building is tangible item or not, tangible items, and most of the times buildings are purchased expected to use it for more than one accounting year, right? So it satisfies the definition of the PPE, right? Whether it satisfies the definition of PPE or not, then we can classify it as a PPE, right? Then why you are saying investment property? When you have classified under investment property, you have purchased that land or building for the purpose of giving rentals to others, first thing, or for the capital appreciation, or for the both. Here what is the purpose? My purpose is for providing the services to the students. Okay. Then the second example, BCCA Private Limited has bought one building or one flat in the commercial complex for using it as an office purpose. Okay, our chairman sir, Ravi sir, everyone is there only. If you want to meet the chairman sir, you should go there. Okay, so they are using it for the office purpose. Whether this building is coming under the definition of PPE or not. PPE or not? PPE. Why? So building is a tangible item and it is used in the administrative purpose. Okay, used in the administrative purpose. Then our Sai Krishna is in the business of real estate, so he bought one building. Whether it comes under the definition of PPE? No. Why? Because his intention is to sell it, right? Or what is the main purpose? For the capital appreciation, maybe sometimes, or sell it. If he is in the business of selling of the lands and selling of the buildings, what is the nature of the asset? How it is classified? Sai Krishna, in the books of Sai Krishna, how you are going to be classified this asset? Investment property. Why is purchasing it? To sell it. Whether sale is covered under the definition of investment property? What is his nature of business? Yeah, selling of the buildings and purchasing of the buildings and selling of the buildings. So it is in the ordinary course. Then it comes under the definition of inventory. Got it? What is the inventory definition? These are the goods which are used in the sale in the ordinary course of the business. What is his ordinary course of business? Okay, then it comes under the definition of inventories. Okay, so I need to check the nature of business and the purpose of the asset also. Then investment property, right? So BCCA Limited is able to mean in the business of providing educational services. So it bought one building. It bought one building for earning rental. So we bought one building and we are giving for the rentals to the software company. So we have one building in high-tech city. So that building is given for the software company to run their business. So in which asset classification it comes under? Investment property, because we are not in the business of selling of the lands and buildings. So it not comes under the inventory. Second thing, whether it is used for the, what is the purpose? Rentals to others. So in the definition rentals to others, there is an exception for the land and building. Okay. So land and buildings. Then I can go for the investment property. So it is a land and building. What is the purpose? For earning rentals. But in reality, BCCA does not have building in high-tech city. Okay. Don't go and ask for the building over there. So got it, the definition? Then recognition criteria. When you are going to record it in books of accounts, first it should satisfy the definition of PPE. After that, I need to check this recognition criteria. PPE is recognized in the books under the assets only if probable that future economic benefits will flow to the entity from the use of the asset, and cost of the asset can be measured reliably. If the cost of the asset, if any, I bought one item, or that cost is I'm unable to measure it reliably, then can I note down the debit amount or credit amount? I cannot note it down. With amount I cannot pass the journal entry, right? So then how can I record this asset in my books? So that's why if you want to record this PPE in your books, what is the definition? What is the recognition criteria? Probable future economic benefits. FUB means future economic benefits. These benefits will flow to the entity from the use of the assets. Whenever you are using the assets, the economic benefits will flow to the entity, and the cost of the asset can be measured reliably. Okay, then only it classifies the definition of, like, it satisfies the definition of recognition criteria. So I bought one asset. I bought one asset. I bought one. One minute. I bought one mobile phone, keypad phone. I bought one basic keypad mobile. So keypad mobile is no one is using, right? Generally no one is using in the keypad mobile. So already in my business there are lot of other advanced mobiles also. So whether am I able to generate any benefits with this usage of this mobile? This is a keypad mobile. There is nothing. There is no economic benefits with respect to this keypad mobile. Whenever, how can I say there is economic benefits by using the asset? Whenever I actively using the assets in the business, with that I can able to generate the revenue. With this mobile, only I am just keeping over there. Whether can I record it in my books? No, I cannot able to record it. And one more thing, wedding photographs are there, right? So cameras. So have you watched before? There is a big camera. They used to carry on their shoulders. So anyone using it now? No. So if I bought that camera for shooting the photographs, whether it will generate the revenue? I bought it today, but whether this camera is able to generate the revenue to me? So if any client came, so I am going to shoot this with camera, that's all. That client will gone. Okay, so nobody will like it. So whether I can able to generate this using this camera? No. But whether it is satisfied the PUB definition? Yes. It's a tangible item. I can use it in the providing of services, because what is my business? Providing the so video, wedding photographies. Okay. So I can able to provide the services. It satisfies the definition of PPE, but can I able to record it in as a PPE? No. But it does not satisfy the recognition criteria. I can able to measure the cost, but probable that future economic benefits will flow to the entity. There is no probability. Okay, by using this asset, I can able to generate the revenue. So without probability, you are not supposed to record it in your books. Okay, whatever the assets that you use it to able to generate the income only, those assets are you are supposed to record in your books. So just today we just learned the applicability and the definitions and the recognition criteria. These are the basics only. So there will not be much questions on this. So only problematic questions are going to be asked about this. And a few MCQs are there, one or two, that's all. So each and every aspects we are going to be covering here. Okay. So in the next session, we will start the problematic aspects also. Okay. A very good morning to one and all. Okay. So we have discussed until the recognition criteria. So we have discussed yesterday scope of the standard. In day 16, property, plant and equipment. So what is the scope of the standard? And what is the definition of property, plant and equipment word? And the second thing is recognition criteria. Okay. So next one, initial recognition. Before going into initial recognition, so let's revise the three concepts whatever we have discussed earlier. Apart from these three concepts, the important thing is the definition. PPER, intangible items held for the purpose of, what are three purposes? Used in the production or production of goods or rendering of services. Second, sorry, rentals to others. Indulo there is an exception. Land and building. Third one, for administrative purpose. And second condition is expected to be used in more than one accounting period. Okay. What is the recognition criteria? PPE. PPE is recognized in the books of accounts whenever it satisfies the two recognition criteria. First one, economic benefits. There is a probability that economic benefits will flow to the entity and cost should be measured reliably. Okay. Then initial recognition. Initial recognition means, so the starting date of the getting the asset into our books. So on which date the first time the asset is going to be recorded in our books. Okay. So initial recognition is at cost. So PPE is initially recognized at cost. So whenever you purchase one property, plant and equipment, so let's say you have purchased one asset and this asset satisfies the PPE definition and as well as the recognition criteria. So I can use the word PPE, right? I'm just trying to pass the journal entry. So I have decided to which type of assets I can give the name of property, plant and equipment ledger. Okay, so PPE account. What is the credit aspect? To cash or creditor. Okay, if you purchase from credit basis. So PPE account debit to cash or creditor. So I know when I have used this PPE word, so I have learned the definition and recognition criteria. I need to check these two aspects. After that, I have decided the debit aspect. Okay, then what is the amount here? I should record some amount, right? So at which amount I should record this debit amount and credit aspects. Okay, so just we have learned what is the PPE and I need to learn about the amount. At what amount I should record this PPE in my books. Okay, when you are recording this PPE first time in your books, okay, first time recognition of the assets in your books, so we should recognize it cost. Okay, we should initially recognize it cost. Sir, is there any subsequent recognition? Yes, every year on balance sheet date I need to show the value of the asset in my balance sheet, that is subsequent measurement. Okay, whenever the asset entry into my books at the first time I should record it in my books at cost. So I should learn the aspect of what is cost. Okay, so the practical aspect is starts from this point. So the practical aspect is regarding with the numbers. So I need, what is the number I need to fill here. Okay, for filling this number I need to understand the word cost. Cost means the cost is divided into three components. The first one is purchase price. The second one is directly attributable cost. And the third one is initial estimate of dismantling, removing and restoring. Okay. Do you remember the asset definition? So asset definition. So it's a entity mean. It's a resources controlled by an entity, right? So after that, asset recognition is divided into two broad categories. First one, cash outflows. Okay, I recorded the asset in the two aspects, cash inflows and cash outflows. Now tell me now, PPE is, I need to record this PPE. PPE is a type of asset, so I should record this asset in my books. So now tell me which method I should follow, whether cash outflows or cash inflows. Cash outflows. So this is a PPE. Most of the tangible items and intangible type of few items are used cash outflows. And for cash inflows, financial, like financial assets are, for recording financial asset, I can use the cash inflows. So these aspects are discussed in the initial lecture. So if you have any doubts, you just go through it. Now cash outflows. So how much cash outflows required to get this asset? First thing, purchase price. I should pay the purchase amount to them, right? Then second aspect is the directly attributable cost, and third aspect is initial estimate of cost of dismantling, removing and restoring. So let's crack each by each word. So first thing is purchase price. There are some adjustments to the purchase price. List price of PPE. What is it? List price of PPE. Then trade discounts and rebate. What is the next aspect? Trade discount and rebates. So they are saying 1 lakh is the list price. So this is the normal purchase price or quoted price of the machinery. But out of this 1 lakh, they are saying trade discount or rebates are there. So 1 lakh discount will be there. So 1 lakh is the list price. Out of this 1 lakh, trade discount is the 10,000. Okay. Now after that, import duties and taxes is also there. What is meant by this list price? This is the price fixed by the organization, okay, for manufacturing of this asset. So most of the times this purchase price includes cost plus profit element. Okay, this purchase price include cost plus profit element. Whenever you want to purchase one asset, you need to pay the cost plus profit element. That's all. Is that so? No, right. I need to pay GST amount. You wanted to purchase one iPhone, not from India. You wanted to purchase it from US. Then how you are going to get this iPhone? So you need to pay the taxes. Or you want to purchase one Elon Musk car. So cars are there, right? So what? Tesla. Okay. You want to purchase some Tesla car. How you are going to purchase it? You need to pay. You need to pay for cost of the car. You need to pay the cost, and as well as you need to pay for the profit element, as well as you need to pay GST amount and custom duties and taxes, everything. So if you want to pay all these amounts, then only you can get that asset. In the same way, if you want to buy some machinery or land or building something, you need to pay the list price. From the list price, I need to deduct trade discount and rebate, then import duties and taxes, only non-refundable. Then what about refundable taxes and duties? You bought one machinery, so while you are buying that machinery, you paid GST amount. Okay, so this is input GST, right? So by using this input GST, you can claim it input claim, right? So while paying the output tax, you can use this input. So this is refundable tax. So you are getting the benefits in any form. Okay. So these type of refundable taxes and duties are, you are not supposed to include it in the cost of the asset. Why? What is the purpose? Why they are not including? Because by including these taxes into the cost of the asset, you can claim depreciation. Okay, you are claiming the depreciation on the amount not spent by you. Got it? These input GST has been credited into your account. Okay, this input GST benefit will get to you while you are paying the output tax. Already you are taking the benefit in the form of input GST, and again you wanted to take the depreciation expenses. You wanted to take the benefit of depreciation expenses. Are you not getting? So by providing more depreciation in our P&L account, our profit is going to be reduced. If the profit is reducing, I will pay less taxes. This is the benefit I am going to get if I show more depreciation. If I need to show more depreciation, my asset value is also more. Okay. So if I include these refundable taxes and duties in the purchase price, what is the benefit I am going to get? I'm going to claim more depreciation. Already government is giving benefits in the form of input tax. That's why refundable taxes and duties are not supposed to included in the cost of the PPE. Okay. Then cash discount is not deductible. Cash discount is not deductible. And if the question is silent, assume taxes are non-refundable. They are not they haven't been mentioned about the whether taxes are refundable or non-refundable, and we can assume it is non-refundable. And GST is not added as it is refunded in the form of input tax credit. Wherever they have mentioned the word GST, and we can easily assume that it is a input tax credit, so it is a refundable tax. One more thing, cash discount is not deductible. Why? Trade discount we are deducting it. Then tell me the what is trade discount or what is the cash discount? Yeah, trade discount means while we are buying the asset, we are paying the less amount. They are giving the discount while we are purchasing the asset. But cash discount is not with the regarding with the purchase of the asset, with the regard to the payment of the payment of the asset. So so do you remember there are words. Trade discount is not accounted in the books of accounts, and cash discount is accounted in the books of accounts. Did you remember those lines? But here I am deducting it in as a trade discount, but here I am doing accounting, right? Then what is the meaning of that word? I am deducting trade discount from the list price. So what I am doing here, I am giving accounting treatment, right? But what is the words we have learned in our earlier levels? Trade discount is not accounted in the books of accounts. Cash discount should be accounted in the books of accounts, right? Now tell me, example one. I bought one asset. So I bought a car. The purchase price is 500 CR. It's a very costly car. Okay. So there are no other customers. There are only few customers. So in world there are only 7 cars. Out of 7 cars, I bought one car. Okay. So we'll take examples rich. Okay. So so I asked for the discount. So I'm paying 500 crores, right? So I'm also one of the customer. So please reduce the price. Then he said, okay, I will give you the discount. Then it is called, so I am bargaining while I am purchasing the asset. So the trade discount is 100 CR. Okay. Then how much I need to pay? 400 crores. Okay. Then tell me the journal entry. One more thing. I am not paying it today. These 400 crores are, there is an agreement, I will pay you after 1 year. So tell me the journal entry. Sorry? Please tell me uniformly, okay, with louder voice and proper diction. Car account debit to Creditor, huh? Okay, creditor account debit to. What is the journal entry for buying a car? Tell me. Car account debit to creditor. So I am not paying the cash or bank today. So car account debit to. So car is classified under PPE because I am going to use this car in my administrative purpose. Okay. Whenever I go into the income tax office or GST offices, I use this car. Okay. So this car is a tangible items used in my administrative purpose and I am expected to be used for more than one accounting year. So I have classified it as a PPE. So PPE account debit to creditor. What is the amount? Tell me the amount. 400 or 500? 400. Then trade discount is, tell me the word. Trade discount is not accounted in the books of accounts or not taken into consideration while recording in the books of accounts. Did I record the trade discount here? I haven't created the trade discount ledger in my books. So whatever we have learnt in our previous level is correct. So I just deduct the discount. This is calculative purpose. For the calculation purpose, I need to just deduct the trade discount. I am not at all showing it in my books of accounts. So trade discount is not accounted in the books of accounts. Whatever we have learnt in our previous levels is correct. But this is the explanation. Then coming to cash discount. So cash discount is a discount given while for the prepayment of the amount. So as given 1 year, right? So 1 year time, within 1 year time, I need to pay 400 crores. But after 6 months, I got this 400 crores. So I paid. So I paid after 6 months. That's why they give the concession of 50 crores. So I am giving the 400 crores. No, you are paying within the 6 months, right? So it's okay. I will reduce on 50 crores for you. So then creditor account debit 400 to discount. Okay, 50 crores. I thought discount is 350. Okay. To cash or bank. So I'm paying 350 crores, yeah. With cash I cannot pay. Okay, bank. Here cash discount is need to show in the accounts. Okay, mean cash discount should be recorded in the books of accounts. Here I am showing the discount. So whatever the discounts we are seen in the financial statements are cash discounts, not trade discounts. This is cash discount. But what is the word here they have used? Cash discount is not deductible or cash discount is ignored while calculation of the cost. Am I taking into consideration of the this cash discount in the recognition of the asset? No, right? So trade discounts are not shown in the books of accounts. Cash discount need to account in the books of account. Second thing, trade discount should be deducted from the cost from the purchase price of the asset and cash discount should not be deducted from the purchase price. Simply saying cash discount should be ignored while calculation of the purchase price. Second thing, trade discount should be ignored while for accounting purpose. So this is the difference. But trade discount should be deducted while the calculation of the cost. Got it? Then directly attributable cost. Directly attributable cost. What is meant by directly attributable cost? So this definition is important. So they are giving so many expenses. From those expenses we need to identify what is the purchase price, what is the discount, what is the directly attributable expenses. So whenever there are lot of directly attributable expenses, in note point I should start with the word, okay, all the directly attributable expenses should be capitalized as a part of the cost of the asset. This word I should be used. Then What is the directly attributable expenses? All the costs, those are necessary for bringing the asset to the present location and condition as intended by management. Okay. Repeat the words. All the costs that are necessary to bring the asset to the present location and condition as intended by the management. So I want to start a cement factory. Okay, I wanted to start a cement factory. For that, for manufacturing cement factory, I need lot of equipments. So I wanted to import one big machinery, okay, from the US or UK. So what I'm going to do, I need to pay the amounts for the purchasing it, and as well as maybe there is no discounts, assume it there is no discount, and I need to pay the taxes, custom duties, everything. So after that, am I able to use it? So when I need to pay this all these amounts, whenever I have taken the delivery at the Mumbai port, okay, so the machinery is coming to the Mumbai port. Whenever I have taken the delivery in the warehouse, I need to pay all these amounts. So purchase price, customs duties, everything I need to pay. After that, from Mumbai port onwards, I need to bring to the Andhra for using it, right? So importing is not enough. Paying amount is not enough. I need to transport it, right? For transporting, can I do it in my 500 crores car? So I have a car, and can I put all the machineries? Can I put it in my car? No, right? So I need to use the first. I need to unload it from the ship. After that, I need to again load into the some heavy vehicles. For loading it, I cannot do it by my own self, right? Not Thor or I'm not Hulk. So I need to use the labor. So there is incurring labor charges, and after loading charges, after transportation charges, after coming here, again unloading charges. After unloading, can I use it? No, you need to install it in a proper place. After buying this TV, I cannot use it, right? So I bought it, and can I keep it on the floor? No, right? I need some proper table, I need proper setup, I need to install it in the proper place. For installing, so can I install? No. So I need some professionals to install in the proper place. Okay. For installing this laptop, I need one support. It's called table. So for installing that huge capacity of the machinery, I need proper base, right? So I cannot install it on the bench or cannot install on the wooden structures. So I need proper base. Okay. Did you see the train tracks? Train tracks are filled with strong rocks, with the small rocks. Why they are filling with the rocks? To give proper flexibility to the trains, and it absorbs the sounds that are emitted from the trains. These are the uses for providing that special kind of support to the tracks. In the same way, for operating this huge machine, I cannot place it on the floor. I need to construct strong beam with cement beams, and I need to fix it to the land. Okay, I need to fix it to this proper that cement structure. So are you using this washing machines? Do you know washing? Okay then. So all we are using washing machines, right? For drying, it is rolling down, right? For drying purpose. At that time, what will happen? The entire machine is vibrating, right? So this is the small machine. Okay, for to avoid that vibrations, what we are going to do? Sometimes we can go and hold that machine. Okay. Sometimes we need to keep some support. Okay, so this is a small mission. For that small mission itself, you are providing lot of support to avoid that vibrations. So I'm using this lot of heavy machinery. There are lot of vibrations, and we cannot control that machinery while it is operating. So that's why I need to fix it properly on the land. For that, I need to construct special cement structure, and I need to install it that special machinery to that construction. After that, I need to start that machinery. Okay. Got it. So this is there is involves a lot of process. Then anyone comes and asks for what is the cost of the machinery. So can I say it for this 100 crores? I said 100 crores. And he is asking, okay, I will pay 100 crores, give that machinery. Can I pay to them 100 crores? Can I receive the 100 crores and will give to them? No. Why? Because there are lot of ancillary, okay, there are lot of ancillary expenses I have incurred to bring that asset into the condition which I intended to be used. Okay, I bought one iPhone for 90,000 rupees. How much? So I bought one iPhone 90,000. I bought it today. Okay, I installed special softwares. Okay, and after that I bought one special case which is studded with the silver. Okay, for that I have incurred 60,000 rupees. Okay, and then our Sai came to me, sir, your phone is amazing, sir. Sir, can I take it? Sir, what is the price of the phone? I said 90,000. And he's saying, sir, I will pay 90,000, give this phone. I cannot give like that. I incurred for the phone 90,000 for accessories and everything for making this phone look so posh. I incurred again 60,000. So what is the total amount I incurred for the phone? 1,50,000. So here also the same aspect, not only the purchase price, all the cost, whatever that I have incurred for bringing the asset to the present location and condition as intended by the management. So all these costs should be form part of the cost. Okay. What is the first element of the cost? Purchase price. Second element, directly attributable cost. Let's look into the examples. Employee cost for the construction or acquisition of PPE. Employee cost for the construction or acquisition of PPE. For the few machineries, I cannot purchase it as a single one. So I need to purchase the disassembled parts from various countries and I need to assemble it on organization. So there are ships. So we cannot purchase the entire ship just like that. Okay, we need to construct it and by taking lot of years. Okay, so there is a PPE and it will take some time. So employee cost for construction of PPE. Okay, for construction of that ship it will take 2 years. For these 2 years I incurred a lot of expenses on the employees. Then cost of site preparation. Already told you, for installing this machinery I need to prepare some cement base. For that I incurred a site preparation cost, and after that freight and delivery cost. Freight and delivery cost. Next, installation and assembly cost. Next, professional fee, architect fee, consultant fee and advisor fee. All these expenses are incurred in connection with the purchasing of the asset. So that's why all these costs should be included. And the cost of run, cost of test run. Cost of test run minus sale value of the sample items produced added to the cost of the asset. So I install this machinery, I need to test this machinery. So that's why for sample purpose I produce 10 units. How many units? 10 units. Out of these 10 units, 2 units are scrap and remaining 8 units are good enough to sell in the market. So I have sold this in the market. So for producing of these 10 units, what is my cost? 2 lakh rupees. This is cost of test run. And what I would get from the market by selling this free samples, test run samples, I got 1.5 lakhs from the market. Now what is my net cost? This 50,000 should be added to the cost of the asset. Okay. Then second example. So I incurred 2 lakh rupees for the test run, but I got 3 lakh rupees from the market from the selling of these test run products. Then what is the amount here? 1 lakh rupees. This 1 lakh rupees should be deducted from the cost of the asset. Got it? Then don't recognize gain to the profit and loss. What is the cost here? 2 lakh rupees. What is the sales? 3 lakh rupees. Generally, profit should be added to the P&L account, right? But here, you are not supposed to do that. This 1 lakh rupees should be deducted from the cost of the asset. Next element. What is the next element? Initial estimate cost of dismantling, removing and restoring site. Okay. This PPE is this PPE calculation is based on the cash outflows. Okay. Cash outflows. I need to consider present cash outflows, cash outflows, and as well as future cash outflows. So by acquiring or by using this machinery, I am incurring the cash flows today, and as well as I should incur the expenses in the future. If I am going to use this asset in my organization, I am going to incur some expenses in the future because of using this asset in my production process. Those are called future cash outflows. So purchase price and initial direct cost. What was that? Directly attributable cost. Directly attributable costs are present cash outflows. Then what is the future cash outflows? Estimated cost of dismantling. Okay, estimated cost of dismantling. I bought one machinery. For fixing of this machinery, okay, I want to fix it on one place. So what I bought? I bought parking vehicle machine. Did you see in big corporates, for parking of the vehicles they purchase one machinery, one rolling machinery is there. If you need to park the car, have you seen the giant wheel? So giant wheel, how we are sitting one, we need to revolve it. In the same way, for parking the cars in the minimum space, they used this parking machines. So I bought one that parking machine. For place that parking machine, I need land, right? So I need land. What I did, so I went to someone, so and asked for that land for the lease. So what he said, there is some construction here. There is one construction here. You need to demolish it. You need to demolish it and you can use that place. And after 5 years, you need to reconstruct it for me. Okay. For using this parking missions, what is the expenses I am going to incur? I need to demolish that land. It includes in the present cost. Okay, it is incurred in the today itself. Whenever I am going to start to use this machinery, I incurred those expenses. But what is the other condition? And I need to reconstruct the same building after completion of 5 years. So I have taken the land for the lease for the period of 5 years. So after 5 years, what is the cash outflow? So let's say 10 lakh rupees. There is a small construction. So I need to reconstruct it after 10 years. Why I am going to incurring these 10 lakhs expenses? For the reconstruction of the building. Why I need to reconstruct the building? Because I demolish it and I am going to use this machinery. Because of the purpose of using this machinery, I am going to incur 10 lakhs. So if I incur 10 lakh rupees, then I should include entire 10 lakh rupees in the cost of the asset. But am I incurring today? No, I am going to incur in the future. So but that's why present value of future cash outflows. Time value of money. Did you remember the time value of the money chapter? So I am incurring the 10 lakh rupees, but not today, after 5 years. So I want the value of these 10 lakh rupees today, because I need to pass the journal entries today itself, not after 5 years. Okay. So every cost should be included in the cost of the asset. Every expenses should be included in the cost of the asset, whether it is a present cost or future cost. If you want to include the future cost, then you should do the discounting. Okay. And recognize that present value of estimated dismantling, removing and restoring site on which PPE is located as per Ind AS 37. Okay. I should record this cost as a liability. Why? Because I am not paying this 10 lakhs today itself, right? Got it. So I should pay 10 lakh rupees in the future. So the discounting of these 10 lakh rupees is, let's say, 7 lakh rupees. Am I paying these 7 lakh rupees or am I incurring 7 lakh rupees out of my hands today? No, right? So until the payment of 10 lakh rupees, these 7 lakh rupees are shown it as a liability. So first year 7 lakh rupees. What will happen to second year? So 7 lakh rupees is the loan amount. Second year 7 lakh rupees plus interest amount. Okay, 7 lakh plus 1 lakh interest. Third year 8 lakh plus 1 lakh interest. Fourth year 9 lakh plus 1 year interest. So fourth year ending the liability is 10 lakh rupees. So I need to incur 10 lakh rupees after, like at the beginning of the fifth year. I mean after 4 years. So I should incur 10 lakh rupees after 4 years. So this 10 lakh rupees I should pay in the form of cash. Until then these 10 lakh rupees are shown it as a liability. Okay, as per Ind AS 37, I will give you the complete accounting treatment. Don't worry. How I need to show? Let's get the clarity with by solving one problem. Okay. So X Limited set up a plant at the purchase price of 5 lakh rupees plus GST at 18% interest rate, and the freight paid 20,000 plus GST 18% interest rate. Then paid 10,000 as employee expenses for the installation of the planet kada, not planet, it's plant. Okay. Then after the plant was put to use, maintenance cost incurred 5,000 rupees and measure the initial cost to be recognized and the pass the journal entries, and the estimated dismantling cost is 30,000 and the present value of this dismantling cost is 12,000 rupees. So this is the question. Now I need to recognize this plant in my books of accounts. Okay, I should record it. So this is a plan. So it's obviously satisfies the definition of PPE. So I can use the word PPE. PPE account debit to cash or bank. We will see. But at what amount I should record it? PPE is initially recorded in the balance sheet at cost. What is the cost? Purchase price. So here purchase price is there. For the calculation of purchase price, list price minus trade discount plus non-refundable taxes and duties, then I got the purchase price. So here first I need to find out the purchase price. So directly they are giving me the purchase price. For the purchase price I need to make some adjustments. What was that? GST. Sorry, whether GST is a refundable or non-refundable taxes. Refundable taxes. Then GST amount should I include in the cost of the asset or should I ignore? Exclude. Okay, no need to deduct, just ignore it. You are not supposed to include in the cost of the asset. So I should include 5 lakh rupees. Then what is the second element? Directly attributable expenses. It means all expenses incurred for the purpose of bringing the asset in the present location and condition as intended by the management. Okay. So freight is incurred. So freight is a directly attributable expenses, and on freight I paid GST. On freight I paid GST amount, and I paid employee expenses 10,000 rupees. All these three expenses are freight and employee expenses and maintenance cost. These three expenses are given in the question. Out of these three, what are the directly attributable expenses? Freight and employee cost. Why you are not taking the maintenance cost? After the put to use. So whatever the definition or whatever the expenses I have so far discussed now should be included into the cost of the asset. But up to what date? Okay. With respect to the machinery, we are going to incur lot of expenses every time. But all the expenses should be, we cannot recognize as a cost, right? So there is some repair in the machinery. So I need to incur some repairs and maintenance expenses. So as per the definition, it's a directly attributable expenses. Why you are incurring these expenses? To making the asset to be used in the production of the process, right? Then as per the definition, these costs should also be capitalized into the cost of the asset, right? But we are not doing it. So here, whatever the definition or whatever the aspects I should include it, there is a time bound. What is the time bound? Put to use. I said put to use in the put to use in business. Okay. So there is a heavy machinery. So I cannot buy it as a single unit. Okay. So I need to buy some spare parts and I need to install it and I need to construct this entire machinery as a parts in my organization. So when the construction activity begins, 1/4/2021. Okay, the construction is completed. Now this machinery is I am able to use it in the organization 31st October, sorry, 38th September 2021. Okay, this is the period. From this date onwards, I can able to use this machinery or this equipment in my business for administrative purpose or production process, whatever it is, or for giving rentals to others, whatever the purpose it is. So, but from this date onwards, these respective assets can be used by me in the way as depends on my intention, as depends on my intended purpose. Got it? So on which date? On 38th September 2021. So whatever the expenses incurred with respect to this asset before this date, all these expenses should be added to cost of PPE. Whether all expenses should be added to the cost of the PPE? No. Only three types. What was there? First one is purchase price, and the second one is directly attributable cost, and the third one is present value of dismantling cost. These three expenses should be included in the cost of the asset if at all these expenses are incurred before the intended asset is put to use. Once you have introduced in the business and you are using it in the business and you have incurred, after that also you are going to incur the expenses with respect to the machinery, right? So all these expenses should be transferred to P&L. So they are saying added to the cost of the asset. It means capitalization of the asset. They use the word capitalization of the assets. So all these expenses should be capitalized. Capitalized means recorded in the balance sheet. Capitalized in the books of accounts. Here, these expenses should be transferred to the P&L account. From which date? After the machinery is put to use. There is some specific words. We will discuss those words after going further. Okay. So for solving of this problem, this much discussion is enough. Okay. Now, this is the freight. Freight is a directly attributable expenses because freight is necessary, right? Then after that, employee expenses for installation of the plant. This is also a directly attributable expenses. But after the plant was put to use, so after the given time frame, the maintenance cost has incurred. What is the amount? 5,000. These 5,000 should be transferred to the P&L account. because it has been incurred after the put to use. That's why all the expenses incurred after the put to use should be transferred to the P&L as an expenses. So measure the initial cost to be recognized and pass the journal entries. So illustration number 1. One minute. So this is the first question. So I want to write few theory aspects also. For solving a problem, you better to write some few theory aspects, whatever you have learned in the class. PPE should be recognized initially at cost. Okay. The cost includes purchase price, directly attributable expenses, and present value of dismantling cost. Okay. This purchase price is present cash flow. This directly attributable expense is also present cash outflow. But this dismantling cost is future cash flow. So that's why we are doing the present value. Then, what is the third point? What is directly attributable expenses? All the expenses incurred for bringing the asset to the present location and condition as intended by management is called directly attributable expenses. Then write it as a calculation of cost of property, plant and equipment. Particulars. So calculations, or write it as a notes and the amount. So always try to give the rupees symbol to the amount, whether rupees in lakhs or rupees in thousands. Try to give it. Okay. Please don't forget it. First element is the purchase price. Purchase price is directly available in the question. So please take the purchase price. What is the purchase price here? 5 lakh. What is the purchase price? 5 lakh. So write it as given 5 lakh. There are some adjustments with respect to the purchase price. What are they? Trade discounts and non-refundable taxes and duties. But here GST is a refundable. So I am not supposed to take it into consideration while calculation of the cost. Ignore it. Then. So purchase price is completed. Next element is freight. So I wrote down 3 note points. So for freight, mention note 3 because freight is a directly attributable expenses. That's why we are included in the calculation of the cost. So write it as a note 3. For purchase price also you can mention note 2. Why you are including purchase price in the cost? Because cost includes purchase price. So that point we have mentioned in the note 2, right? So I have taken the reference from there. Then what is the third one? Tell me. So employee expenses. So installation expenses. So what is the note point? Note 3. What is the freight amount? 20,000. And what is the installation expenses? What is the installation expenses? 10,000. So 20,000 plus 10,000. And what is the next element? So plant was put to use, maintenance cost incurred 5,000. So maintenance cost, note 4, 0. In note 4, the expenses incurred after put to use of asset should be treated as expenses and transferred to, tell me, transferred to P&L account, but should not be capitalized. Okay. So that's why they are mentioning that we are not supposed to capitalize the amount. We should not be capitalized means we should not be added to the cost of the asset. So that's why I have mentioned 0. 1. What is the next aspect? Estimated dismantling cost. But estimated dismantling cost is 30,000 rupees. But am I include the 30,000? No. This 30,000 is going to be incurred in the future. So I will record these 30,000 as of present value. So what is the present value of these 30,000? 12,000. So present value of dismantling cost. What is the amount? 12,000. What is the note point? 2. Note 2. So I have given the reasons for the inclusion of each and every aspect, and I have given the reason for the exclusion of the aspect why I have excluded while the calculation of the cost of the asset. Then for the total amount 5 lakh 90. Okay, 5 lakh 42,000. 50. ఓకే ఎక్స్ట్రా యాడ్ చేశారా సరే 5 lakh 42,000, but calculation is the different game ball game, and passing of journal entries is the different. This is the calculative aspect for how I need to pass the journal entries for this. This is the total amount. Now, because in question they are asking what is the cost while initially recognized asset and pass the journal entries. Journal entries in the books of X Limited. So particulars, debit and credit. For debit and credit, give the rupee symbols. So amount in rupees. Okay. Now, by looking at this calculation, give me the journal entry. Hmm? Tell me the journal entry. PP account to bank. Okay. So I have the clarity that PPE should be recognized at cost. So PPE account debit to 5 lakh 42,000. And what is the credit elements here? So am I paying entire 5 lakh 42,000 today itself? Look at the calculation and observe it and let me know again. So purchase price 5 lakh rupees. So let's say I am paying it today itself. Freight, okay. Installation expense, okay. Now what about the present value of dismantling cost? Am I going to incur these 12,000 rupees today itself? No. This is the future liability. Okay. This is the present value of future liability. Then out of this 5 lakh 42,000 rupees, 5 lakh 30,000 have paid today to cash account 5 lakh 30,000 to present value of you can use the word contingent. Why I am using the contingent word? generally, so generally why I am using the contingent means there is uncertainty, because this is not the exact cost you are going to incur in the future. This is estimated dismantling cost. So this is your expected cost. Expected always includes some uncertainty. To describe that uncertainty, I just use the word contingent liability. Okay, so to present value of contingent liability, okay, or the present value of the, you can write it as a present value of the dismantling cost also. So what is the word they have used? Dismantling cost. So present value of, use it as a present value of dismantling cost. You can take the liberty while giving the names for these kind of journal entries. Okay, so I am using the word whatever they have mentioned in the question, I am going to use that word, the present value of dismantling cost. What is the amount? 12,000 rupees. And tell me the next journal entry. So out of this 5,42,000 rupees, I paid 5,30,000 today. I will pay these 12,000 rupees after 4 years or 5 years, let it be. But this 12,000 rupees, I need to increase this liability year by including the interest. Let's say these 12,000 rupees I have taken from someone. 12,000 rupees I have taken from someone. So what is my today liability? 12,000 rupees. After 5 years, my liability is going to be same as 12,000? No, right? It will increase year by year because of interest factor. So these 30,000, sorry, this 30,000 I have bringing back by giving the discounting factor. Now what I am doing, I need to take this 12,000 in the future by giving the discounting factor, means interest. So currently I am treating this as one liability. So this liability is increased by year by giving the interest aspect. At the end of the term, I need to incur 30,000 rupees. Whenever it becomes 30,000 rupees after the end of the period, I should pay these 30,000 rupees. Then how I am going to pay? My liability is 30,000 rupees. Liability should be debited and should be settled by paying the cash. Okay. Then before going to that, so tell me the other aspects. So in question they are giving these expenses or these related aspects. So am I recorded? I mean, am I passed all the journal entries with respect to all the entries? So all the transactions? No. What are the remaining ones? Sorry? Maintenance cost. Apart from maintenance cost, what are the other things? Hmm? Cool. If we are not coming to depreciation, we are at the initial stage. So tell me the other aspect. There is GST is also there, right? So I am not supposed to consider in the calculation of the cost of the asset, but it doesn't mean that I am not supposed to consider it in the accounting treatment. I should consider it in the accounting treatment. Then tell me the journal entries for the GST aspect. I need to pay this GST amount, right? Initially, I should pay this GST amount also. Then tell me the journal entry. Whether it is interstate or interstate. Interstate means? Interstate means? Okay. Means I am not asking about the definitions or something. Whether I should use the IGST account or CGST account or SGST account. That's what I want exactly. Okay. So, input IGST account. Okay. Input IGST account, debit to cash or bank account. So I am using the word cash account. Why I am using this input IGST account? Why I am debiting it? Yeah, exactly. That is a current asset. So I am going to use this asset in the future for setting off my liability. The liability should be settled in the form of paying of the cash or be by giving some other asset in exchange. So settlement of liability is in the form of giving other asset. Other asset in the form of cash or other than the cash. Here I am going to settle my output GST liability in the future by using this input IGST asset. So I am going to treat it as a asset. Why I am treating it as an asset? Because it is giving economic resources in the future. Okay. Tell me one thing. Saving of 100 rupees and earning of 100 rupees is same or not? Saving of 100 rupees or earning of 100 rupees is same or not? So in the same way here, with the input IGST, I am not getting any cash inflow resources, but I am reducing my cash outflow resources. That's why I am recording it as an asset. Okay. Then input IGST account debit to cash account. What is the amount? Calculate the total amount on the freight and as well as the purchase price. So 5 lakh into 18% is 90,000 and freight 20,000 into 18%. Okay, 3,600. Total. So show it in the calculation below. So 5 lakh into 18% is 20,000 into 18% is 3,600. What is the total amount? 93,600 rupees. Input IGST account debit to cash account. Then what is the last aspect? Maintenance cost. What is the last aspect? Maintenance cost. Give me the journal entry. Maintenance cost account debit to cash account. What is the maintenance cost? 5,000. Then what is the next journal entry? Any doubt? What is my next journal entry? So please read the note point number 4. By looking at that note point, tell me the what is the next journal entry? P&L to maintenance. One minute. Ignore the answer, okay? Ignore the answer because they are taking it as input CGST and input SGST. If you want to follow this, if you want to follow the answer in the book, you need to change in the question. You need to change in the question intra. Okay. So if you wanted to continue with the inter, you need to follow our answer. So are we covered each and every aspect in our thing? So machinery 5 lakhs, input GST we have covered. Okay, GST aspect covered. Next, maintenance expense also covered. So we have passed the separate entry for each and every aspect. Here they passed the consolidated journal entry. So for understanding purpose, I am going to provide further more journal entries with respect to the future years. Okay, it's not become the part of the answer, just for a understanding purpose. just for CC, concept clarity. Okay, so I will write fully. Okay, here afterwards I will use the shortcut CC. So whenever it not becomes the part of the answer, so there is no need to write in your exam. So that's why you need to mention it separately. So just for CC, just for concept clarity. So here what is there? Present value of the dismantling cost. This is the journal entry I'm going to give on the first date. So initial date. So what is the next year journal entry? Interest account debit to present value of dismantling cost. Okay. What is the amount here? 12,000, right? So write it as a so 9,000. So interest account debit to 9,000 present value of dismantling cost. These are journal entry I am going to provide after first year ending. Okay. So first year ending, I need to increase my liability. So this is the journal entries passed on the first year beginning or on the transaction dates. But then the first year ending, I need to pass the journal entry because I am increasing the liability by 9,000 rupees. In the second year ending, so of course there is some other aspect also. Interest should be transferred to the P&L account. Okay. Interest account debit to present value of dismantling cost 9,000, here 9,000. So please note down the P&L journal entry also. Okay. P&L account debit to interest account 9,000, 9,000. Please pass P&L JE also. Okay. మీరు రాసుకోండి sorry, please write it down if you have place over there. Otherwise write it as a small note point. So this is the journal entry. What happened now? What is the carrying value of my present value of the dismantling cost ledger balance? What is the carrying value of present value of the dismantling cost? Initially I recorded at 12,000. Again it is increased by 9,000. Again it is increased by one more 9,000. So 12,000 plus 18,000. Then it becomes the 30,000. So my liability becomes the 30,000 at the second year ending. Now I need to settle this liability. So present value of dismantling cost account debit to cash account 30,000 and 30,000. So this dismantling cost should be incurred after end of the second year. So that's why I should incur the cash outflows at the end of the second year 30,000. But up to then I cannot sit like that, right? So I need to show in my books of accounts. So how I am showing present value of this future liability. Why this future liability is incurring? Because of this machinery. So these expenses are directly attributable for this machinery only, right? So these expenses are incurred because of this using of this machinery in my business. So this cost also should be included to the cost of the asset. But this 30,000 is entire 30,000 is not incurred for the purpose of machinery. Out of this 30,000, 12,000 is incurred for the purpose of machinery and remaining 18,000 is incurred with respect to the interest. Got it? I bought one bike. The bike price is 1 lakh rupees. Bike price is 1 lakh rupees. Now I want to take it in the installment system, hire purchase system. So now I paid for the entire my period, I should pay 1 lakh 50,000. So this is the agreement. I should pay after 2 years, but the price is 1 lakh 50 rupees. If I want to buy that bike or if I want to purchase that bike, what is the purchase price? 1 lakh rupees. If I want to buy that bike after 2 years, what is the amount I need to pay? 1 lakh 50,000 rupees. Out of this 1 lakh 50,000 rupees, 1 lakh rupees I should pay for the bike, and remaining 50,000 rupees I am paying because of deferred this 1 lakh rupees for 2 years. So this 50,000 element is not with respect to the bike, this 50,000 is with respect to the interest element. The same way, this 30,000 rupees is paying not because of machinery. Out of this 30,000, 12,000 is because of machinery and remaining 80,000 I am paying because of deferred the 12,000 payment for 2 years. So that's why we have included only 12,000 rupees in the cost of the machinery or cost of the plant. Okay. Then next problem. So what is the list? Okay. So on 1st April 2001, XYZ Limited acquired a mission under the following terms. Okay. Acquired a mission under following terms. What is the list price of the mission? 80 lakh rupees. And what is the import duty? 5 lakh. Delivery fee? 1 lakh. So electrical installation cost? 10 lakh rupees. Pre-production testing? 4 lakh. Purchase of 5-year maintenance contract with the vendor? 7 lakh rupees. These are the elements. Now tell me, our cost element is classified into 3 main aspects. First, purchase price. Second one, directly attributable cost. Third one, so there are 3. So now tell me, out of these expenses, please classify it is into 1, 2 and 3. Okay. List price of the mission 1, and import duty 1. Next one, delivery fee 2. Electrical installation cost, pre-production testing, then purchase of 5-year maintenance contract with vendor. No, so this is a doubt, so that's why I am not recording it. Let's see. Okay, then in addition to the above information, XYZ Limited was granted a trade discount. What is the trade discount? 10%. This element is taken into consideration. Which point number? Point number 1. Trade discount 10% on which amount? Initial list price. What is the initial list price? 80 lakh. Then the settlement discount of 5%. What is the settlement discount? So settlement discount is nothing but cash discount. If the payment for the mission was received within 1 month of the purchase and XYZ Limited paid for the plant on 28th April 2001. When he has purchased that machinery, On 1st April, he acquired or purchased. When he paid, so they paid within 1 month, right? So we can avail the cash discount. But in practical aspects, we don't know when we are going to pay the amount. Actually, what is the date of journal entry here? I need to pass the journal entry on 1st April. Then, in accordance with Ind AS 16, all the costs required to bring an asset to the present location and condition for its intended use should be capitalized. So these kind of questions you should start with these words. Okay. As per Ind AS 16, so all costs required to bring the asset to the present location and condition as intended with the management should be capitalized. This one point is enough. That's why I am stressing it on more times. So it gives the impression to the valuation. Okay, just writing this calculation aspect is not enough sometimes. So if you ignored any information in the question, you should write it as a note point. Why you are ignoring that information? Got it? And what you are going to do with that information. So that aspect should be also mentioned. In the previous question, there is a maintenance cost. Am I used in the calculation of the cost of the asset? No, I am not using it. Then I should quote it as a separate point, and what I am going to do with that point, this maintenance cost should be transferred to the P&L account. Illustration 2. So that point should, okay, 5 minutes. After completion of this problem, I will leave you guys, okay. So as per AS 16, focus here, please. After class is over, we will conduct some argument and we will decide. So as per AS 16, exactly, Ind AS. Really? No. AS is different, Ind AS is different. If I quoted AS, it's completely wrong. Okay, should quoted Ind AS. Clap for him. So as per Ind AS, okay, as per Ind AS 16, all the costs incurred for bringing the asset to the present location and condition as intended by management. So for these kind of problems like a calculation of the cost, you just write this theory point for each and every question with the standardized point. So there is no need to write all these 3 points. For just understanding purpose, I write it down. Okay. For every each and every question, there is no need to read the specific theory which are given in the answer. So there is a standardized format. So you just follow it. Write this 1 point. That's enough. Then you can go for calculation. Okay. And after this calculation, we can go for lunch. Calculation of cost of, what is this, cost of mission. Then what is the list price? 80 lakhs. This list price should be included in the cost of the asset. So write it down, list price given 80 lakhs. Next aspect, import duty. Import duty assumed non-refundable. Okay, if nothing is mentioned in the question with regarding to the whether it is refundable or non-refundable, I always consider it is non-refundable, then I can include it in the cost of the asset. Sorry, trade. Okay, trade, I will redact it later point of time, like I am just following the question. Okay, because every time I don't know after going into the exam, so I am going to solve. I cannot go and search for the each and every element, right? So sometimes I might forget or I might lose some information, that's why I'm following the pattern. So if you follow this pattern also, we can get the answer right. And only thing you should have the clarity is trade discount should be deducted. Okay, so what is import duty? 5 lakh rupees. Next thing, what is the delivery fee? 1 lakh. Next, electrical installation cost 10 lakh rupees. Electrical installation cost, so given 10 lakh rupees. What is the next element? Pre-production testing. What if they use, what if they used the post-production testing? No. Okay. Pre-production testing 4 lakhs. Next element, purchase of 5-year maintenance contract with the vendor. Why we are incurring these expenses? If you are unable to decide whether it should be capitalized or not, first try to look into the purpose of the expenses. Why we are incurring these expenses, and when, what is the purpose, and what is the timing of incurring of those expenses. These two elements should be keep in your mind, purpose and timing. First look at the purpose, why you are incurring this. Purchase of 5-year maintenance contract with the vendor. These expenses are incurred just for the maintenance of the plant and machinery, not for the installation. So without this maintenance also, already this machinery is using them in the business. For effective utilization in the business or for the proper usage in the business, this maintenance is required. That's all. Okay. So one more thing. When it is incurred, after the machinery is installed and after this machinery is used in the production process or after the machinery is used in the business purpose. So this expense is incurred after the machinery is put to use in the business. So that's why this is not supposed to be capitalized. It should be transferred to the P&L account. So these expenses should not be considered in the capitalization, and this should be represented in my note point. Maintenance contract, right? Maintenance contract expenses. Note 1. maintenance contract expenses incurred after machinery put to use. Hence, transferred to P&L account instead of capitalization. There is no need to use same exact words. So depends on your convenience, depends on your ability to form the sentences. You can use the alternative words also, but you should communicate the thing to him, to the exam valuation. That is the main agenda. So what is the next element? Trade discount. So what is the trade discount amount? So trade discount, what is the percentage? 10 percentage. 10% on list price. Sorry? Okay, 8 lakhs. Okay. 80 lakhs into 10 percentage, 8 lakh rupees. Then after this, cash discount. Cash discount should be ignored while the calculation of the cost. And am I need to pass the journal entry with respect to the cash discount today? We'll pass the journal entry while I am settlement the amount. Okay. So I am standing on the 1st April. On 1st April, I am not supposed to pass the any journal entry with respect to the cash discount because I don't know. I don't know today, right, how much I am going to pay or when I am repay this amount. So that's why cash discount should be ignored in the calculation of the cost, not for the accounting purpose. I will take it into consideration for the accounting purpose on the date of settlement, not on the initial date of recognition of the asset. So you no need to write it here cash discount. So write it in the note point. Cash discount is ignored while calculation of the cost. While calculation of cost of PPE. Then what is the total amount? Is there any dismantling cost? Is there any present value of dismantling cost? No, right? So I have taken each and every information. 80 lakh plus 5 lakh plus 2 lakh plus 4 lakh plus 8 lakh. What is the amount? 90? Hmm? Okay, okay, yeah. Trade discount should be deducted here. Okay. Okay. So if you have these kind of questions here afterwards, I will write it down before the class itself and I will show and I will explain the classroom. Okay. But there are few chapters, so for related to those chapters we are going to solve each and every problem in the classroom itself. For the remaining aspects you no need to focus on more here. Okay. So few problems I am going to solve it in the at home and I will display it in the classroom itself and I will explain. Okay. And I will share that notes in the group and you can record it at your own convenience. Then that's it for the day today. So we will discuss the remaining aspects in the tomorrow class. Thank you all. Okay. We have completed illustration 1 and illustration 2 with respect to the India 16 PPE. Can you switch off the fan? See. I'm asking to turn off the fan, not the projector. To turn off the projector, how you are going to see? Okay. Now, please turn it on. Because of this noise, my voice might not reach to you guys. That's why. Okay. Thank you. So we have completed illustration 1 and illustration 2. So let's start our discussion with illustration 3. So it also requires the same amount of knowledge which already acquired in the previous class. So but there is some special adjustment. So that's why I have included in our workbook. So look at the problem. So B Limited has incurred the following transactions in respect of acquiring a plant in exchange of whole plant. So acquiring a plant in exchange of a whole plant. So before problems we are acquiring a plant by paying the cash. Okay, but here we are acquiring the plant by exchange of whole plant. So So PPE purchases in exchange of another asset. So there are different types of purchase of PPE. First type is purchasing by paying the cash. Okay, the settlement is going to be happen in the cash. Of course, we will pay the cash today or in the future. But here the other aspect is PPE purchases in exchange of another asset. In this case, we need to recognize that PPE acquired in the following manner. First preference, the fair value of the asset given up. Second preference, fair value of the asset received. And third preference, carrying amount of the asset given up. Okay. Example. So our Sai Limited want to sell one furniture, okay, or he want to sell building, okay, he wanted to sell his building. Then carrying amount of the building, in Sai Limited books is 10 crore rupees. Okay, he shows the building in the financial statements of the Sai Limited worth of 10 crores. So now I wanted to start one business, so I wanted to purchase a building from Sai Limited. Here, I need to acquire this building. I need to acquire this building. So, in the books of ARUN Limited, acquired a building by exchange of car. Okay. What I did, I exchanged my car with the Sai Limited and I have acquired the building. So, what is my carrying amount of car? This car is used in the administrative purpose. So, I need to record it in my financial statements. So, what is the carrying amount of car? I am showing in the balance sheets. Here, my car value is 8 crores. So, this is the carrying value of the building and this is the carrying amount of the car. Second thing. Fair value of this building is 15 crores. Okay. And as well as fair value of the car is 10 crores. These are the fair values. These are the carrying values. Now what I am doing, ARUN Limited is purchasing one building. Right. So here our discussion is with respect to the, if I acquired the any PPE by exchanging of another asset. Here ARUN Limited is acquiring a building. Simply saying, I am just purchasing this building but not paying through the cash by exchange of another asset. In this case, after acquiring a building, what is the journal entry? So, building account debit, right? So, let's see about the credit aspect also, but what is the building amount? Then, what is the amount I am going to be recorded here? At what amount I should record here? If I purchase to the cash and I need to add up the all the costs, whatever incurred with respect to the building, I should include all the costs. But then what is the amount here in this case? So they are giving the rules. So first preference is you should record this PPE at a value of fair value of asset given up. So this building should be recorded at fair value of asset given up. What I am giving? Car. And what is the fair value of the car? 10 crores. Don't look at the carrying amount of the car. Please look at the fair value of the car. What I am giving? Car. So fair value of asset given up. That is my first preference. So if the fair value of the car is available, you can record the building. You can record that building in my financial statement at 10 crore rupees. Where is the fair value of the car? Fair value of the car equal to 10 crore. Okay. Then billing account debit to, then what is my credit aspect? Car. Here I am giving the car, right? So asset going out. Okay. Then car account. Now tell me the journal entry. Car amount, what is the amount? What is the credit aspect I need to record? Exactly. 8 crore. Because I need to de-recognize the car. So what is the amount I am showing in my books? 8 crores. Okay. So I should de-recognize the car by the value of 8 crores. Right. So that's why I am putting here 8 crores. If I wanted to put here 10 crores, my car value should be 10 crores, right, in my books of accounts. So that's why I am putting 8 crores. Then what about remaining 2 crores aspect? It's a profit on sale of car. 2 crores. Okay. This is the journal entry for the purchasing of or acquiring a PPE by exchange of another asset. What is the value? If the fair value of the asset given up is available, then record that newly acquired asset at the fair value of the asset given up. So fair value of the car is not available because it is a special car I have imported from the foreign. So I cannot able to find out the fair value. fair value is different and market value is different. Okay, generally there are some difference. So technically speaking, so fair value of the car is different from the market value of the car. So because of some practical reasons, I am unable to find out the fair value of the car, or fair value of the car is not available. Then what I am going to do? Go for second option. What is the second option? Fair value of the asset received. Fair value of the asset received. What is the asset I am going to receiving here? Building. Then what is the fair value of the building? 15 crores. Then record building account debit 15 crores to what is the car amount? Still it is 8 crores only. And what is the profit on sale of car? 7 crores. Then the third option, fair value of the asset given up or fair value of the asset received is not available. So I am unable to find out the fair value. Then what is my third option? Carrying amount of the asset given up. What if this is also not available this is also not available? What we are going to do? Don't purchase that building. No, generally, so I am exchanging one asset. So definitely without having that asset I cannot exchange, right? So I am having that car. If I have that car, definitely I am showing it in my financial statements, right? Definitely the carrying amount of the car is available with me. There is no need to find out separately, right? So the carrying amount of the car is always available in my books of accounts. So what is my carrying amount? Hmm? Okay. So carrying amount of car equal to, so 8 crores. This information can be obtained from my financial statements. Then why they are not giving carrying amount of the building? Carrying amount of the building is not available in my books. It is available in CMA Limited books. So that's why I am passing the journal entries here in ARUN Limited books. So maybe sometimes why SAI need to give the information regarding with the carrying amount of the building? He will not provide, right? That's why your car amount is available in your books, right? So record that new asset in your books at the carrying amount of asset given up. So if you want to give something, that giving something, right, that amount should be written with you right before. So without having something I cannot give. So here I am having the car, that's why I am giving this car. So this carrying amount of the car is available in my books. So third option is carrying amount of the car. Then tell me the journal entry. Billing account debit to car account, that's okay. Tell me the amount. Billing account 8 crores to car account 8 crores. Okay. And the second aspect. Now example 2. So this is the first preference. Carrying amount is available. Fair value of the asset received is also available. So at what amount I should record the new asset? Only two options are available with this. Fair value of the asset given up is not available. Fair value of the asset received is not available, and fair value of the asset given up is available. Okay, whatever we are receiving, that fair value is not available in the market. Okay, then at what amount I should record? So asset received is not available, we can record it asset given up. But what is the first preference? Asset given up. So please remember this order. Given up, GRA. Okay. With respect to the PPE, the order is GRA. Why I am why I have stressing out this order is, after going to the India's 115 revenue recognition, there is also an order. So here I am acquiring the asset by giving another asset, right? There, what I am going to do? I am selling the goods. I am selling the goods by exchanging of another goods. Got it? Selling of the goods not through the cash. Selling of the goods by taking the another goods. In that case, what is the order? That order is different. So that's why with respect to the PPE, so exchange of asset, the order is GRA. Given up, received, amount. Okay. Given up means fair value of the asset given up. R means received, fair value of the asset received. So both amounts are not available, then the amount. What amount? Carrying amount. So this is the second preference. What was the third preference? This is the third preference. Next example 2. So same example. It's a continuation of the first example. So fair value of the building is 15 crores. What is the fair value of the building? 15 crores. So I am just purchasing this building by exchange of the car. First aspect, I have given my car, and apart from the car, I paid the cash of 2 crores. What is the amount? Or I paid the cash of 3 crores. Let's say 3 crores. And I exchanged the car also. What is the two aspect I am giving? I am giving a car and I am giving the cash also. What I am acquiring? I am acquiring a building. What is the fair value of the car? Fair value of the car is 10 crores. Okay, fair value of the car is 10 crores. Now tell me the journal entry. So first, whether I should record building or car, what I am purchasing here? I am purchasing the building. So there is no doubt regarding with the debit aspect. So building account, but I need the debit amount. What is the debit amount? 15, 10 or what? I will give you the carrying amount also. Carrying amount of the car is 8 crores only. 10 crores because the first fair value of the asset given up. Given up is 10 crores. So then 10 crores, that's it. So here I am acquiring the building, not only giving the car, okay, but also the cash. 10 crores is for the building, sorry, is for the car, and 3 crores is the cash. So 8 crores, next. So 1 minute, 1 minute. 2 cash. What is the amount? 3 crores. Here what is the amount? 11 crores. 8 plus 3, 11. Here 13. What is the balance? Profit. Profit on sale of car 2 crores. Here it is 13 crores. At what amount I am recording? So the building is acquired by exchange of a car and by cash. Here there are two elements are involving. So first thing, it's an exchange of another asset. So I need to put the value of the fair value of the asset given up. Apart from that, what is the fair value of the cash? Generally, cash only, right? So what is the amount of the cash? 3 crores. Okay. Then let's move on to this problem. So B Limited has incurred the following transactions. The whole site was dismantled at a cost of 8,000. And what is the whole site dismantling cost? 8,000 rupees. But no dismantling cost was capitalized for the whole plant. So scrap from the whole site sold is 1,000 rupees. So generally, if there is a dismantling cost, the dismantling cost should be added to the cost of the plant, right? So which dismantling cost? Present value of the dismantling cost. When will this happen? at the initial recognition of the asset, right? So there is a old plant. Illustration number. Old plant is there. So for the calculation of the cost of the old plant, they forgot to include the dismantling cost. Okay, they forgot to include the dismantling cost. If I wanted to include the dismantling cost at the initial recognition, I need to include the present value of the dismantling cost. If I include this present value of the dismantling cost, it becomes the normal dismantling cost at the end of the useful life of the old plant, right? Whenever I wanted to sell this old plant, or whenever I wanted to disinstall or dismantling this old plant, I need to incur this dismantling cost, right? So at the end of the initial recognition, this present value of dismantling cost should be included in the cost of the asset. So but at the end of the old plant, or at the end of the old plant life, what will happen? This present value of the dismantling cost becomes the dismantling cost. Got it? For example, if I have included 10,000 rupees, this is the present value of the dismantling cost. This 10,000 becomes 30,000. This 10,000 becomes 30,000 at the end of the life period. How it becomes 30,000? So currently I need to pay 10,000 rupees, but I am not paying today this 10,000 rupees. I need to increase it by adding the interest factor. At the end of the life of the whole plan, it becomes the 30,000. It becomes 30,000. Now what will happen? So here they forgot to include the no dismantling cost was capitalized for the whole plan. What will happen? No dismantling cost was capitalized for the whole plan. Now I need to, first thing, now I need to increase the whole plant value by adding this dismantling cost. What is the value of the whole plant? Here they haven't specifically mentioned about the carrying value of the whole plant, but the whole site was dismantled at a cost of 8. So I need to pass the journal entry. I need to increase the whole plant value. Tell me the journal entry. Whole plant account, debit to dismantling cost. What is the dismantling cost? 8,000 rupees. 8,000. So what I did here, I have included cost, which cost? Dismantling cost. But generally, to the whole plant or whatever it is, plant and machinery, I need to include the present value of the dismantling cost, right? But what I did here, I included the entire dismantling cost. Why? Because if it is initial recognition, if you are standing on the initial date, I should include the present value of the dismantling cost. But here they forgot to include the present value of the dismantling cost. They are on the date of at the end of the useful life of the whole plant. So now I should include the entire dismantling cost today. So I should increase the whole plant by 8,000 rupees. First thing. Second thing, why I am adding this dismantling cost? It's an expenditure, right? Second thing, scrap from the whole site was sold 1,000 rupees. Because of this scrap, after dismantling, some scrap is occurred. So by selling this scrap, what is the amount I got? 1,000 rupees. So then what is the net expenditure here? Generally dismantling cost is 8,000 rupees, but 1,000 rupees revenue I have generated because of selling of this dismantling waste. Then what is the net dismantling cost? 7,000 rupees. Usually I should include this 7,000 rupees, but initially I have included 1,000 rupees, so 8,000 rupees. So this whole plant has increased by 8,000. Now what I do? Dismantling cost account debit to 1,000 rupees to whole plant. Or write it as a sale of scrap. Okay. From the dismantling cost, sale of scrap should be reduced. The net figure is 7,000. Or if you wanted to pass the consolidated journal entry, you can pass whole plant account debit to dismantling cost. What is my net dismantling cost? Net dismantling cost equal to 8,000 minus 1,000. So 7,000. Increase the entire whole plant by 7,000. Then, but with this information, I don't know what is the carrying value of the whole plant. Okay, here what happened? I am just exchanging my whole plant by acquiring the new plant. So what is the required information here? What information I need to get? I need the carrying amount, because to find out the profit or loss after recognition. So let's see, after going into the problem, so I need to search for the carrying amount of the whole plant also. Then new site was constructed at a cost of 48,000. Here I am purchasing a new plant. For installing this new plant, I have incurred the new site construction expenses. What is the new site cost? 48,000. And the supplier of the new plant agreed to take away the whole plant at a fair value of 1,26,000. And what is the fair value of the whole plant? 1,26,000. What is the new plant price? And the carrying amount of the whole plant is 1 lakh rupees. Now, what is the carrying amount of the whole plant? Exactly, 1,07,000. So before, the carrying amount of the whole plant is 1 lakh rupees. Now I passed one extra journal entry, right? After passing this journal entry, my whole plant carrying amount becomes 1,07,000. So carrying amount of whole plant equal to, initially it is 1 lakh, but after passing this journal entry it becomes 7,000, total 1,07,000. Then what is the other information? Fair value of whole plant. What is the fair value of the whole plant? So what is the fair value of the whole plant? 1,26,000. So he valued our whole plant at 1,26,000. And what is the profit? 19,000. Profit on sale of whole plant. Why I am calculating profit here itself? Because it is an exchange of asset. Here what is the fair value of the whole plant? 1,26,000. Generally its value is 1,07,000. That is going to shown in my books. For the 1,07,000 value of the asset, he is offering 1,26,000 rupees. Okay, then I need to find out the profit, because this profit element should be included in the journal entry. Generally, for acquiring the new asset, what is the recorded value? For new asset, what is the recorded value? Fair value of the asset given up. What is my fair value of the asset? So I should record the new asset at 1,26,000. So new asset comes with the value of 1,26,000, but that old asset goes out at 1,07,000 only. Remaining balance is the profit, right? So that's why I am finding out the profit element at here itself. What is the profit? Tell me. 19,000. Then Let's go to the other information also. The present value estimate of dismantling site was 16,000. So the present value of the dismantling cost is 16,000 with respect to the new plant. Then wages paid for the installation of the plant was 4,000 and for the trial run 1,600. Freight paid is 8,000 rupees. What is the GST? 18% and the freight is 18%. So the GST paid for the plant is 18% and the freight also 18%. Then loss amounted to 40,000 rupees for the low capacity utilization of the plant after installation, and 10,000 rupees was paid as a cost of launching the product to be produced from the plant and recognize the asset value and pass the journal entry. So whatever is the new asset is there, right? New plant, what is the recognition value? At what amount that new plant should be recognized in our books? So whenever I have acquired the new plant, so at what amount I should initially recognize? Generally at cost. Generally at cost. Okay. Then second aspect is, if I acquire the new asset by exchange of another asset, the new asset should be recorded at the fair value of the asset given up. Third one in, what is the third one? I'm not asking about the third one. Generally, what is the third aspect? I bought one asset. Okay. Few amount is settled by exchange of another asset and few amount is settled by cash. Okay. These aspects are required for solving of this problem. Now what is the new plant is there, right? So what is the cost of the new plant? What is the cost of the new plant? At what amount I should recognize in my books of account? First thing, what is the new plant price? 3,20,000 rupees. So I should pay that 3,20,000 rupees to them. So purchase price 3,20,000 rupees. Okay, one aspect. Second thing, so forgot about the exchange. Okay, for some time forgot about the exchange. What is the purchase price? 3,20,000 rupees. Then tell me the other aspects. Dismantling. Before I need the order. So first one, I need to find out the purchase price. For the purchase price, is there any adjustments? Is there any discount, duties and taxes? No. After that, directly attributable cost. Tell me what are the directly attributable costs? Okay, wages paid, freight paid, trial and expenses. I need the order. So first one, what was the first one? New site was constructed at a cost of 48,000 rupees. This is the new site construction cost, right? This should be included in the cost because it is a directly attributable expenses. So one thing. Second thing, the present value of the dismantling cost, wages, freight, okay, trial run, then GST. It's a refundable taxes, so no need to. Then loss. What about loss? So it is after installation, so no. Then after that, 10,000 was paid as a cost of launching the product. It's not at all related with the plant, so this is also not. No. Tell me the amounts. New site cost is 48,000. New site cost. New site construction cost. 48,000. So after that, I am just following the question order. So what was the next element? Present value of dismantling cost. Present value of dismantling cost. What is the amount? 16,000. What is the next element? Wages 4,000. Wages 4,000 rupees. What is the trial run expenses? 1,600. Then freight 8,000 rupees. That's it, right? This is the cost elements. Then what is the total cost? 4 lakh. So this is the cost element. Out of this 3,20,000 rupees, I need to pay, right? This 3,20,000 rupees I should pay to the supplier. But out of this 3,20,000 rupees, 1,26,000 rupees paid by exchanging of the old plan. Okay. So I went to one mobile shop. Okay. So okay, sorry, I forgot my mobile. Okay, wait. 3,20,000 rupees, 48,000. 3,97,600. Okay, okay. So actually, I need to pay 3,20,000 rupees. All these are, ancillary expenses. All these expenses incurred for the installation of the plant or for bringing that new machinery to our premises. So, but for supplier, I need to pay 3,20,000. Out of this 3,20,000, 1,26,000 rupees is settled by exchange of old plant. Okay, but remaining amount cash, right? Remaining amount is cash. So I went to one mobile shop. So I want to exchange my old mobile. The old mobile, what he said is, so I will value your mobile at 20,000 rupees. What is the amount? 20,000. So I want the brand new mobile at a cost of 40,000 rupees. I should pay 40,000 to him for acquiring that new mobile. But what is my value of the mobile fixed by that supplier? 20,000. So I paid entire 40,000, 20,000 by exchanging of the new phone, remaining 20,000 by cash. So what is the remaining amount? 1,94,000 by cash. So new site construction cost is incurred through, 1 minute, listen to me. So I should incur the new construction site cost. How I am incurring? Incurring through cash. Present value of the dismantling cost, I am not incurred through the cash, shown it as a liability. 4,000 cash. Trial run expenses, cash. Freight, cash. Now I need to pass the journal entry. So new plant, okay, new plant account, debit. So first of all, I need to pass the separate journal entries. Okay, I exchanged my old asset, right? With respect to the old asset problem, I will first pass the journal entries. New plant account debit to, what is the new plant amount price? 3,20,000. But forget about that entire 3,20,000. Here let's go to our original ones. Exchange of old asset. What I am going to do here? I need to find out the fair value of the asset given up. What is the fair value of the asset given up? What is the fair value of the asset given up? 1,26,000 rupees. So, but this asset is not acquired by completely exchanging of old plant. I paid extra cash also. What is the cash amount? What is the paid amount? 1 lakh 94,000. Now what is the total here? 3,20,000. So new plant equal to old plant. What is the amount? 1,07,000. What is the profit on the old plant? Profit on sale of old plant 19,000. So if I included both amounts 1 lakh, so I acquired a new plant by exchanging of the old plant. So then, and after that cash. What is the cash amount? 1 lakh 94,000, right? Okay. So this is the journal entry. But I should record the new plant at a cost. Cost includes not only purchase price. So this is the purchase price actually. For giving clarity, I am passing the different journal entries, separate journal entries. So what is the second one? I need to increase the value of the new plant. New plant account debit to, so I don't know, first thing. Site construction cost. What is the amount? 48,000. Next, wages. What is the amount? 4,000. Next, trial run expenses. 16. Okay. Next, freight. 8,000. That's it. Did you miss anyone? Anything? Dismantling. Present value of dismantling cost. To present value of dismantling cost. What is the amount? Wait, I will check. Present value of the dismantling cost 16,000. Okay. Now include the every amount. 48,000 plus 4,000 plus 1,600. Okay. How much? 77,600. Generally, I should record my asset at purchase price plus other directly attributable expenses and present value of the dismantling cost. So what is the total amount? 3,97,600. And at what amount I have recorded my new asset? 3,20,000 plus 77,600. What is the total amount? So 3,20,000 plus 77,600. So this is only for understanding purpose. 1 minute. So whatever I have written down here is for only understanding purpose. Okay. For just for concept clarity. Okay. So here afterwards I will use the shortcut. So it's just for CC. Okay. But it is not exactly, if you want to solve the question, this is not the journal entry I am going to pass. What I am going to do? First thing, journal entries. First thing, I should record the asset at cost. Initially I should record the asset at cost. So what is the total cost amount? 3,97,600. So PPE, it's machinery, right? Old, new plant. So write it as a new plant. New plant account debit to What is the amount? 3,97,600. Okay. 2. This is the new plant. So what is my next journal entry? Old plant. 1,07,000. Next thing, profit on old plant. So whenever you are writing the journal entry, if there is a profit on old plant, write it immediately next to the old plant. So profit on old plant 19,000. Next thing, cash 1 lakh 1,94,000. Is it correct? So I paid 1,90,000 for the with respect to the purchasing, but with respect to the wages or construction cost, with respect to the wages, trial run expenses, freight, and what about this cash? I am recording debit aspect at 3,97,600. So I need the same amounts in the credit aspects. Now tell me the what is the total cash you have incurred with respect to this. Okay, don't cool. Okay. 1,94,000, 48,000 plus 4,000 plus 1,600 plus 2 lakh. That's it. Completed. Dismantling cost. Present value for the present value of the dismantling cost, we are not paid through the cash. It's we need to show it as a liability. So present value of dismantling cost. What is the value? 16,000. So this is the special aspect. There is a chance to forget this amount. Also we will face calculation of cash also, because all the time we have a keep in mind. So this is the 1,94,000 we paid through the cash. Not only this 194,000, remaining aspects also we have paid through the cash. This is the journal entry we should provide as per the answer. Okay, and this journal entry is given only for understanding purpose. So what is this total amount? 1,26,000. Okay. So by exchange of the old asset, what is the fair value of the old plant? 1,26,000. Okay, remaining amount paid to the cash. Okay, is it noted down? Then so let's look into the solution. How he is giving? So asset is recognized in the class machinery under a PPE as a non-current asset. So it's initially recognized at cost. Cost of construction 3,20,000, purchase price, cost of construction 48,000. Price 3,20,000, present value of dismantling, installation and trial run, freight, machinery at installation cost. Total 3,97,600. Then old machinery account debit to cash. Why we have incurred the cash? Dismantling of old side. Then again it is cash account debit to old machinery. Why? We are getting the income by selling of the scrap. Directly they are using the cash. Why? Because ultimately I read it as a dismantling cost, but dismantling cost account debit to cash. The next journal entry, he directly written down the cash, and it is for the purpose of with respect to the old machinery. So if it is a general expenses, what is the journal entry normally? Say expense account debit to cash account. But here these expenses are here he is capitalizing. Got it? So that's why he is increasing the old machinery. Why he is capitalizing this expenses now? Because he forgot to capitalize these expenses previously. Okay, so that's why I have included this dismantling cost now. So 8,000 is not the total dismantling cost. Out of 8,000, 1,000 rupees I am getting back as a sale of scrap. Then what is the net dismantling cost? 7,000 rupees. Very important thing, note points. Tell me the note points. I recorded everything from the, so I have taken all the values. What are the values I haven't taken into consideration? So loss amount and the low capacity utilization and 10,000. Okay. So this GST is there, right? Hmm? There is no need to write it as assumption. Generally GST is a refundable only. So what is the assumption point I need to write it here for the GST is ignore the GST accounting component. That's it. If I wanted to do it, I need to do input GST account, SGST as per debit account debit to cash account. So instead of doing that, what he did is he passed journal entry with respect to the GST? No. GST accounting has not been shown. So whenever if you are solving these kind of problems, just write it down as a GST accounting treatment has been ignored in this problem. Note it down that note. That's it. And you no need to pass the extra journal entries. It will save your time. Then what is the note points I need to provide here? Two note points. One thing is GST. Second thing is this loss and this loss. So 40,000 loss and 10,000 loss should be transferred to the P&L account. Should not be capitalized. Why? This 40,000 is incurred after the installation of the plant. And one more thing with respect to the capacity utilization. He mentioned the loss amounted 40,000 for low capacity utilization. I will give one example. So I incurred some expenditure. With respect to the plant. It's not there in books, but it's a general concept. So I incurred 50,000 rupees for the repairs and maintenance. Why I incurred repairs and maintenance towards the plant and machinery? Why I am incurring this 50,000 rupees expenditure? To maintain the capacity of the plant. Got it? So to produce the same amount of the goods every day, I have incurred this 50,000 rupees. Because of incurred this 50,000 rupees, the plant capacity is not at all increased. Why I am increasing? Why I am spending this amount? To maintain the plant capacity. Okay. Then second thing, I have incurred some repairs and maintenance expenses. Because of this repairs and maintenance expenses, my capacity of the plant is increased. The amount is 1 lakh rupees. Can I capitalize this 50,000 rupees? Can I include this 50,000 as a cost of the plant and machinery? No. Should be transferred to the. Then what about this 1 lakh rupees? We have to capitalize this. Why? Because I need to look at the capacity utilization. Whether it is because of this expenditure, the capacity of the plant is increased or not. If it is increased, even though this expenditure is incurred after the plant is put to use. What is our general rule? Generally, whatever the expenses incurred after the plant is put to use should be transferred to the P&L. This is the general rule. What is the exception to this rule? So if any repairs and maintenance or any expenses has incurred towards the plant and machinery for increase its capacity from its existing capacity, okay, because of this expenditure the capacity of the plant should be increased. If this expenditure this capacity has increased, then that expenses should be capitalized. Okay, first thing, note down the points. Loss of rupees 40,000. One more aspect is cost of launching new product. Cost of launching new product should be transferred to P&L account because these expenses incurred after plant put to use of it. No, after put to use of a plant. Okay, loss of 40,000 and cost of launching new product rupees 10,000. When this 10,000 rupees incurred, it has been just incurred for launching a new product, but that product is produced out of this new plant. What are the plant is there? So with that new plant, I have produced this product. For launching this product, I have incurred expenditure. So they are saying it is somehow related to the plant, right? So can I include it in the cost of the plant? No, because this expenditure also incurred after the plant is ready to use, after put to use, after put to use. Then what is the second note point? GST accounting. GST accounting treatment is ignored. Next, write down the third point. It's not form the part of the answer, just for CC. What is the third point? Even though the expenditure incurred after put to use that expenditure should be capitalized if it is if such respective expenditure or such expenditure is enough, if such expenditure increases the existing capacity of a plant. Okay, so this is the third point, just for our understanding purpose. Why I have included is, here loss amounted to 40,000 rupees for the low capacity utilization of the plant after installation. What is the reason we have taken here? It is incurred after the installation, so that's why I should not be included in the cost. For example, if I have given any expenditure, even though if it is after installation, but it is incurred for the purpose of increasing the existing capacity of the plant, then it should be included to the cost of the asset. Okay, but it is not there in our syllabus, but even though if it is asked, you can able to write it. Next concept, asset acquired and credit basis. Asset acquired and credit basis. PPE acquired by EMI and PPE acquired by taking a loan from the bank. PPE should be recognized at cash purchase price. So I already told you the bike example. So I bought one bike for 1,50,000 rupees. Usually the bike price is 1,50,000, but I need to pay after 1 year, so I should pay 2 lakh rupees. Out of this 2 lakh rupees, I have paid 1,50,000 for the bike, and this 50,000 as a interest. So this interest portion should not be included in the cost of the asset. So that's why I should record the asset at cash price. PPE acquired by the EMI should be recorded at cash purchase price, and interest expenses should be recognized in profit or loss over the credit period but should not be added to the PPE. If the cash price is not given, then the PPE recognized at present value of cash outflows. Then PPE acquired by taking loans from the bank. First, let's discuss this one. So I went to the bike showroom and I bought one bike. So he said, you need to pay every month 50,000 rupees. He's saying EMI is 50,000 rupees. I need to pay up to 24 months. So what is my cash outflow? 50,000 into 24 months. So 12 lakh rupees. This is the information I got from the showroom owner. Can I record my bike at 12 lakh rupees now? No. Why? Because this entire amount is not paid for the purpose of acquiring the bike. This 12,000 rupees I am paying, but I am deferring it, right? So now at what amount I should record it? So I will give the information of interest rate 10%. Okay, wait. So it becomes difficult, right? I will make it easy. 1 minute. 4 months. 2 lakh rupees. Now tell me at what price I should record my bike in my books of accounts. Interest rate 10%. 10% per month. Okay. 10% per month. Now do it. Tell me at what amount I should record this equipment in my books of accounts. 1,50,000. So I should record it as a cash price. If the cash price is not available in the question, what I am going to do? So usually I need to record the asset at present value. So I need to record my asset at cash flows. First thing, there are two aspects. I should record my asset at cash outflows or cash inflows. Here with respect to the PPE, and what is the technique I am using for the recording of the asset? Cash outflows. So here I incurred cash outflow 2 lakh rupees, but not today. So after 1 month 50, 2 months 50, 3 months 50, 4 months 50. Now I need the present value. What I am going to do? So interest at the rate of 10%. Tell me the interest value. So do you know the time value of the chapter? Time value of money. So otherwise, if you know the time value of money, I will make it easy. So 1 to 4 months, what is the amount? 50,000. So here it is a period. Here it is cash flow. present value annuity factor at the rate of 10 percentage. 1 divided by 1.1, 1, 2, 3, 4. Put it on GT. I need the present value annuity factor, right? So tell me the amount. Sorry? 34,000. I need present value annuity factor. Wait, 1 divided by 1.1 equal to, press on the equal to for 4 times. 1, 2, 3, 4. It shows 0.6830. Put it on GT. Press on the GT. What you got? 3.169 or something, right? Write it as 170. Then what is the discounted cash flows? 50,000 into 3.170. 1,58,500. Okay. Then I should record my this plant at 1,58,500 initially. So in this example I have taken bike, right? So bike account debit to 1,58,500. Am I paying any cash today? There is no down payment. So in this example, there is no down payment. So this 1,58,500 is a liability, right? Generally, if I wanted to settle it down, I need to pay 1,58,500. But I am not settling it. So to creditors, 1,58,500 every year. Okay, tell me the journal entry for the second year. Tell me the journal entry for the second year. Interest account debit to creditors account. So 158,500 into 10 percentage. 15,850. 15,850. Interest account debit to creditors. Then. So my creditors increased by 15,850. Then what is the next journal entry? What is the amount I am paying? Okay. I will transfer to P&L first. P&L account debit to 15,850 divided by 15,850. What is the next journal entry? So at every month ending, I am paying 50,000 rupees. How much I am paying? 50,000 rupees. Now to cash, 50,000. What is the debit aspect? Creditor. Creditor is reducing, right? So I am just settling my liability. What is my total liability? So actually 1,58,500. So 1,58,500 plus 15,850 is the interest amount. What is the total liability? Tell me the total liability. 1,350,000. This is my total liability at the end of the first month. So out of this 174,350, I paid 50. So creditors is reduced by what is the amount? 50,000 rupees. Then tell me the journal entry for the next year. Second year again, I need to pass the same journal entry. Interest account debit to creditors. 4,000, 12,435. So how we got this amount? So total amount is 174,350. So at the end of the first year, 174,350 is the total liability. Out of this liability, I paid 50,000. What is my balance liability? 174,350 minus 50,000. So 124, 350 is I need to pay at the end of at the beginning of the second year. So what is my balance liability? 124, 350. On this amount, I need to calculate the interest amount. So 12,435. Whatever the calculation I did here, it will be useful in 4 chapters. Leases, financial instruments, okay, 115, and one more chapter is there, business combinations. In all these chapters, these calculations are very important. Okay. So are you feel comfortable while passing this journal entries? I am just purchasing the interest amounts. So whoever having the bike EMA, it will be easy. So whatever I am saying, they can appreciate the facts. So and that too, you should have some time value of money chapter. Have you completed your coaching of SFM? No, right? So if basic classes of SFM is completed, you can get the better clarity. Why I am doing this? They can explain the each and every aspect there. Okay. If you are feel any uncomfortable also, don't worry. You can get the better clarity once you got the started the classes of SFM. And that too, if you understand these concepts, this basic time value of money chapter is there, right? In financial management, that is enough. Just for understanding purpose, I am explaining it. Just. So what is the aspect here they use? If the cash price is not given, the PP is recognized at present value of cash outflows. What is the cash outflow here? 50,000, 50,000, 50,000. So present value of this cash outflows is 1,58,500. Okay. For to make this line understanding, I just given this example. Next thing, PPE acquired by taking loan from the bank. Interest cost on loan is taken to the profit and loss account. Generally, whatever the interest we are paying to the bank, that interest aspect is transferred to the P&L account. But if the asset is a qualifying asset, that AS 23, as per Ind AS 23, it is capitalized to the asset. So you can get the better clarity at Ind AS 23. Out of the total interest, few interest amount should be capitalized to the cost of the asset. So there are a lot of conditions to capitalize the cost of the asset. You have AS 16, right? Borrowing cost. So if you have the knowledge about the borrowing cost, it will easy. So I will explain this point at Ind AS 23. But generally, interest amount on the interest on loan amount taken for the purpose of acquiring a plant should be transferred to the P&L. But in some special cases, it should be added to the cost of the asset. Next aspect is 1 minute, major inspection and overhaul. So when each major inspection is performed, its cost is recognized in PPE. So there is some inspection expenses and overhauling expenses which are mandatory, okay, which are mandatory for few plants and equipments. So that expenditure should be recognized only if recognition criteria are met, and any remaining carrying amount of previous inspection is de-recognized. So major inspection and overhaul, I will explain you with example. I purchased one aeroplane. Okay. What is the price of the aeroplane? Okay. Okay, 1,000 crores. So I purchased this aeroplane for 1,000 crores. And after purchasing it, I should incur some expenses, right? So I should capitalize all the expenses incurred with respect to the aeroplane to bringing the aeroplane to the condition and location as intended by management. So that is the definition. So other expenses is also there. 200 crores. Okay. So out of this 200 crores, 100 crores is with respect to inspection. Okay. This 100 crores is incurred with respect to inspection. Okay. Aeroplane, right? We need some special inspection expenses. So for that inspection expenses, I have incurred this 100 crore rupees. But the rule is, okay, there is some special provision or special rule in the aviation department. So this inspection should be incurred for every 3 years. Okay, for every 3 years. This is the 100 crores, right? So remaining amount is 1100 crores. Remaining amount is 1100 crores. So I just divided this entire 1200 crores into two parts. What is the useful life of the aeroplane? The useful life of the aeroplane is 5 years. Okay. So I incur 1100 crores, right? This 1100 crores I should incur again after 5 years. So this 1100 crores expenditure providing the economic benefits to the entity up to 5 years. After 5 years I should incur it again. I should incur the purchase price of 1000 crores and I should incur the as well as expenses. Okay. But what about this 100 crores? Is this 100 crores gives the economic benefits up to 5 years? No. Only up to 3 years. So what is my general aspect? I should capitalize the entire expenses and entire purchase price. So that's why I included. So total 1200 crores. But out of this 1200 crores, what is the useful life of this 1200 crores? So it can be divided into 1100 crores and 100 crores. So it is 5 years and it is 3 years. Sir, why you are dividing it? What is the purpose of dividing the entire expenditure? Depends on their useful lives. For calculation of depreciation. Tell me the formula for depreciation. I need the formula for depreciation. Cost minus. You should ask me, sir, are you asking, sir, you are asking the depreciation formula, right? It's under which method? There are a lot of methods. So currently, I need formula for depreciation under SLM method. Now tell me, cost minus salvage value divided by, so okay, useful life. This is the formula. But here for the calculation of the depreciation, I need the useful life. What is the cost amount here? Let's say 1200 crores. Have taken 1200 crores. Salvage value is 0. What about the useful life? There are two useful lives. With respect to the 1100 crores, 5 years. With respect to the 100 crores, 3 years. Sir, what is the useful life? Useful life means, so whatever is the asset we have purchased, it gives the economic benefits to the entity to the particular period of time. So this 1100 crores expenditures gives the economic benefits to the company up to 5 years. So as per the matching concept, okay, as per the matching concept, I should recognize the expenditure with respect to the revenue. So whatever the revenue I am recognizing in my books, that respective expenditure also recognized in my books. Here, what is the purpose of providing depreciation? I am providing the depreciation, right? So what is the purpose of providing depreciation? So, okay, exactly. First thing is to purchase this asset in the future again. So that's why out of profits, I am taking some profits, setting aside for the purchase of this aeroplane in the future. Second aspect is by using this aeroplane, what you are going to do? You are generating revenues. So for generating revenue, I have incurred 1200 crores. Got it? For generating revenue, I have incurred this 1200 crores. So you have incurred you have generating the revenue for 5 years. So the revenue is 5 years. But I should record my revenues and my expenses year basis. Okay. So this year I have incurred the revenue of 5 crores. Now for earning this 5 crores, I record the expenditures, right? For earning this 5 crores, I should record the how much expenditures? Got it? So that's why out of this 1200 crores gives the benefits total. 1 minute, I will write it down. What is my total expenditure? 1200 crores. What is my 5 years revenue? 10,000 crores. This is my 5 years expenditure. Okay, listen to carefully. This is my 5 years revenue. Okay, now I have earned a revenue of 2000 crores year 1. Okay, year 1, what is the amount? 2000 crores. Okay. For earning 10,000 crores, I incurred a expenditure of 1200 crores. For earning a 2000 crores, what is the expenditure? So 1200 CR into 2000 divided by 10,000. What is the amount? 270 crores? 240. 240 crores. So I should record this 240 crores. Okay. Then yearly, currently I should record this 240 crores. Here I allocated this expenditure based on revenues. But in practical scenarios, can I know this amount? I don't know what is the amount here. So I don't know how much I am going to earn in the future. So that's why I cannot use these amounts. So what is the available information here? Here 5 years is available. This is the 5 years income. This is 1 year income. So for 5 years expenditure 1200 crores. For 1 year, how much expenditure should be recorded? So 1200 crore into 1 by 5. 240. Okay. This is the one of the purpose of providing depreciation, to match the revenue. Okay. To match the revenue, to earning this revenue, what are the expenditures incurred? So to earn this 2000 crores revenue, I incurred 240 crores expenditure. Okay, so I need to provide this expenditure in my books of account. For providing this expenditure in my books, there is a formula. What is the formula I am using? Here I am using the useful life. But here the problem is for the entire 1200 crores, not providing the economic benefits up to 5 years. Okay, out of 1200 crores, 1100 crores provide the economic benefits up to 5 years, and remaining 100 crores provide the economic benefits up to 3 years. Okay, so now what I am going to do? I need to provide the depreciation for 1100 crores up to 5 years. What is the amount? Remaining 100 crores, 33.33. Okay. So after 3 years, okay, after completion of 3 years, what will happen? I need to incur this inspection expenses again. Then tell me the journal entry. inspection account, sorry, inspection expenses. What is the amount here? 100 crores to cash account. Then tell me the next journal entry. Tell me the next journal entry. Inspection account debit, inspection expenses account debit to cash account. So at the end of third year, I should incur inspection expenses again, right? So I need to give my plane for the inspection. For that inspection expenses, I should incur the 100 crores expenses. So I need to pass the journal entry. What is the journal entry? Inspection expenses account debit to cash account. Then no. I'm just asking. These expenses should be transferred to P&L, right? So each and every expenses, there are two ways. One should be capitalized or other should be transferred to P&L. So my point is whether I should capitalize these expenses or I can transfer to the P&L. Capitalize. Should be included to the cost of the aeroplane. So here aeroplane account debit to 100 crores to, so inspection expenses. Because of this inspection expenses, okay, so whether this inspection expenses increases the existing capacity of the plant, plane, no, before there are the flying capacity is 100, after inspection is it becomes 200, no, right? So what is our general rule? If the expenditure is incurred and that expenditure increases the existing capacity of the plant, then we should capitalize. That is the rule. Then what is the exception to this rule? If the inspection expenses is, any expenses is mandatory, okay, any expense is mandatory, if that expenditure is incurred, if it satisfies the recognition criteria of the PP. What is the recognition criteria? It should be giving economic benefits, probable future economic benefits will flow to the entity, and at the same time cost should be measured reliably. So 100 crores is the cost. Then what is the second element? Probable future economic benefits will flow to the entity. Economic benefits in the form of two. One thing, cash, economic benefits, okay, one in the form of increase in the cash flows. So coming of cash inflows are so increasing of cash flows. Second thing, decreasing of cash outflows, okay, so increasing of cash inflows, decreasing of cash outflows. Here because of this inspection expenses, what is the benefit here? I am not getting more cash flows, but here decreasing the cash outflows. In how? Generally if you are not doing this inspection, okay, that respective department will charge fines. So if you are operating the flight, you are getting the income, that's not a problem. If you are operating the flight without doing this inspection, the penalty charges is going to be 500 crores or something. Okay, this is the benefits we are getting. I'm just giving an example. It should not be exactly 500 crores, but what it is doing, it decreases the benefits or future consequences. Because of future consequences, what we are going to do, we need to incur cash outflows. Okay, so to reduce this or to avoid this cash outflows in the form of penalty, I incurred this inspection expenses. So it satisfies the recognition criteria and I should record this as an asset. For recording of an asset, what is the method I am following? How much cash outflows are going out of my pocket? What is the cash outflows? 100 crores. This aspect should be recorded as an asset. So that's why I have recorded or I have capitalized it to the cost of the aeroplane. Okay. This is the journal entry I should provide at the end of the, at the end of the third year. Next, cost of the replacement. Here it is I am talking about the inspection expenses. Same logic. Okay, instead of inspection, I will write it as one part. Some parts are there, right? For the entire plant, we need to replace some parts. Okay, we need to replace some parts periodically. So let's say another example with relate to replacement parts. So I bought one electrical car. The price of the electrical car is 50 lakhs. So what is the main component in the electrical vehicles? Batteries. Okay. So main component is the battery. It plays, okay. Then out of this 40 lakhs, I paid 35 lakhs for the rest of the car other than the battery. And for 15 lakhs is paid for battery. So rest of the car ki ఎంత పే చేసా 35 lakhs. Battery ki ఎంత పే చేసాం sorry. What is the amount I have paid for the battery? 15 lakhs. So why I have divided this? The entire 50 lakhs is divided into two components because the useful life is different. So the rest of the car useful life is 10 years. But I should replace the battery for every 5 years. Then what is the battery useful life? 5 years. Why I am dividing this my cost into two? Because it has different useful life. Why I am dividing it? Because for the calculation of, for providing of the depreciation, I need to provide the depreciation on the cost by using the useful life also. So I need cost as well as useful life. If for one cost, if it has two different useful life, I don't know which useful life need to taken for the calculation of depreciation. For the calculation of the depreciation, I need separate cost, I need separate useful life. So this 35 lakhs useful life is 10 years, this 15 lakh useful life is 15 years. So for the depreciation, what is the formula? Cost minus residual value divided by useful number of years. In the previous example, there is no residual values. So because it is an expenses, right? So there is no residual value, but this 15 lakhs, I have the residual value. Residual value of 1 lakh rupees. If I sold this battery, after one it gets exhausted with the usage of the car, so I will get 1 lakh rupees. Whatever equipments there in the battery, no? So I will get 1 lakh rupees then. Now tell me the journal entry at the end of the 5th year. Journal entry at the end of 5th year. What I am going to do? I need to de-recognize this battery amount, right? I need to de-recognize this battery amount for providing the depreciation. Of course, this battery is going to be de-recognized. The entire 15 lakhs is going to be de-recognized? No, because for providing of the depreciation, what is the depreciation per annum? Depreciation per annum equal to 15 minus 1 lakh minus 5 years. What is the amount? Sorry? 2.8 lakhs. Then what is the total depreciable amount? 14 lakhs. So what is the carrying amount? 15 lakhs. So I should record my asset at 15 lakhs, and I am de-recognizing asset to the extent of 14 lakh rupees. What is the remaining carrying value? 1 lakh rupees. Now I am going to purchase the new plant. Now what should I do? I should replace this battery, right? For replacing, what is the journal entry? New battery account. Let's say new battery price is 20 lakh rupees. New battery price should be 20 lakh rupees. Then to cash account 20 lakh. Then after this, what I am going to do? This new battery should increase the entire value of the car. Okay. For the calculation purpose only, or for the calculation of the depreciation purpose only, I just divided my entire cost. For the passing of the journal entries, I am not supposed to pass the separate journal entries. I am going to pass the journal entries like this. 1 minute, I will show you. 35 lakhs. Let's say 0 is the scrap value, 10 years. So 3.5 lakhs. What is the depreciation? Total depreciation 3.5 plus 2.8. 6.3. For the passing of the journal entries, what I am going to do? Depreciation account debit to car account. Okay. 6.3 lakhs, 6.3 lakhs. For the passing of the journal entries, I cannot differentiate. Okay. For the calculation of this 6.3 lakhs, just I differentiated for the calculation purpose, not for accounting purpose. Okay. Here what I am going to do? I am adding the 20 lakh rupees for the entire asset. So that's why new battery account debit to cash account, car account debit to new battery account. 20 lakh rupees, 20 lakh rupees. Then what about this 1 lakh rupees? It is still showing it my books, right? So it should be derecognized. It should be derecognized. So when so coming here, cost of the new part is recognized to the carrying amount of the PPE. You need to understand what is the carrying amount of the PPE, and if it meets the recognition criteria as per the topic 3. What is the recognition criteria? Probable future economic inflows, and at the same cost should be measured reliably. Then carrying amount of the old part is derecognized from the PPE. Okay. Whatever the 1 lakh rupees is there, right, should be derecognized from the PPE. Okay. How you are going to derecognize it? Normally we need to sell it. What is the journal entry? Cash account debit to old battery. But I am not supposed to write it as a old battery. What I am going to write? Car. Cash account debit to 1 lakh rupees to car account. So nowhere around I will not supposed to use the battery account. All the time I routed through the car account only. So here also, what is the, for understanding purpose only, I use the new battery. But what is the journal entry for this? Car account debit to cash account 20 lakhs, 20 lakhs. For the depreciation purpose, I will separately calculate on depreciation on this 20 lakhs. Only for calculation purpose, not for accounting purpose. Understand? So that's all. We will solve the remaining sums tomorrow. So we have the clarity regarding the depreciation as well as the inspection and as well as spare parts. Okay. So we cannot do the same thing for all the parts. Listen, only for the major parts only. So if it plays a crucial role or it consider the substantial amount of the machinery, then we will follow this accounting treatment. Okay. So good morning everyone. So we have discussed the concept of component accounting yesterday. So component accounting means we need to provide the separate depreciation accounting treatment for different parts in one machinery. Okay. So major inspection overhaul is the one concept, and cost of replacement. Both are the behind basis. So whatever the basis behind these two concepts is the same. Okay. So whatever the expenditure incurred, that a specific expenditure gives, okay, different economic benefits. in different time zones when compared with the main machinery. Okay, so in machinery there are lot of parts, so some part or some expenditure gives the economic benefits in different time frames than the main part. So after that, let's see the depreciation methods. So how many methods are there? There are three methods for providing of the depreciation. There are three methods mainly. First method is straight line method. The second method is written down value method. WDV. Number of units production method. Okay. So out of these three methods, the most important method is straight line method. So straight line method is going to be used for solving of all the problems, not only with respect to the Ind AS 16 but also with Ind AS 36 impairment of assets. Okay. So the depreciation aspects of the Ind AS 16 is not only related in the Ind AS 16 but also in Ind AS 36 impairment of assets. In that impairment of assets also, the method used for the depreciation is straight line method. So let's see the how to calculate the depreciation under each different method. Depreciation as per straight line method. Carrying amount. So 1 minute. For just understanding purpose, I am writing it as a carrying amount. Okay. Once after few discussions, I will give you the exact formula. Okay. I will give the exact formula. What carrying amount? Okay. Opening carrying amount or closing carrying amount. So closing carrying amount after impairment or before impairment. So closing carrying amount after revaluation or before revaluation. So what is the exact carrying amount that can be used in the depreciation formula? But for so after discussion of few aspects you can get the clarity. So before going into that, for understanding purpose only, I am writing it as a carrying amount. Okay. So carrying amount. So please write opening carrying amount. Okay. For calculation of the depreciation, I need to provide the depreciation on opening carrying amount minus expected residual value. Divided by, tell me the denominator factor. Useful life. Write it as a remaining expected useful life. Okay. Don't write useful life, write remaining expected useful life. So the residual value and useful lives, we don't know the exactly. So both are expectations. So this is my expected residual value and this is my expected useful life. Okay, sometimes these estimations might be revised. Okay, so that's why I write it as a remaining expected useful life, and here expected residual value. Next point, depreciation as per written on value method equal to opening carrying amount into percentage. They are going to give the specific percentage. So in income tax rates, there are depreciation rates, right? So 15% on the plant and machinery means we need to calculate the 15% on the opening carrying amount. Okay. Depreciation as per number of units method equal to so here the formula is for the total carrying amount total lifetime production. Okay. For annual life production, sorry, for the annual production, how much is the carrying amount? This carrying amount should be provided as the depreciation. Okay. So carrying amount divided by total life production. Okay. So also this is a total carrying amount. So total carrying amount divided by total life production into annual production. So for our exam purpose, these two methods are irrelevant. Okay. Mainly the entire focus is on straight line method only. Okay. So just for understanding purpose, I have given the formulas. That's it. You no need to go through it. Just your main aspect should be focused on straight line method formula. So what is the straight line method formula for providing of the depreciation? Opening carrying amount minus expected residual value divided by remaining expected useful life. We have learned the aspects of initial recognition. How initially recognize the asset in our books. After that, providing of depreciation. Right. After what we are going to do? After recording in our books, I need to provide the depreciation. For the depreciation, for providing of depreciation, there are three methods. So SLM, return on value, and number of units method. Out of these three methods, the most usage method is straight line method. So for the calculation of the straight line method depreciation, I need the elements of useful life and expected residual value. Useful life for this carrying amount. Okay. So for the calculation of the useful life, I need to give this useful life for the specific carrying amount. But here the problem is for the entire carrying amounts is divided into two parts. Okay. One of the part carrying amount is has different useful life, other component has different useful life. In this case, I need to find out the depreciation for each component separately. Okay. And after that, what will happen? I need to value the asset, right? So and every year end, I need to mention the amount, right? So I am just talking about the initial recognition at cost. Then what about subsequent remeasurement? Subsequent remeasurement means at every balance sheet date, I need to look at the financial position of the company, right? So at that time, is that so? 1 minute here. So when I should use this formula? I am calculating the depreciation on opening carrying amount, right? And that too expected residual value and expected useful life. These expectations might be revised, right? So all these are expectations. So I need to check these expectations on every year ending, whether these expectations are remain to be same or are we need to change anything. Okay. And one more thing, these whatever the amount I have recorded in my books, is it really represent that value? If I go for the market, is it really gives such value to my company? I need to check all the aspects. So for the subsequent measurement means at every year balance sheet date, how to account this PPE in my books of accounts. We have learnt about the initial recognition. After that, every year balance sheet date, how to record this PPE or how to account for it or whatever the changes I need to give to these PPE, all these aspects I need to learn. Okay. For the subsequent measurement, there are two methods. For the valuation of the PPE, there are two methods. What are they? Cost model and revaluation model. Subsequent measurement. Cost model and revaluation model. If you are following the cost model, you no need to change the carrying amount of the asset. But if you are following the revaluation model, you need to compare the carrying amount with the fair value of the asset. You need to compare the carrying amount of the asset. Carrying amount means the recorded value. The carrying amount is the amount at which value you are recording that respective financial element in your books of accounts. That is called carrying amount. Okay. So you need to compare your carrying amount with the fair value of that respective asset. Okay. And we need to make changes according to the fair values of the asset. So that is called revaluation model. If you are following the revaluation model for the valuation of the assets for the subsequent measurement, you need to make adjustments with respect to the fair value of the asset. If you are following the cost model, you no need to make any changes to the carrying amount of your asset. So you are recording at cost, right? On that cost, we need to provide the depreciation. That's it. No need to make any changes. But if you are following the revaluation model, what we are going to do, we will discuss it later. Before going into that, let's complete the problem of illustration 3. Okay, it covers the aspects of component accounting and depreciation. After solving the problem on these two aspects, then we will discuss about the what is the revaluation model and what is the cost model. So A Limited purchased an aircraft at a price of 6,300 crores. What is the purchase price? 300 crores. This is the cost. Currently, no information is available with respect to the other expenses, right? So what is my cost? 6,300 crores. And that requires the major inspection and overhauling for every 4 years. So this aircraft requires some major inspection overhauling expenses for every 4 years. The estimated life of the aircraft is 15 years. and the aircraft was purchased in 2015. So what is the date of purchase? 2015. What is the amount of the purchase? 6,300. And what is the useful life of the aircraft? 15 years. Then major inspection and overhauling made in 2019 at a cost of 100 crores. Okay. So what is the total cost? 6,300 crores. And what is saying? I need to incur the expenses for every 4 years. For every 4 years. And if these expenses are satisfies the recognition criteria of the PPE, then we should capitalize this expenditure. Okay, even though it is incurred after the asset put to use. Actually, I am using that aircraft, right? But this expenditure is incurred after the asset is put to use. Even though this expenditure is spent after the put to use, this expenditure should be capitalized. Why? Because this is mandatory expenditure. Okay, and it satisfies the recognition criteria of the PPE. These two elements. So what is the amount of this expenditure? 100 crores. What is the amount of the expenditure? 100 crores. What does it mean? This 100 crores gives the economic benefits for a period of 4 years. We need to do the major inspection and overhauling expenses for every 4 years, right? So if I spend expenditure of 100 crores today, I need to incur this expenditure again after 4 years. Then coming to 6,000 crores, 6,300 crores. Today I bought a flight at a cost of 6,300 crores. When I should bought this flight again? After 15 years. So this 3,000, sorry, this 6,300 crores gives the economic benefits for a period of 15 years. But this 100 crores gives the economic benefits for a period of 4 years. So for providing of the depreciation, I need to follow the component accounting here. So out of the total carrying amounts, so different carrying amounts have different useful life. But the entire machinery is same, right? I have only one aircraft. In books of accounts, I cannot show aircraft and overhauling expenses. I cannot show like this, right? So I need to show aircraft as a single balance. For the calculation purpose only, this method is following. Okay, I'm just calculating the depreciation. Okay, I'm just calculating the depreciation differently for each component. For the passing of journal entry, I not show this differentiation in my journal entry. I'm just showing this differentiation only my calculation. Okay. Then in 2020, A Limited further incurred repairs and maintenance in the engine to raise its capacity by 10%, amounting to 70%. Generally, repairs and maintenance expenses should be transferred to P&L. But here, whatever the repairs and maintenance is incurred, what it serves the purpose? What what purpose it serves? It increases the capacity of the plant. So, if any expenditure increases its previous existing capacity, that expenditure should be capitalized. Then, one worn out component in the wing was replaced in 2020 at a cost of 80 crores. So one old component is there. We need to replace that old component at a cost of 80 crores. Then this 80 crores should be, I have incurred 80 crores, right? This 80 crores should be included to the cost of the asset. Then what is the carrying amount of the old component? 30 crores. What is the carrying amount of the old component? 30 crores. Then by selling this old component, the scrap is realized. What is the scrap amount? 12 crores. Then find the amount to be recognized as an expenses and as an asset in 2019 and 2020 and show the carrying amount of the aircraft. Show the carrying amount. And the aircraft residual value is estimated to be 300 crores. So what are the informations given in the question? So aircraft cost is given, aircraft useful life is given, aircraft Residual value is also given. So why all three informations are giving? For providing of depreciation. So if you know the depreciation formula, so he has giving the all the inputs useful for the calculation of the depreciation. Why you need to calculate the depreciation? Because I need to do the accounting treatment for 2 years, 2019 and 2020. So for the completion of the entire year accounting treatment with respect to the one asset, I need to provide depreciation. In 2018, okay, what is the depreciation amount? When it has purchased, sorry, 2015, okay, in 2015, what is the depreciation amount? What is the formula for the depreciation? Opening carrying amount minus, okay. Then what is the opening carrying amount here? So I have purchased this asset at in 2015. Assumed it is 1 for 2015. Okay. Assumed it is 1 for 2015. So I have purchased the asset at 6,300 crores cost. So initially I should recognize the asset at cost. What is the cost? 6,300 crores. What is meant by carrying amount? Carrying amount means the recorded value of the asset. What is the recorded value at the opening period? 6,300. So this is the opening carrying amount, 6,300 crores minus expected residual value 300 divided by expected useful life 15 years. Okay. Then what is the depreciation amount? 400. Okay. Then next transaction is happened in 2019. Okay. So major inspection overhauling expenses incurred in 2019. Okay. So assume it is 1 for 2019. So now what is the useful life of this expenditure? 4 years. So this 3000 expenditure 15 years. So I need to provide the different depreciation amounts. But I should include this 100 crores to the cost of the asset. So that is the problem here. So again coming to 2019. What is the depreciation for 2019? Illustration number 3 or 4? So 3. Illustration number 3, 2015, right? So simply I need the value of the carrying amount, sorry, I need the value of the machinery here, aircraft on 2015. So with respect to the 2015, on 1/4/2015, what is the carrying amount of the aircraft? 6,300 crores, because initially asset should be recognized at cost. So initially recognized at 6,300 crores. Now I need to provide the depreciation. Okay. So what is the depreciation amount? Depreciation for 15. Okay. So 6,300 crores minus 300 divided by 15 years. So what is the value here? 400 crores. So depreciation means we need to deduct from the carrying amount of the asset. So depreciation is a method of reducing the value of the asset year by year, and this reducing value should be transferred to the P&L as an expenses. That is the agenda. So this 400 should be reduced. Then what is the carrying amount at the end of the 2015? So here they are giving years wise, right? Note it as a, take it as a calendar year. Okay. 1/1/2015 31st 12 2015. Okay. What is the value here? 6300 minus 400, 5900. Now I need the carrying amount of the aircraft. Okay, carrying amount of the aircraft. What is the carrying amount? Originally 6300 crores. I need the carrying amount of this 6300 crores as on 2019. 2019 means 1 2019. What is the carrying amount of the aircraft? Sorry, 4700. So I need to provide the depreciation for 15, 16, 17 and 18. 4 years, right? So 1 minute. 1 2015. I bought it for 6300 crores. So I need to provide the depreciation for 4 years. Then what is the formula here? Same 6300 minus 300 divided by 15. So this is annual depreciation formula. I need the depreciation for 4 years into 4. Then what is the accumulated depreciation for 4 years? 16. So then I got the value on 31st 12 2019 or 18. 18. Okay, 15, 16, 17, 18. Okay, 2018. 31st 12 2018 is nothing but 1st January 2019. 4700 crores. So this is the value of these 6300 crores. Okay. Apart from this original, 1 minute. Apart from this original aircraft expenditure, I have incurred the expenditure of 100 crores. Okay. So now what happened? Expenditure incurred. Expenditure incurred on 1/4/2019. Okay. What is the amount? 100 crores. Here my point is whether this 100 crores should be capitalized or transferred to P&L. Capitalized. Okay. So this expenditure is mandatory for the maintaining of this aircraft should be capitalized. So capitalized means should be included to the cost of the asset. What is the total carrying amount of the asset now? 4800 crores. But here my point is out of this 4800 crores, 4700 crores has different useful life and this 100 crores has different useful life. Okay. Now I need to provide the depreciation for 2019 minus depreciation for 2019. First we will calculate the depreciation on 4700 crores. Main component. So depreciation on main component. Next depreciation on treat it as an additional component. Of course it is not a component, it is an expenditure, but treat it as a additional component. Depreciation on additional component. Okay. Then what is the value? What is the opening carrying amount? For the calculation of the depreciation, the formula is the opening carrying amount. Then my opening carrying amount is 4700 crores. Right? Minus what is the expected residual value? 300. I am standing on the 1/4/2019, right? This calculation is made on, so for the year 2019. So what is the expected residual value? 300 crores. Is there any revision in the residual value? No. So that's why 300 crores. So if I decided to revise the expected residual value as on 1/4/2019, then that revised residual value should be taken into account for the calculation of the depreciation for 2019. But here there is no change in the residual value, 300 crores. Then what is the remaining expected useful life? Sorry? 11 years. So out of 15 years, I already provided depreciation for 4 years. So remaining 11 years. Then tell me the amount. Sorry? 400 crores. Next, depreciation on additional component. What is the value? 100 crores. Is there any residual value? No, 0. Then what is the useful life? 4 years. 25, sorry. 25 crores. Okay. Then what is the total depreciation for 2019 on this? 425 crores. Then please tell me the journal entry. Tell me the journal entry. Depreciation to aircraft. Depreciation account debit to aircraft account. What is the value? 425 crores and 425 crores. So I am not passing the journal entry separately for each component. For the calculation purpose only, I treat it as a different components. Okay. But for providing of the depreciation, I will provide the total depreciation. So in my books of accounts, I will not reflect these type of calculations. Okay. For the calculation purpose only, they introduced the concept of component accounting. Okay. Then what is the carrying amount as on? Okay, P and L. We will transfer to the P and L. Okay. P and L account debit to depreciation account. Claps. Okay. Then, so I have the opening carrying amount. After that, I need to deduct the depreciation. Then I got the closing carrying amount. What is my closing carrying amount? What is the date? 31/12/2019. Sorry, 4,000 4,375 crores. Then let's see the other element. Then when will happen other expenditure? In 2020, A Limited further incurred repairs and maintenance expenses. Okay, A Limited further incurred repairs and maintenance expenses. As on 1/4/2020, right? So what is the total closing carrying amount? 4,375. So out of this 4,375, what is the main component and what is the additional component carrying values? Total out of 4,700 minus 400. 4,300 remaining 75. Okay. Then. So 31/12/2019 means it is nothing but 1/4/2020. So coming to 2020, what is my opening carrying amount? Opening carrying amount. What was the date? 1/4/2020. 4375 crores. So sorry. Okay, okay. 1/1 okay, okay, sorry. Okay, calendar year. So 1/1/2020. So on 1/1/2020, I have incurred further expenditure. So I have incurred further expenditure, repairs and maintenance. But these repairs and maintenance should increases the existing capacity, so I can capitalize this amount. What is meant by capitalization? Should be added to the cost of the asset. Repairs and maintenance. How much? 100 crores, right? 80 crores. Okay. Sorry, 80 crores. Then what is the total opening carrying amount? 4375 plus 80. 4455 crores. Hmm? Repairs and maintenance? 70 crores. Okay, okay. Then who said 80 crores? Okay, sorry. So this is 70 crores. Now tell me the amount. Wait. 4375 plus 70. So this is the opening carrying amount of the aircraft. Now I have a doubt. So for this, so I have incurred additional expenditure 100 crores. This 100 crores useful life is 4 years. Then what is the useful life of this repairs and maintenance 70 crores? Huh? Question. Okay, okay. Sorry. Look at the question and let me know the what is the useful life of this repairs and maintenance expenses. Exactly. They are not provided separately. So I assumed it provides the economic benefits to the period of remaining useful life of the asset. Okay. Not 15 years. Got it. So it should be included to the total value of the main component and we can provide the depreciation. There is no need to differentiate it while providing the depreciation. Why? It has the same useful lives. This 70 crores and this 4300 crores has the same useful lives. So there is no need to differentiate. So for the calculation of the depreciation, what is the additional component? 75. What is the main component? Remaining amount is the main component. 4370. Got it. So I need to provide the depreciation for 2020. Depreciation for 2020. So is there any expenditure incurred in 2020? Just asking. Apart from this, am I incurred any other expenditures? In 2020 itself, one worn out component in the wing was replaced at a cost of 80 crores. So before providing depreciation, I need to give the accounting treatment for this 80 crores also. And the carrying amount of the old component was 30 crores. So already one old component is there. That old component book value is 30 crores. and we have taken out this old component and we have introduced the new component. The value of the new component is 80 crores. So before providing depreciation, first I need to remove the old component from the total aircraft. Okay. Then for the accounting purpose, I need to show this activity in my books of accounts, right? So carrying amount of old component. What is the value? 30 crores. Then I have introduced one new component. So what is the value of that new component? 80 crores. So the price of the new component, for example, the price of the new component is 80 crores and I have incurred 5 crore rupees to bring that new component to the present area. And what is the total amount I should include it in the total cost of the asset? The price of the new component is 80 crores, but I have incurred 5 crores to bring this new component to the aircraft. And what is the total amount I should capitalize? 85 crores. Okay, so this new component is also kind of asset and it satisfies the recognition criteria of the PPE. So I should include the all, not only the purchase price expenditure but also the incidental expenditure also. But here not given in the question, for the example purpose I am giving. Then price of the new component is 80 crores. Is there any changes I need to make? No. Of course there is scrap realized is 12 crores, but it is nowhere related to the calculation of the cost of the asset. Then now tell me the what is the total opening carrying amount after giving such adjustments? 4,000. Okay. 4,495 crores. Then I have introduced the new component of 80 crore side. Then what is the useful life of this new component? It is as same as the as same as the main component. So out of this 4495, everything every remaining aspects are useful life is same except this additional component 75. Then this out of this 4495, additional component 75 has different useful life and remaining carrying amount of main part as 95 minus 75, 4420. Apart from this, is there any adjustments in the 2020? No. Then I can provide the depreciation. Minus depreciation for 2020. So carrying amount is 4420. What is the residual value? 300 by what is the remaining useful life? So just look at the before calculate mean the depreciation for the previous year. I am using 11 years here. So I can use 10 years. Already 1 year expired, right? So last year it is remaining expected useful life 11. Don't confuse. Just look at the previous year depreciation calculation useful life 11. Now it becomes 10. Hmm? Tell me. One minute, 1 minute. Life is not increasing by 10%. Its capacity is increased by 10%. Okay. So already there is an existing capacity. Because of incurring these expenditures, the existing capacity is increased by 10%. They are talking about the aircraft capacity. Now tell me the depreciation. 4420 minus 300 divided by 10. Tell me the value. 412. Then additional one, 75 minus 0 divided by 3 years. Of course, I can find out the 25 every year, I can do it. But for habituating this type of structure, I am just doing for each and every minute one. Okay. Then what is the total amount? 437. And what is my closing carrying amount as on 31st 12 2020? 437 crores. Okay, sorry. 437 is the depreciation, right? So opening carrying amount 4495 minus 437 is the depreciation. 4058 is the closing carrying amount. And coming to the answer. So what is the closing carrying amount? 4058. What is the closing carrying amount with respect to the 2019? 2019 closing carrying amount is 4375. Okay. And the depreciations. What are the depreciation values? 2019 425, 2015 400. Then what about 2020? 437. So here is the 437 is the depreciation value. Okay. So what they are asking? So show the carrying amounts. Okay. Just the what is the element of the question? He is just asking the carrying amounts. I am just showing the carrying amounts. Carrying amounts as on 4058. As on 2019, what is the 2019? 4700. Sorry. 4375. And what is the carrying amount as on 2015? 5900. So this element also we have shown in our calculation. No. So I need to provide the note points here. These note points are important. So depreciation at straight line for 15 years useful life, and major inspection and overhauling capitalized and depreciated at straight line for 4 years, and repairs and maintenance and replacement of old component depreciated at a straight line for residual value 10 years. So the remaining useful life is 10 years, and the full depreciation is charged in the year when it is recognized. It is charged. Okay. So if you want to add any point, so here scrap realized is there. Scrap realized is treated as a income, right? Just we are selling that scrap, we received the 12 crores. And what is the old component carrying amount? 30 crores. Now what is the journal entry? So this aspect is not asked in the question, but for understanding purpose we are doing it. So give me the journal entry for this removing of this 30 crores. Got it? Just for CC. JE for removing old component from my books, from books of accounts. Tell me the journal entry. Cash account. First thing, I need to remove the asset from my books of accounts. So for including it, I am doing the debit. For removing it, I need to do the credit aspect. So asset account. Here aircraft, right? The asset is the aircraft. Sorry, to aircraft. I cannot use the word component. Okay, for inclusion purpose also, I cannot use the word components. I am just doing it cash account debit to aircraft account. So for removing also, I need to reduce the value of the aircraft, right? Because one of the component is removing. Simply saying, I am just reducing the value of the value of the aircraft. So I should reduce the aircraft value. 30 crores. So I should remove the 30 crores value from this aircraft. So two aircraft 30 crores. Then what is the cash amount I have realized? Simply saying I just sold the 30 crores worth of one machinery at a value of 12 crores. Then what is the other debit aspect? Loss on sale of component. What is the value here? 18 crores. This loss on sale should be transferred to P&L account. Loss on sale 18 crores. So next one. So let's do the problem of illustration 14. Illustration 14. X Limited purchased a machine at a price of 1200 lakhs. What is the purchase price? What is the purchase price? 1200 lakhs. And it paid a freight of 40 and installation cost 80. So for the recognition of the asset, I should initially recognize that cost, right? So cost has three elements: list price, mean purchase price, directly attributable expenses, present value of dismantling cost. So please identify by the numbering, okay, all these aspects. These aspects comes under 1. It paid freight, so it comes under 2. Installation cost 2. Then IGST paid at 18%, we can ignore this. Okay. GST accounting treatment ignored in this problem. That's all. If you note down this note point, you no need to do the provide the accounting treatment for GST. Then that too IGST is a refundable taxes and duties. So you no need to include in the cost of the asset. And the share of general overhead ascertained for the trial run of the mission 30 lakhs. Tell me the accounting treatment. So 1, 2 or 3 or none of the above. 2. Okay. What is the 2? I need the name of the 2. Okay. Directly attributable expenses. What is the meaning of directly attributable expenses? I need the exact words. So here they use the word directly attributable expenses. Okay. It's not all the costs, it's all the direct costs. Okay. So do you remember the cost statement? So tell me the aspects. direct materials, direct labor, direct expenditure, prime cost. Prime cost plus indirect expenses. Okay. What is meant by indirect expenses? Mean, tell me the limits. Indirect expenses means overheads, right? So here what they are giving, they are using the word directly attributable expenses. It's like all the direct costs that are necessary to bring the asset to the present location and condition. What type of cost we should include it to the cost of asset? All direct costs. Okay. So whatever the direct cost incurred for the purpose of bringing this asset to the present location and condition. And coming to the question, here also we have incurred some expenses. Of course, it is a trial run expenses. Trial run expenses are incurred before the asset was put to use. So we can include it. But this trial run expenses, with respect to the trial run, there are expenses of general overhead. This is not trial run direct expenses, trial run indirect expenses. Okay. So with respect to the expenses, I should include only directly attributable expenses, not indirect expenses. Here overhead means direct or indirect. And that is a general overhead also. General expenses, we cannot, what is meant by general expenses? We cannot allocate these expenses to the particular item. Okay. Then these general expenses should be comes under 2? No. So then what is going to do with this amount? What is what you are going to do with this 30 lakhs? Just ignore it for the calculation of the cost of the asset. Transfer it to the, please tell me, transfer it to the P&L account. Then the labor cost under direct expenses for the trial run is 60 crores. What about the 60 lakhs? 1, 2 or 3? 2. It's a directly attributable expenses. It's a trial run expenses and that too labor cost and direct expenses. Both are directly attributable expenses. Then the mission has been put to use on 1/4/2019. So the mission has been put to use on 1/4/2019. Then estimated dismantling cost of the mission at the end of the useful life of 10 years is 400 lakhs. This comes under which point? See, here I am asking is, please classify these elements into 3 types of the cost: purchase price, directly attributable expenses, present value of the dismantling cost. It is comes under which point? Point number 3. Is it a dismantling cost or present value of the dismantling cost? Say just dismantling cost. I need to make the present value. So after 10 years, for doing present value, I need the discount rate 5%. So the present value of the estimated dismantling cost is 246. As given directly, you no need to worry. Then the mission requires major overhauling every 2 years at a cost of 26 lakhs. Okay. The mission requires major overhauling expenses for every 2 years at a cost of 26 lakhs. Then pass the journal entries and accounting treatment for the year 1920 and 2021. Now tell me what is the cost of the machinery. First, I should initially recognize the machinery. Then what is the cost of the machinery? You just calculate the cost of the machinery and let me know the answers. So this is the question 33. What is the cost of the asset as on 1/4/2019? Tell me one answer, one by one. 16? 26 lakhs. Anyone got different answer? 16, 27. Okay. Then what is the useful life of this 1626 lakhs? Hmm? 10 years. This entire 1626 lakhs value is 10 years. Hmm? So here he differentiated here itself. So total 1626. But out of this 1626, 26 is depreciated in 2 years. And remaining 1600 is depreciated in 10 years. So there is some ambiguity regarding with this illustration 3 and illustration 4. What he did in illustration 3? Initially he haven't classified. So when I have provided the depreciation, out of this 6300, he haven't differentiated between this overhauling expenses. What is the overhauling expenses? 100 crores. Okay. But for this overhauling, he mentioned the 26 lakhs. So why he has taken into consideration of this 26 lakh here, but why not here? Did you got my question? Here, for the calculation of the depreciation at initial stage itself, we haven't differentiated this 6300 between overhauling expenses and major. But coming to here in this question, at the initial stage itself, he provided the depreciation separately for 1600, separately for this 26. Why? Here. So he has given the information on 1/4/2019 about the overhauling expenses. What is the value of the overhauling expenses? 26 lakhs. Here I got the clarity of overhauling expenses as on 1/4/2019. Okay. But coming to this question, what is the purchase date of the aircraft? What is the purchase date of the aircraft? 2015. He has given the information. They have incurred the overhauling expenses in 2019 at a value of 100 crores. He has given the actual expenditure data. So in 2020, the actual overhauling expenses is 100 crores. But in 2015, are they give any information with respect to the expenditure? No, right? But I don't, then in that case, I don't know the what is the overhauling expenditure, right? Without knowing the overhauling expenditure, I cannot differentiate, right? That is the main difference. That's why I have included this problem also. The same aspect, right? You can easily solve this problem. Only two difficulties. First difficulty is general overhead, 30 lakhs. Whether I should transfer to the P&L or I should be added to the cost of the asset. And the second aspect is this 26 lakhs. The before problem, this 26 lakhs is depreciated from the date of actual expenditure. But here, this 26 lakhs, we need to provide the separate accounting treatment from the initial date. So that is the depreciation. So that is the difference between illustration 3 and 4. Illustration number 4. So here I need to start with one word. What was that? Initial cost. Okay. So for solving of each Ind AS 16, this cost related problem, so I should start with the all the direct costs incurred for the purpose of bringing the asset to the present location and condition as intended by management should be capitalized, or you can write it as a added to the cost of the asset, or added to cost of asset. Then next word is initially PPE is recognized at cost. Initially PPE is recognized at cost. Then you should start with the calculation. Particulars, notes, amount. And tell me the purchase price. What is the purchase price? 1200 lakhs. Then what is the next element? It paid freight 40. Freight next element is installation. What is the installation amount? 80 lakhs. Given 80 lakhs. Then what is the next element? General overhead ascertained for the trial run. Trial run, general overhead. Put it as note 1. Okay. Then give it a blank. Then next thing is labor cost and direct expenses for the trial run 60. Trial run direct expenses. What is the amount? 60 lakhs. Then machine has been put to use on 1/4/2019. Then third thing is the estimated dismantling cost 400 lakhs. But I need the present value of the dismantling cost. What is the present value? 246 lakhs. And what is the total cost? $1626 lakhs. This is the total cost of the PPE. So what are they have asked in the question? So they are asking the pass the journal entries and accounting treatment for the year 2019 and 2021. So this is the transaction happened on 1/4/2019 because the machinery is put to use on 1/4/2019. So on that date I am bringing the asset into the business. For to reflect this activity, I need to record it in my financial statements. Tell me the journal entry. Tell me the journal entry. So PPE account. Are there mentioned any name? Purchase a mission. So the PPE name is missionary. So missionary account debit to So look at the calculation and tell me the journal entry. Machinery account debit to, sorry, no need to provide each line item. Just tell me the next one. Machinery account debit to cash account. For purchasing this machinery, I'm just paying the cash, right? You no need to mention all this freight amount. If you mention the freight amount, what it will happen? Freight account debit to cash. What will happen? Usually, freight is transferred to the P&L account. When you have used the word freight, when you have utilized the word freight ledger in books of accounts, this freight ledger should be transferred to the P&L account generally. If you use that name in this journal entry, it should be transferred to the P&L, right? Got it? Then machinery account debit to cash account. So out of this 1626 lakhs, how much we paid through the cash? 13. Remaining present value of dismantling cost. What is the balance? 246 lakhs. So if I checking from here, so purchase price 1200 lakhs. It's paid through the cash. Freight, cash. Next installation, cash. Then trial run, direct expenses, cash. Then present value of dismantling cost. I am not paying this entire 246 lakhs today. I will pay in the future. So total 1380 to 46 lakhs. Then what is the second journal entry? So what is the second aspect? The first aspect is I need to find out the initial recognition value. Then second element is providing of depreciation. Providing of depreciation. Then calculation of depreciation. At the initial date itself, I know the overhauling expenses value. What is the overhauling expenses? 26 lakhs. Okay. So I assumed it. This 1626 lakhs included the overhauling expenses also. Okay. I assumed it. This 1626 lakhs included the 26 lakhs of overhauling expenses. If I have not assumed, what you are going to do? This 1626 again I need to include this and again 26 lakhs, right? So assumed it. Got it? So if you are not assuming this 26 lakhs is included in the this 1626 lakhs value, what I am going to do? I need to include again 26 lakhs to the value of 1626 lakhs. Okay. So out of this 1626 lakhs, 1600 lakhs useful life is, what is the useful life? 10 years. The mission, sorry. Yeah, 10 years only. The estimated dismantling cost of the mission at the end of its useful life. The mission useful life is 10 years. And what about remaining 26 lakh expenditure? It gives the economic benefits for a period of 2 years. Here my question is, why I am not doing the same accounting treatment with respect to the previous problem in the initial recognition? I am doing this at the time of initial recognition, right? But at the initial time recognition with respect to this 6300 crores, I haven't differentiated this 100 crores. What is the overhauling expenses in this case? 100 crores. Why? Because I don't know the overhauling expenses is 100 crores. It has given in the actual overhauling expenditures incurred in 2020. But until 2020, I don't know what is the amount of the overhauling expenditure, right? So in that case, I cannot provide the journal entry in 2015 itself. So that's why I haven't differentiated over there. But in this case, they are giving the information, the expected overhauling expenses is 26 lakhs. It haven't been incurred. They are not giving the information that this 26 lakhs is incurred. It has given the information that 26 lakhs is the overhauling expenses. So I assumed that this 1626 included the overhauling expenses of 26 lakhs. Assumed 26 lakhs included in the carrying value of machinery. So are they giving any information regarding residual value? No. So residual values. Now tell me the formula. Repeat the formula for the depreciation. Opening carrying value. What is the opening carrying amount? 0 minus 10 years. Remaining expected useful life. So 160 lakhs is the depreciation. For this one, 13 lakhs. Then what is the total depreciation? Now tell me the journal entry for depreciation. Depreciation account debit to machinery account. For providing of depreciation, I cannot show differently. Okay. I am going to show the entire depreciation amount. So 173 lakhs into 173 lakhs. Is there in another journal entry? Okay, or indirect expense is also there. So apart from that, okay, I will transfer it. Depreciation to P&L. I am talking about one important element. Okay, question. Sorry. Okay. GST should be ignored. You should write that note point. We will write it. Hmm? Journal entry. I'm just in note point. In answer itself, they are mentioning that GST accounting treatment is ignored. So that's why we are not providing it. Instead of writing the entire journal entry, one note point is enough, right? So that's why I'm not providing it. Anyhow, in initial problems I provided. I showed that how to pass the journal entry. But you no need to provide again and again. Dismantling cost. So we have provided the liability. So I need to provide the interest on that liability every year. What is the interest rate? 5%. Now tell me the interest account debit. So what is the present value of the dismantling cost? 246. What is the discount rate? 5% per annum. Then what is the value? 12 point. Interest account debit to present value of dismantling. Dismantling cost 12.3. So this depreciation should be transferred to P&L, as well as this interest also should be transferred to P&L. P&L account debit to depreciation. What is the value? 173 lakhs. What is the interest? 12.3 lakhs. 173 plus 185 point. And apart from this, one more element is there. What was that? Trial run. General overheads expenses are there. So these expenses should be transferred to P&L account. To general overhead expenses. What is the amount? 60 lakhs. Sorry, 30 lakhs. 21215.3. So one more thing, write it fully. So general overhead expenses 30 lakhs, right? Should be incurred through cash only. So general overhead expenses 30 lakhs to cash account 30 lakhs. So there are three elements which are transferred to the P&L: depreciation, interest, and general overheads. Now write down the, so this is the journal entries with respect to the 1920. Then he has asked for 2021 also. So please pass the journal entries for 2021. So journal entries for 2021. So one depreciation entry, second one is interest entry, and the third one nothing. These two entries are repeated again. So then what is the depreciation? What is the value here? 1600 minus 160. Sixteen hundred minus 160. What is the opening carrying amount? 1440 lakhs. For the calculation of the depreciation, I need the opening carrying amount. I am doing the opening carrying amounts separately for the main component and additional component. Main component opening value is opening value of main component 1440. Then additional component opening value is generally 26 lakhs. Out of 26 lakhs, 13 lakhs has been depreciated. What is the opening value? 13 lakhs. Opening value of additional component. Now I need to provide the depreciation separately. So main component 1440 minus 0. What is the remaining useful life? 9 years. Additional component 1 year. So instead of doing this calculation, we can do directly. Okay, because there is no change in the useful life and residual values, and we haven't any purchased any new machineries, or we haven't sold any machineries during the year. So the depreciation entry will be repeated same. This 173 lakhs will remain the same because there is no change in the values of the machineries. So then depreciation account 173 lakhs to machinery account. Then what is the next journal entry? Interest account debit to present value of dismantling cost. Tell me the interest. 12.92. Have you got this interest? 246 is the initial value. After that it is increased by 12.3. 246 plus 12.3 equal to 258.3. On this amount I need to calculate the interest amount by 5%. What is the value? 12.915. Then it becomes 12.92, because after 1, if it starts with 5 or more than 5, make it as the mean round off it to the next decimal point, next highest decimal point, 12.92. So, journal entries in the year, which year it is? 2021. Okay. So generally after you getting the book or in notes also, write down the different points, okay, or chances of errors. Like all our mistakes are categorized into first thing, error. Like we know the concept, but sometimes we forgot to mention that amount. And second time, posting errors. Posting error means step one value is there. For the calculation of the step 2, I need to use the value of the step 1 value. I need to use the step 1 value. For recording the step 1 value, I am posting somewhere else. Like I got the answer in step 1, 0.5. I need to use this 0.5 in step 2. Instead of doing the step 2, I post it as 0.05. Okay. So this is called the posting error. Okay. Then, for example, if you forgot to take in this 0.5 value in this step 2, this is the forgetting error. So there is a chance of missing that information. Okay. The third element is the conceptual error. I don't know in this concept there is general overheads for the trial run expenses. What we thought? We thought should be included to the cost of the asset, but it should be transferred to the P&L account. So that important different points should be noted down separately. Okay. You no need to do entire problem, because already you did the same thing in the previous problem. So you know all the calculation, but only the different aspect is this trial run general overhead, and after that this 26. So this 26 lakhs is included in the carrying value of the machinery, and thus 26 lakhs for the initial recognition date itself I need to provide the separate depreciation. Why? Because after solving the problem of illustration 3, so I will do the same accounting for the illustration 4 also. Okay, so you need to appreciate the difference between 3 and 4. Sorry, P&L, we need to transfer to the P&L. What amount? Okay, depreciation interest. Okay, 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 ma. You need to transfer to the P&L. So P&L account, debit to depreciation account to interest account also. What is the depreciation value? 173. This is 12.92 lakhs. 12.92. What is the value? 185.92 lakhs. Okay. So that's it for the class today. We will discuss the next concepts and problems in the tomorrow session. Okay, ma'am. So good morning, all. So we have completed the discussion of component accounting. So we have completed the problems with respect to component accounting. Then the next concept is subsequent recognition. Okay. So we have learned the how to initially recognize the asset, how to provide the depreciation for the asset, how to provide the depreciation separately for each component. Then next concept is subsequent recognition. Here subsequent recognition means at every balance sheet date. Okay. Every balance sheet date, how to account for the asset. So already initially we have recognized the asset. Then how to account for the asset as on the 31st March of every year. Company can choose cost model or revaluation model. So we can follow cost model or revaluation model, and choose an accounting policy will apply entire class of PPE. So PPE means property, plant and equipment. Here these are the classes of PPEs. All the furnitures and fixtures are classified under this head, and all the lands have been classified under this one. And ships, machineries, office equipments. There are bearer plants, right? So bearer plants and land and buildings, aircraft, motor vehicles. So these are the examples for the PPEs. So if you classified, if you are following cost model for all aircrafts, if you want to follow the cost model for the aircraft, so you need to follow the cost model for all the aircrafts. You are not supposed to follow one aircraft cost model, one aircraft revaluation model, but you can follow cost model for aircraft and you can follow revaluation model for motor vehicle. So we have the option to follow cost model or revaluation model. Either of two depends on the circumstances of the company. But here, if you want to follow one model with respect to any class of PPE, you need to follow the same model for rest of the PPE, rest of the similar class of PPE. Understand? For example, here machine is there. There are 10 machineries. How many machineries? 10 machineries. You want to follow the revaluation model for the class of machinery. You need to apply the revaluation model for entire 10 machines. You cannot follow 5 machines cost model and for 5 machines revaluation model. Okay. So for machineries, revaluation model, right? For office equipment, you can follow cost model. Understand? You can follow either of these. If you want to follow the cost model or revaluation model for the similar class of the asset, you need to apply the same model for rest of the asset in the particular class. Okay. Then what is the carrying amount in the balance sheet? If you are following the cost model, what is the carrying amount? Carrying amount means recorded amount in the financial statements. Carrying amount means what is the recorded in the balance sheet, recorded amount in the balance sheet. So if you are following the cost model, cost minus accumulated depreciation minus accumulated impairment loss. I will discuss later what is impairment loss. In simple words, impairment loss means reduction in the value of the asset. Come again. What is impairment loss? Reduction in the value of the asset. Then, if you are following the revaluation model, fair value on the revaluation date minus post revaluation depreciation and impairment loss. For the calculation of the carrying amount on the balance sheet, I need to follow the two models, either cost model or revaluation model. If you want to follow the revaluation model, in the place of cost, you need to determine the fair value of the asset as on the revaluation date. On that revaluation amount, I need to apply the depreciation. For the calculation of the depreciation, what is the formula? Carrying amount, right? Carrying amount minus residual value. Then what is the carrying amount here? On which, what is the carrying amount I need to take in for the calculation of depreciation? It's a opening carrying amount. Okay. Opening carrying amount of the asset is different if you are following the cost model, and it will be different if you are following the revaluation model. So what is the opening carrying amount in case of asset following cost model? This is nothing but the cost. Okay, nothing but the cost, or maybe opening carrying amount, like whatever is the closing carrying amount is there, that becomes the opening carrying amount. But in case of the revaluation model, what is the opening carrying value? Fair value as on the date of revaluation. So let's take one example. Bought one machinery for 5 lakh rupees. Okay, there is no incidental expenses. This 5 lakh rupees is the purchase price on 1/4/2021. So what is the journal entry I need to pass? So machinery account debit to cash account. So 5 lakh rupees, 5 lakh rupees. At the initial stage of discussion, so what is the definition of PPE we have learned, and what is the amount I need to substitute here? Means how to find out the cost of the asset. So there are elements already we have learned. So on 1/4/2021, what is the carrying amount? On 1/4/2021, what is the carrying amount of the machinery? 5 lakhs. Carrying amount means it's a recorded value in the balance sheet. What is the recorded amount? 5 lakh rupees. Then for the financial year 21-22, I need to provide the depreciation, right? I need to provide the depreciation. I will give you the remaining details. Residual value 0. Residual value 0. And the useful life 5 years. Now tell me the what is the depreciation? Depreciation per annum is equal to, what is the formula? What is the formula? Opening carrying amount. What was opening carrying amount of the machinery? 5 lakh rupees. Residual value 0. Useful life 5. So 1 lakh is the depreciation. So on 31st March 2021, this closing carrying amount. Okay. What is the closing carrying amount? 4 lakh rupees. So this 5 lakhs is the opening carrying amount, and I need to provide the depreciation for 1 lakh. The closing carrying amount is the 4 lakh rupees. How you initially recognize the asset? We need to initially recognizing the PPE at cost 5 lakh rupees. Then at initial recognition, there is no confusion. There is no cost model or there is no revaluation model concept. Then subsequent measurement. What is meant by subsequent measurement? Every year balance sheet dates. So financial year 21-22 is completed. Coming to financial year 22-23, here it is 22. Okay. Then from this date onwards, I need to follow the cost model or revaluation model. So there are two options are available for the calculation of the accounting. Revaluation model. India 16 has given two options. If you are following the cost model, what is the opening carrying amount? What is the opening carrying amount? 4 lakh rupees. So there is no problem. Simply the closing carrying amount becomes the opening carrying amount. But if you are following the revaluation model, what is the opening carrying amount? Here, how to find out the opening carrying amount? I need to compare the book value with the fair value. So what is my book value? 4 lakh rupees. Okay, so I need to find out the fair value as on the reporting date of the asset. So if you, what is the fair value in the market? 5 lakh rupees. So if you want to follow the revaluation model, I need to revalue the asset at fair value. It means I need to show the asset at fair value. What is the fair value? 5 lakh rupees. Already in your balance sheet, you are showing your asset at 4 lakh rupees. Now you wanted to show your asset 5 lakh rupees because which is the fair value of the machinery. Now what is the journal entry I need to pass? The already asset is showing at 4 lakh rupees. Now I want to show it as 5 lakh rupees. So I want to increase the asset value by 1 lakh rupees. Tell me the journal entry. For increasing the asset, I need to do the debit. So asset account debit to revaluation reserve 1 lakh rupees. Okay. So generally in the previous levels, we need to use the word revaluation reserve. But coming to India's, there is one concept called other comprehensive income, OCI. Did I discuss this? Okay then. OCI means it's like a P&L account, but a few profits and gains are transferred to the other comprehensive income. Nothing but most of the unrealized gains and unrealized losses are transferred to OCI. Why? Because they have introduced this concept is to differentiate between realized gains and unrealized gains. So all realized aspects are transferred to the P&L, and all, not all, most of the unrealized items are transferred to the OCI. Okay, to make differentiate, they have introduced the new concept like OCI. So it is also nothing but the profit earned during the period. So you need to retransfer your revaluation reserve to OCI account. Instead of revaluation reserve, just use the word OCI. OCI means other comprehensive income. Okay. So that is the new concept which is introduced in the IND-AS. Okay, Indian Accounting Standards. Asset account debit to OCI account. Then what is your opening carrying amount here? What is your opening carrying amount now? 5 lakh rupees. Okay. So for providing of the depreciation, I need the opening carrying amount. 4 lakh rupees minus 0. What is the remaining years? So 1 lakh rupees. But coming to here, 1 minute. Coming to here, what is the amount? 5 lakh rupees minus 0 divided by 4. What is the value? 1.25 lakhs. So why I am calculating depreciation every year? Here we know that it is the 1 lakh per annum, 1 lakh. For the next year also, I can simply put 1 lakh, right? But why I am doing this calculation? To habituate that calculation. So it will be useful here. Okay. If you are following this one, by mistake you can put 1 lakh rupees, right? But here 1.25 is the answer. So you just need to follow the format. Even though it is a simple and you know it is a 1 lakh rupees also, please try to make it in on a format. Okay. So 4 lakhs minus 0 minus 4. So 5 lakhs minus 0 minus 4, 1.25 lakhs. This is the way of providing the depreciation in case of if you are following revaluation model. Simply saying at every balance sheet date, okay, you need to revalue your asset at fair value. Okay. Coming to illustration 5. Don't worry, I will give you the format. So for the calculation of the carrying amount of the assets, so what is the standard format I will going to give. Okay. So illustration 5, Alpha Limited as, so is it completed? Not right? Then Alpha Limited has machinery at a cost of 4,800. What is the provision for depreciation? 1,600 as on 1/4/2018. So on that date, the remaining life of the machinery is 6 years with the residual value of, what is the residual value? 800. So on the same date, one component of the machinery is replaced and the price of the new component is 600. And the cost of the old component is 500 with the accumulated depreciation of 600. What is saying? What is the price of the new component? 600. Then what is the carrying amount of the old component? What is the carrying amount of the old component? His cost is 500. Accumulated depreciation is 500. Then what is the net carrying amount? 300. Gross carrying amount is, so here they are not deducting the depreciation every year from the value of the asset. So they need to show the depreciation as a liability. So the assets are shown at gross carrying values and the accumulated depreciations are shown on liability side. Okay. So the supplier of the new component took the old component fair value 360 rupees. So what is the fair value of the our old component? So the supplier of the new component is there, right? So you are exchanging your old component. So while you are exchanging the old component, the supplier valued your old component at 360. So on 31st 3 2019, the machine is revalued as per the company policy at 5,000 rupees. What is the revaluation date? 31st 3 2019. He revalued the asset at 5,000 rupees. Then on 31st 3 2020, an impairment loss of 900 has been recognized for the mission. Pass the journal entries and accounting treatment 31st 3 19, 20 and 21 and depreciation based on straight line method. So this is the question. So what is the word impairment loss? Impairment loss means it's a reduction in the value of the asset. But what is the formula for the calculation of the impairment loss? For the calculation of the impairment loss, I need to compare my book value with the market value. If my book value is less than the market value, then I need to provide impairment loss. Okay, impairment loss means it's a reduction in the value of the asset. So there is a separate chapter called impairment of assets. We will discuss it later. Okay. So I will give you the brief description over there. But here just remember the impairment loss means carrying amount minus, sorry, fair value minus book value. What is it? Fair value minus book value. One minute. 1 minute. So call. Oh. Sorry guys, because of technical problem, we are unable to come on live. So sorry for the interruption. So we are going to solve the illustration number 5. So it it contains the elements of depreciation, okay, and as well as accumulated depreciation, revaluation problem, and impairment loss. Okay. So they're asking the values 1 for 2018, 19, and 31st 3 2020. Okay. So generally in normal problems, the assets are showing at net carrying amount. Net carrying amount means asset minus depreciation. What is the journal entry for that? Asset account, sorry, depreciation account debit to asset account. So every year we need to reduce the value of the asset and the we need to show the asset at net carrying amount. But this is one type of method of accounting. But another type of method of accounting is I need to show my asset at gross carrying amount. Means gross carrying amount. So I always show my asset at cost of the asset. But on the liability side, I am showing my accumulated depreciation. Every year depreciation is there, right? I'm not transferring it to the asset. I need to transfer it to the account called accumulated depreciation. Depreciation account debit to accumulated depreciation. These accumulated depreciations are shown on the liability side of the balance sheet. On the asset side, always the asset is shown on cost. Always shown at cost. Here, what is the opening carrying amount? So, Alpha Limited has machinery at a cost of 4,800. So, always I need to show the value at a gross carrying amount. What is our value? 4,800. What is the accumulated depreciation with respect to this asset? 1,600. What is the date? 1/4/2018. So, on 1/4/2018, on 1/4/2018 in my balance sheet on the asset side, the asset value is 4,800 and the liability side accumulated depreciation 1,600. What is the net carrying amount? 3,600. Okay. Then what happened? So out of this gross carrying amounts or out of this net carrying amounts, they made some changes. So on the same date, component of the machine is replaced. So one part of the element is taken out of that machinery. So the price of the new component is 600 and the cost of the old component is 500 with the accumulated depreciation 200. So I need to take one component from the entire asset. What is that cost of the old component? 500. So I need to reduce this old component value. What is the gross carrying amount of this old component? 500 rupees. What is the gross carrying amount of this old component? 500 rupees. Then What is the accumulated depreciation with respect to this old component? What is the depreciation? 200. So here is the depreciation, 200 accumulated depreciation. And what is the net carrying amount? Don't worry, I will share this PDF, okay? I will share this PDF in the group and you can note it down later. Don't. Next term. So old component is removed. So what is the general aspect we need to follow? Generally, we have the net carrying amount 3,200 rupees. I need to remove the old carrying amount. So what is the net carrying amount of the old component? 500 minus 200. But here I am following the different approach for the recording of the asset. I need gross carrying amount. I need accumulated depreciation. So I need to remove the 500 rupees from the gross carrying amount and 200 rupees from the accumulated depreciation. Then after that, I need to include one new component. What is the new component price? What is the new component price? 600 rupees. This 600 rupees should be included to the gross carrying amount. Should be included to the gross carrying amount. This new component should be included to the gross carrying amount. Why I am not mentioning anything with respect to depreciation? So I just purchased it now, right? So there is no depreciation with respect to this 600. So this is the revised opening carrying amount as on 1/4/2018, because we made some changes with respect to some additions and deletions. Okay. With respect to the asset, I need to check, is there any additions or deletions during the year? Yes, there is a deletion of old component and there is an addition of new component. So I need to delete the total carrying amount of the old component. What is the total carrying amount? 300. But this 300 is given in the form of gross carrying amount is 500, accumulated depreciation is 200. Then I got the revised opening carrying amount. I got the revised opening carrying amount. What is the next element? What is the next accounting treatment? I need to provide the depreciation. First step is calculation of opening carrying amount. So I got 4,900 gross carrying amount, depreciation 1,400, net carrying amount 3,500. So what is the depreciation for 18-19? For the calculation of the depreciation, I always calculated depreciation on the net carrying amount. For the for the calculation of depreciation, I need to use the net carrying amount only. Then what is the residual value here? What is the residual value? 800. So this is the residual value 800. What is the life of the machine? 6 years. So 3,500 minus 800 divided by 6. So opening carrying amount minus residual value divided by useful number of years. So the depreciation is 450. Where should we include this depreciation? 450 rupees. I need to increase it to I need to add it to the accumulated depreciation. What is the opening carrying amount of the accumulated depreciation? 1,400 rupees. So I need to include this 450 depreciation to the depreciation account. What is the closing carrying amount now? 4,900 is the gross carrying amount. 1,850 is the depreciation. And what is the net carrying amount? 4,900 minus 1,850. So generally, we are following the method of this one. Always the asset is valued at net carrying amounts. In that time, it will be easy, because 3,500 minus 450 is the 3,050. We can arrive in that manner also. But here they are following the accumulated depreciation method. Okay, they are following the accumulated depreciation accounting treatment, and they need to show the assets at gross carrying amounts instead of net carrying amounts. Then next year 1/4/2019. With respect to 1/4/2019, let's see what are the changes happened. So on 31st/3/2019, the machine is revalued as per the company policy at 5,000 rupees. So From this information, what I got for this respective machinery, what method I am following? Revaluation model, because he are doing the valuation, right? Why he is doing revaluation? Because he wanted to follow revaluation model. So what is the value? 5,000 rupees. What is the value? 5,000 rupees. Then what is the carrying amount? What is my opening carrying amount before revaluation? Okay. What is the opening carrying amount before revaluation? 4,900 gross carrying amount, 1850 accumulated depreciation, 3050 is the this one. Then I need to find out the revaluation gain. I need to find out the revaluation gain. He said the market value of the my machinery as on 1/4/2019 is the 5,000 rupees. So what is my net carrying amount? 3050. What is my net carrying amount? 3050. So net carrying amount is the 3050, but the fair value is 5,000 rupees. Here what I am trying to do? Here I need the value of the gross carrying amount. I need the accumulated depreciation. I need the net carrying amount. But what is the information I am available in the market? 5,000 is the fair value, which is need to compare with the 3050. So what I am going to do? I need to show my asset at 5,000 rupees. I need to show my asset at 5,000 rupees. But 5,000 is the net carrying amount. Then what is the fair value of the, okay, what is the fair value at gross amount? I need the gross fair value, right? This is the net fair value. So I need to provide the gross fair value. So for this is the calculation. What is the revaluation in here? 1950. So my net carrying amount is 3050. Fair value is 5,000. 5,000 minus 3050 is the 1950. So for this revaluation gain 1950 should be allocated between the gross carrying amount and accumulated depreciation. Okay. For 3050, 1950 is the gross carrying amount. Then 4,900, what is the value? Okay. For 3050, this is the 1950 is the exact value. For what is the value for 4,900? So I need to follow this step. For 3050, 1950 is the amount. For 4,900, what is the revaluation gain? Gross revaluation gain is 3132.79. And what is the accumulated depreciation with respect to that revaluation gain? 1182.79. Did you understand how we got this amount? For 3050, 1950. For 1850, what is the amount? So 1182.79. Then I got the opening carrying amount after revaluation. This is the values before revaluation. This is the values after revaluation. After revaluation, what is the fair value of the asset? 5,000. The difficult part is the classification of the amounts between the gross carrying amounts and accumulated depreciations. So now I got the opening carrying amount after revaluation 5,000 rupees. Out of this 5,000, 8032.79 is the gross carrying amount. This is the accumulated depreciation. For the calculation of the depreciation, what is the value I need to take? 5,000 rupees, which is a opening carrying amount. Okay. Now what I got? There is a change in the depreciation formula. I need to revise the depreciation formula. Listen to me. So what I mentioned before that, opening carrying amount minus residual value. No, it is not opening carrying amount. Opening carrying amount after revaluation. Okay. Opening carrying amount after revaluation. That is the exact formula for the calculation of the depreciation. So this is the opening carrying amount after revaluation. Then 5,000 is the net carrying amount. So 5,000 minus 800 divided by remaining years 5. 840. What is the closing carrying amount? So 8032.79, then 3872 4160. How we got 4160? 8032 minus 3872.79. Then I got the 4160. Don't go with this 5000 minus 5000. It's not about 5000. So how you getting these amounts? So most of the times column number 3 is obtained by 1 minus 2. In 1/4/2019, so they are mentioned that on, so listen to me, on 31st/3/2020, an impairment loss of 900 has been recognized for mission. What is the date here? Chipta, 1 minute. First listen to the problem. I will give you the clarity. I will give one format. After that you can get the clarity. First listen to the facts. Okay. So what will happen here? Here they are providing the impairment loss. What is the impairment loss? 900. Has mentioned the date 31st/3/2020. Instead of 31st/3/2020, okay, let it be 31st/3/2020. What is the closing carrying amount here before impairment? What is the closing carrying amount? Opening carrying amount minus depreciation. These are the values. Then they are saying that there is an impairment loss. Impairment loss means reduction in the carrying amount of the asset. What is the reduction value? 900 rupees. So this 900 rupees should be allocated between gross carrying amount and depreciation. How we need to allocate? Same. Whatever we are followed for the revaluation aid, we are following the same method. 4160 900, and what is the value for 8032.72. So then I got the closing carrying amount after impairment. So please write it down. Format for calculation of carrying amount of assets. Format for calculation of carrying amount of PPE. Before going into the format, there are two note points. Note 1. Revaluation should be done at the beginning of the year. Okay. Then impairment loss should be provided at the end of the year. Remember these two rules. And after that, format is so particulars amount. Opening carrying amount. Okay. Opening carrying amount before revaluation. Okay. Opening carrying amount before revaluation. Next, at the beginning of the year, what I am going to do? I need to do revaluation. If the asset is following the revaluation model, then I need to do revaluation. So, plus or minus revaluation gain or revaluation loss. Have you got this revaluation loss or revaluation gain? Fair value minus, for revaluation gain, fair value minus opening carrying value, opening carrying amount. So whatever the carrying amount is there, right? This is the opening carrying amount before the revaluation. So I need to compare fair value and opening carrying amount. Revaluation gain is obtained by deducting opening carrying amount from fair value. What is the loss? Loss means opening carrying amount minus fair value. Okay. If the fair value is less than the opening carrying amount, it is a revaluation loss. So it is nothing but the, sorry, it is the revaluation loss. Leave it there. And after that, third element. So I got closing carrying amount. Sorry, not closing carrying amount. I got opening carrying amount after revaluation. What is the first element? Opening carrying amount before revaluation plus or minus revaluation gains or losses. Next third element is opening carrying amount after revaluation. Have you got this amount? 1 plus 2. Okay. Then I need to provide depreciation. I need to provide depreciation minus depreciation. What is the formula for depreciation? Tell me the formula for depreciation. So, opening carrying amount after revaluation. Okay. Opening carrying amount after revaluation but before impairment loss. This opening carrying amount is after the revaluation calculation, but before the providing of impairment loss. And that opening carrying amount, I should find out the depreciation minus residual value minus remaining. Don't forget the word remaining. So remaining expected useful life. Remaining expected useful life. So here expected revised residual value, not original residual value. If there is any revision in the residual value, I need to take into consideration of revised residual value while calculating the depreciation. Then remaining expected useful life. This is the formula. Then I got the depreciation. Then I got the closing carrying amount before before impairment loss. Then I got one element. So opening carrying amount after revaluation minus depreciation. Then I got closing carrying amount. But closing carrying amount before impairment loss. So I need to provide impairment loss. Now I got the closing carrying amount after impairment loss. So this is the order. Whenever you wanted to find out the carrying amount for any respective year, okay, if you want to calculate the carrying amount of any PPE for any respective year, you need to follow this order. What is my opening carrying amount before revaluation? Of course, to this opening carrying amount, we need to make some adjustment with respect to additions and deletions. Sometimes we can purchase the new assets, or sometimes we can sell the existing assets, right? So how you find out this opening carrying amount? Opening balance plus additions minus deletions. Then you got the opening carrying amount before revaluation. Then coming to our problem, I wanted to connect this concept with our problem. So here the some difficult part is they are providing the gross carrying values and accumulated depreciations. For our 1 minute, for our understanding purpose, I need to make it easy by taking into the net carrying amounts directly. I don't want to take it into consideration of this gross carrying amounts and accumulated depreciation. For the providing of the answer, you should follow here. Okay. For the explanation only, I am rewriting the answer. I just need to follow the same format. Okay. For this problem, illustration number 5. Okay. What I'm going to do? I'm just wanted to check these elements in the problem. What is the year here? What is the accounting year? It starts with 1/4/2018. So 1/4/2018. It's a starting date of the year. So I need the opening carrying amounts. What is the opening carrying amount? So I need the opening carrying amounts before revaluation. So for the calculation of this opening carrying amount, I need opening balance, additions, and as well as deletions. First do that. So opening carrying amount before revaluation. How you got this opening carrying amount? What is your carrying amount? Tell me. I need the net carrying amount. Whenever if you wanted to ask the what is the carrying amount, please provide the net carrying amounts, not gross carrying amounts. 4,800 minus what is the accumulated depreciation? 1,600. And what is the net carrying amount? 3,200. So 3,200 is the opening value. Is there any additions on 1/4/2018? Yes. So we have included one new component, 600. So I need to increase the value. Then there is a deletion. What is the net carrying amount of the deletion? 300. So 500 minus 200. We need to delete this item. So 500 minus 200 is the net carrying amount, 300. Okay. Now I got the value of the opening carrying amount before revaluation. Did I make revaluation adjustment here? No, right? So what is the revaluation? Before revaluation, what is the value? 3,200 plus 600 minus 300. 3,500. As per our format, now I need to check, is there any revaluation on 1/4/2018? Is there any revaluation on 1/4/2018 or 31st/3/2018? Even though they are saying the revaluation is made on 31st/3/2018, I need to make adjustments on 1/4/2018. Why? Because what is the note point here? Always the revaluation loss or revaluation treatment should be done at the beginning of the year. I'm not getting any information with respect to the revaluation adjustment as on 1/4/2018. Then, and what I need to do? What is the revaluation? Revaluation is 0. Then I got the opening carrying amount after revaluation, 3,500. Next, what is the next element? Depreciation. What is the next element? Depreciation. Minus depreciation. What is the opening carrying amount after revaluation before impairment loss? 3,500. What is the residual value? 800. In question itself, they are giving 800 is the residual value and 6 years is the useful life. 450 depreciation. Then I got the closing carrying amount before impairment. So 3050. Then what is the impairment loss? What is the impairment loss? Is there any impairment loss? No? Okay. For example, okay, in just example purpose, I'm just changing this question. If any information is given with respect to 31st/3/2019, the impairment loss is equal to 900. So they are giving the information as a 31st/3/2019 impairment loss. What you are going to do with this 900? So you need to deduct here. Can I take into consideration here? I'm doing 1/4/2018 to 19. Yes? Yes or not? Yes, we need to take into consideration of this 900. Now after that, 1 minute, I'm just changing the question again. So they are giving the information on 1/4/2019. So 1/4/2019, the impairment loss is 600 rupees. Sorry, the impairment loss is 900 rupees. Can I take this 900 rupees for the calculation of impairment loss here? Did you understand my question? So I need to find out the carrying amount of the asset with respect to the financial year 18-19. So what is the format here? I need to find out the impairment loss also. But here impairment loss is given, but as on 1/4/2019, the impairment loss is 900. Can I take this 900 for the calculation of the carrying amount of the asset over here? No. Then read this note point. Impairment loss should be provided at the end of the year, right? So what is given in the information? 1/4/2019 impairment loss is 900. What you are going to do? You are saying, sir, you are not supposed to take that impairment loss at this place. Then what you are going to do? You need to take in the 2019, right? You need to provide the impairment loss in 2019 and 20. In 19 and 20, what is our note point? Always impairment loss should be calculated at the end of the year. But this is the information with 1/4/2019, right? Then how it is possible? So even though it is the information on 1/4/2019, can I take it as it is the information is on 31/3/2019? Both are same, right? So 1 day difference only. Did you got it? The closing carrying amount as on 31/3/29 becomes the opening carrying amount on 1/4/2019, right? In the same way, the impairment loss on 1/4/2019 becomes the impairment loss on 31/3/2019. So the rule is always I need to provide the impairment loss at the end of the year. What is the end of the year for 1/4/2019 generally? 31/3/2019 is the end of the year, right? If you want to provide the impairment loss in 19, okay, if you want to provide the impairment loss in 1920, you need to provide the impairment loss on 31/3/2020. Is it the impairment loss on 31/3/2020? No, right? So this is the impairment loss on 31/3/2019. That's why I write it down the point. Impairment loss always provided on the end of the year. So here there is no impairment loss with respect to 31/3/2019. There is an impairment loss on 31/3/2020. We will see it in the next financial year. So for example purpose only, I made some changes. Then what is the impairment loss here? 0. Then what is the closing carrying amount after impairment? What is the value? 3050. What is the value? 3050. Then so 1/4/2018 is over. This is the closing carrying amount means 31/3/2019. This closing carrying amount becomes the opening carrying amount for the next year. This closing carrying amount becomes the opening carrying amount for the next year. So now I need to provide the accounting treatment for financial year 1920. Then tell me the format again. Opening carrying amount before revaluation. What is my opening carrying amount? 3050. Now I need to check, is there any revaluation on 1/4/2019 or 31st March 19 only. Did you feel the difference? So I need to check whether is there any revaluation happen on 1/4/19 or is there any revaluation happen on 31st/3/19. Both are the same dates. Okay, what is the rule here? I need to provide the revaluation at the beginning of the year. Of course, he has given the information at the end of the last financial year. But what is our rule? I need to calculate the revaluation always at the beginning of the year. For this date, what is the beginning date? 1/4/2019. If you wanted to do the revaluation in 31st/3/2019, you need to do on 1/4/2018. That is the beginning date, right? But what is our rule? Always revaluation should be provided on 1/4/2018. Sorry, 1/4/2019. So I need to check in the question. So on 31st/3/2019, The machine is revalued as per the company's policy 5,000. So 31st 3 2019 is nothing but 1/4 2019. So what is the value? 5,000 rupees. Simply saying, as per the accounting treatment, I need to show my asset value at 5,000 rupees. Now, what is my asset value showing in the books? 3050. Then I need to make revaluation gain. What is my revaluation gain as per the formula? Fair value minus opening carrying amount. What is the fair value? 5,000. What is the opening carrying amount? 3050. Tell me the amount. 1950. Okay. Then I got the opening carrying amount after revaluation. Now, what is the value here? Then my asset becomes the 5,000 rupees. So I need to follow the revaluation model. Revaluation model means always I wanted to show my asset at the fair value. What is my fair value? 5,000 rupees. Then I need to provide the depreciation. What is the depreciation for? What is the financial year now? Financial year 1920. Is there any adjustments? No, right? So only there is an impairment loss. Impairment loss should be done after, at the end of the year. So tell me the depreciation. 5,000 minus, what is the residual value? 800. There is no change in the residual value and useful lives. Divided by, sorry, 5. Already here I am showing 6. So now I need to mention 5. Okay. Simply understanding purpose. But 1 year is already expired. So what is the remaining expected useful life? 5. What is the depreciation? 840. Then I got the closing carrying amount before, tell me the word, before impairment loss. For 4,160. So this is the closing carrying amount before impairment loss. Then what is the impairment loss? So impairment loss always need to produce on, always provide on the 31st 3 2020, impairment loss 900. For example, in this problem, impairment loss is given on 1/4/2020, 900. Can I take this 900 loss? Yes. Can I take this 900 loss? Because you cannot do the impairment loss on 1/4/2020 because it is the beginning of the year. So you need to made on the at the end of the year. What is the end for this? 31st 3 2020. So even though here if they mentioned 1/4/2020, the answer remains the same. So what is the impairment loss? Okay. Minus impairment loss 900. Then what is the closing carrying amount after impairment loss? 3,260. 3260. Okay. So this is the closing carrying amount after the revaluation. So just they're asking what is the values on 31st 3/19, 31st 3/20 and 31st 3/21. So we are standing on the 31st 3/20. So I need to do the accounting treatment for 2021. With respect to the 2021, they haven't mentioned any details. They haven't mentioned any revaluation. They haven't mentioned any impairment loss. So what is the remaining element? So I need to find out the Opening carrying amount is 3260. On this there is no revaluation, so I can directly find out the depreciation. What is the depreciation? 3260 minus 800 divided by remaining useful life 4. 615. Then what is the closing carrying amount? Sorry, 2645. Here they are providing the information 31st 3, 19, 20, 21. What is the carrying amount as on the 19? 3050. On 31st 320, 3260. Then after that, they are not giving, but we have provided. So 3050. Okay, next one 3260. Next element 2645. So it's just asking the what is the closing carrying amount as on 19, 20, 21. 31st 3, 19, and 31st 3, 20, and 31st 3, 21. Okay. For all the remaining problems, we can follow this format. Okay. Whatever the problems are there, we need to follow the same format for the calculation of carrying amounts. But this problem alone, you need to present in this manner. Okay. What you got here? 3260. Here 3050. Okay. So they are providing up to this one only. So 19, 3050, 20, 3260. But we need to show the separate accounting treatment. So what is the value between gross carrying amount? What is the accumulated depreciation? There are only two adjustments. What was? Revaluation and impairment loss. What is the revaluation loss? Sorry, revaluation gain? 1950. This 1950 should be allocated between gross carrying amount and depreciation. Again, what is the impairment loss? 900 rupees. This 900 should be allocated between gross carrying amount and accumulated depreciation. Okay. The answer remains the same. The answer remains the same in our own format also. But for this problem alone, you are not supposed to do in this way. For your understanding purpose only, I have given this answer. But for all the remaining problems, you can follow this format. I will share these notes, you don't worry. Okay. Listen to me. So this is an option 1. Sorry, this is illustration 5. Okay. So there is an option 2 also. We can solve the same problem with the option 2. In that we need to reduce the accumulated depreciation first. Okay, in this one, I should reduce the accumulated depreciation first. What will happen here? I need to allocate this 1950 between gross carrying amount and depreciation, accumulated depreciation, right? For in the method 2, what I did here, this 1950 should be, okay, set off against the accumulated depreciation first to the extent of full value. What is the accumulated depreciation here? 1850. So this 1950 should be set off against the accumulated depreciation to the extent of fully. And what is the balance here? 100 rupees. This 100 balance should be included to the gross carrying amount. Okay. Then coming to impairment loss. What is the total impairment loss? What is the total impairment loss? Okay. And what is the accumulated depreciation? What is the accumulated depreciation? 840. Then why I did here 840? See, this 1950 is the profit element. This 1950 is the profit element. This profit element is adjusted against one liability and one asset. So with this profit 1950, I reduced one liability to the extent of 1850. Decreasing liability is equal to increasing of asset, right? So with this 1950, I decreased one liability to the extent of 1850 and I increased one asset value by 100 rupees. Again, what is this 900? What was this? Impairment loss. This is loss. So with this loss, can you decrease the one liability? Got it. So what happened with this loss? I increased my liability by 840 rupees. With this loss, I increased my liability by 840 rupees and I decreased my asset by 60 rupees. Got it. So that's why I added 840 to the opening balance of 840. But this is too complicated. Okay, you no need to follow. But for understanding purpose, there are two methods in this Ind AS 16. And this information is available in some annexures to the Ind AS 16. You cannot find it easily. Somewhere around it is there. So that's why just presenting it. You no need to follow it. If you want it, you can follow it. Okay. And later point of time, there is some method, sir, and there is an accumulated method also. So now I need to provide the journal entries. So another difficult part is providing of journal entries. Come. So what is the first journal entry? Accumulated depreciation account debit to machinery account. So this is for understanding purpose only. Wait. Here, what is the first adjustment I have given? What is the first adjustment I have given? 3200 plus 600 minus 300. This is the calculation part. This calculation part should be reflected through journal entries. So I have included 600 rupees. The new component is 600 rupees. Go back to the original initial recognition. For the recognition of this 600 rupees, I have given my old component to the extent of 300 rupees. What is the 300 rupees? Fair value of the old component. The asset should be recognized. The new asset should be initially recognized at cost. If you exchange it with another asset, the new asset should be recognized at fair value of asset given up. What is the fair value of the old component? 300 rupees. Fair value. Sorry. Fair value how much? 360 rupees. What is the fair value? 360. But out of this 360, what is the old component carrying amount? 300 rupees. Profit on the old carrying amount? 60 rupees. How we got this 60 rupees? Carrying amount is 300. But what is the fair value? 360. So this is the profit. And we need to de-recognize this old component carrying amount. What is the carrying amount? 300. Gross minus accumulated depreciation, you got the net carrying amount. So with this treatment, we have deleted this 300 rupees and included this 600 rupees. Got it? What I did? I included the 600 rupees and I deleted 300 rupees. I included 600 rupees and I deleted 300 rupees. Remaining two elements will not affect the PPE then. So I am providing here combined journal entry. So new component 600. Here what is available? Here accumulated depreciation is there. Okay, here accumulated depreciation is there. For providing, instead of providing this 300 rupees, I am providing in this way. So instead of providing whole component value 300 rupees, I am providing the accumulated depreciation 200, machinery 300. So asset value I reduced by 500, and liability I increased by, what is the liability? Accumulated depreciation. So I cancelled my liability how much? 200 rupees. Then what is the net decrease in the asset? 300 rupees. So instead of providing this whole component 300, I need to show it separately. So I want to de-recognize this whole component, right? So I need to de-recognize the asset value of 500 rupees. What is the respective liability with respect to this machinery? With respect to 500 rupees, what is the accumulated depreciation? So with respect to this whole component of 500 rupees, the accumulated depreciation is 200 rupees. So now I wanted to delete one liability by 200 rupees. Okay, I need to de-recognize this liability with respect to 200. And also I need to de-recognize 500 rupees of asset. Okay, so this I need to provide. So new component 600 rupees, accumulated depreciation 200 rupees to machinery account. What is the machinery account? What is the new machinery account? 1 minute. Here 200 and 500, right? So I am substituting these 200 and 500 entry instead of this 300. So new component 600. Next I need to incorporate this, right? And what is the debit element? Accumulated depreciation. So new component and accumulated depreciation account debit to, what is the machinery account? 500. I'm not supposed to pass this journal entry. So to accumulated depreciation 500, then profit on whole component 60 and cash 240. So in our books they passed the consolidated journal entry, consolidated JE. Okay. For understanding of this, I just split this entire journal entry into two parts. So these two are just for CC, conceptual clarity, but for for providing of the answer, I need to do this. So with this journal entry, I just represented this calculation. After that, I need to provide the journal entry for revaluation gain also, and after that accumulated depreciation also. Okay. Then what is my depreciation? Depreciation is 450. Depreciation account debit to accumulated depreciation. Yeah, here I am following the different method. Generally, what is the journal entry for depreciation? Depreciation account debit to asset account. Instead of transferring to the asset account, here I am following the method of transferring the depreciation to accumulated depreciation. Then accumulated depreciation liabilities increased by 450. Then I need to provide the revaluation gain. What is the revaluation gain? What is the revaluation gain here? 1950. 1950. So what is my asset value? 3050. Now I need to increase it by 5000. For this I need to do 1950. 1950 is the revaluation gain. 1950 to revaluation gain. What I am going to do here? Again you need to go. For 1950, this is the revaluation gain. With this revaluation gain, I need to increase my gross carrying amount by 3132 and accumulated depreciation by 1182. This journal entry should be incorporated. Here, okay. Okay, I got it. You know how we pass this journal entry? What is the second method? Deletion of accumulated depreciation first. So I just followed this method. For the passing of journal entries, I followed this method because here I am facing difficulty while calculation of this decimal points. If you wanted to follow this method, that's okay. You can follow the journal entries here. So I will provide the journal entries as per the first option also. But here I am provide the journal entries as per the second option. So what is the total revaluation gain? 1950. What is my rule? I need to de-recognize the accumulated depreciation first. What is my accumulated depreciation balance? 1850. What is my accumulated depreciation balance? 1850. So first de-recognize this. So revaluation gain is the credit. What is the debit aspect? Accumulated depreciation. What is the balance? 100 rupees. I need to increase the asset by 100. Then again depreciation to accumulated depreciation, same thing. Coming to impairment loss. What is the impairment loss here? 900 rupees. Then what is the out of this 900? What is the accumulated depreciation here balance? 840. What is the balance here? 840 is the accumulated 840 is the accumulated depreciation. So this 840 should be increased. First you need to adjust against the accumulated depreciation to the extent of 840, and the machinery value need to decrease by 60. Then again for 2021 depreciation account debit to accumulated depreciation. So this is the special adjustment. Okay, don't worry, I will tell you later. Okay, cool. After you after you are getting the books, you can get the better clarity first thing. So this is very difficult problem. I think this problem I have taken from the CA book. Okay, so that's why CA final book, because it covers the each and every element, accumulated depreciation, revaluation. While we are solving the problems, like at the time of revision, if you solve this problem, the entire India 16 is completed. Okay, it will save your time at the time of revision. Okay, and for understanding purpose, when you need to face lot of difficulty, so that's why I have given this one. Is it okay for you? If you wanted to solve this problem, you can follow this method also. Okay, but this is not the exact right answer, because it is given with the accumulated depreciations. So there is no other problems they are giving along with the accumulated depreciation. This is the only one problem. Okay, so I'm not sure it is CA final or CMA final. So but I have included this problem. I like this problem actually. So it gives lot of information. The only thing from the entire class of today, the only thing you should remember is the format. Tell me the format. Opening carrying amount before revaluation and revaluation gain or loss. After that, opening carrying amount after revaluation. Next thing, depreciation for the year. For the calculation of depreciation, opening carrying amount after revaluation before impairment loss minus expected revised residual value divided by remaining expected useful life. So depreciation. After that, opening carrying amount after revaluation minus depreciation equal to closing carrying amount before impairment. After that, minus impairment. So closing carrying amount after impairment loss. Did you remember this format? That's it. That's it for the class today. So if you able to remember that format, that's all. And you can solve this problem with this format also. Okay, so just following this format you can solve the problem, but here presentation is different. So don't worry about the presentation. If you feel too much difficulty, you can follow this answer. No sir, I need the exact answer also. This is the exact right answer. I will share this one also with you. Okay, so we will discuss the remaining problems. So a very good morning to all of you. Okay. How is your weekend? Movie. Went to movies? No. Reading at home? Practicing CFR? Okay. So such a without workbook. So you remembered all the values, right? So then only you can practice, right? So super. So she's remembered everything, every values without workbook. In that case, no worries. So I can ask any value. She has that remembering capacity, right? She will tell every value. Okay. You guys are keep quiet. Okay. So before going to start the session, so let's revise the basics which we have already discussed. Okay. For our exclusively for our Krishna. Right. Krishna, right? Where are you from, Krishna? Hmm? Cherala. Oh. Hey. So, welcome to our Krishna from Cherala. Give him a clap. Okay. Oh, he's also from Cherala. So, he's also. You are from Anantapur. Oh, Rayalaseema. Hey. Okay, then. Let's see. India 16 is a property, plant, and equipment. The standard name is Indian Accounting Standards. So we are discussing about the Indian Accounting Standards. These Indias are introduced by the government for the preparation of the financial statements of few companies. So there is an applicable. This Indias is not applicable to every companies. So I have already discussed about the introduction or what, to which companies Indias are applicable. Okay. So the India 16 name is property, plant and equipment. Already there is an accounting standards. So which we have learned at our previous levels. In that level it is accounting standard 10. So accounting standards 10 is now renamed as India 16 property, plant and equipment. If you learn the AS 16, so more or less the same concepts are incorporated in India 16 also. So what is the purpose of this chapter is India 16 property, plant and equipment. If you purchased any tangible assets like plants, machineries, buildings or whatever the assets used for the business, how to account those assets in our books of accounts, at what value, with what name I should be accounted for this, and that too the accounting treatment for the depreciation also, that information also provided in India 16. So how to record the asset and how to provide the depreciation for those assets, and when we should de-recognize this asset from our books of accounts, and what are the disclosure requirements. All these aspects should be discussed in India 16 property, plant and equipment. So this is as similar as AS 10 property, plant and equipment. Okay. Accounting standards are applicable for few companies. Ind AS are applicable for few companies. So generally speaking, Ind AS are applicable for the bigger companies. Okay. So the companies which has the highest net worth rates. Okay. Then what is the scope of the standard? Whether this standard is applicable to all the assets? No. There are some exceptions. So PPE classified as held for sale, biological assets and assets used in the exploration and mineral resources. All these are exclusions. For these kind of assets, Ind AS 16 is not applicable. Then which kind of assets Ind AS 16 is applicable? Let's see the definition. So our India 16 name is, tell me the name, PPE. PPE means property, plant and equipment. So what is the definition? PPE are tangible items. PPE are tangible items. So intangible items are not covered under India 16. What is meant by tangible? We can see and touch. Okay. We can feel it. So recently I saw an interview. So I think an audio launch or something. Sandeep Reddy Vanga is there, right? So he came to Tandal audio release or something. Tandel movie is there, right? So he came there and he used this word tangible. So in this conversation, you see that the chemistry between Sai Pallavi and Nag Chaitanya is very tangible. He used that word actually. So here the tangible means we can see and we can feel it and we can touch it. Okay. So that's why PP are also tangible items. So he used it. I just give for your reference. Okay. As your Risha. So PP are the tangible assets. Are you explaining? No? So are you explaining about Tandel movies? There is one movie. No. You know it, right? Okay. So PP are the tangible items. So whatever the assets you have purchased, if you want to classify it under the name of PPE, those PPE should be tangible item. First condition. Second condition, purpose. For what purpose you are using those assets in your business? Here they are mentioning the purpose. Used in the production or supply of goods or services, or for rentals to others, for administrative purpose. If you used this tangible asset in any of these purpose, you can classify it as a PPE. Okay. So here I mentioned the word or. So you can use it for production, or you can use it for rentals, or you can use it for administrative purpose. For here there is an exception for rentals to others, except land and building or both. Okay. So if you purchase one land with the intention to rentals to others, it should not be categorized under the PPE. It should be categorized under investment property. There is a separate Ind AS. Okay, Ind AS 40 is there. So in that, separate accounting treatment will be there. But if you purchase one plant, plant means not rose plant or hibiscus plant, it is plant and machinery. Okay, in that plant. So if you purchase one plant, and what is your purpose? For giving rentals to others. Can I categorize it under PPE? Yes, you can categorize it under PPE. So if you take in one building, so I have purchased one building, it is a tangible items, and what is my purpose? I want to give rentals for others. Okay. So what is the purpose of acquiring this building? For giving for the lease and earning rentals on that. So if your purpose is rentals to others, and what is the asset, land and building, it should be categorized under Ind AS investment property. There is separate Ind AS. Okay. And for the remaining plants, machineries, equipments, all these are purchased for the purpose of rentals to others. It can categorize under PPE. Okay. So you need to just see the what is the asset you are purchasing and what is the purpose. And second thing, how much you are expected to be used in the accounting period. So even though your purpose is served, but this condition is not yet satisfied, it should not be classified under PPE. So here I use the word and. So it should be satisfied condition number 1 and condition number 2. So condition number 2 is the time factor. Condition number 1 is the purpose. So in this purpose they are giving 3 purposes. So A, B and C. You can satisfy any of one purpose. You no need to satisfy entire 3 conditions. If you satisfy any one of the purpose, yeah, purpose condition is satisfied. And after that I need to look for the what is the expected period. Okay, this is not actual period. You don't need, you don't know the what is the actual period you are going to be used in your business, right? So here all accounting treatments are done on the basis of expected periods. So I am expecting it to use in my business. So that's why I have classified under PPE. Okay. Then recognition criteria. PPE should be recognized in books only if probable future economic benefits will flow to the entity and cost of the asset can be measured reliably. So these 2 conditions should be satisfied cumulatively. Then only we can recognize the PPE in our books. What is the first definition, first element? So I need to check whether the purchasing asset satisfies the PPE definition. Okay, yeah, it has been satisfied. After that, can I recognize it in my books? No. PPE can be recognized when only when it satisfies the 2 conditions. Okay, when it has been recorded in the books, only PPE should be satisfies these 2 conditions. Okay, so before that I need what is PPE, right? So for the satisfaction of the PPE definition, I need to check for these conditions. So So these are the element. Now I need to record it in my books, right? So just I learned that what type of assets I can recognize it. Okay, then at what amount I should record it. Initially means whenever initial recognition or initial purchase, initially you should record your PPE at cost. Okay, what is the word cost? Cost contain three elements. What are the components of the cost? Okay, what are the components of the cost? Purchase price, directly attributable cost, and initial estimation of dismantling and removing and restoring. Okay, so these are present cash flows. Directly attributable cost is also present cash flow, but this dismantling cost is future cash flows. Okay, if you want to purchase some machinery, I need to pay the purchase price, right? So for after purchasing, I need to bring that asset to my factory location and I have to install it. So for loading and unloading, for the installation, all these expenses are incurred just because of this machinery. So I should included these expenses also as a cost of the asset. The third element is the future cash flows, means after this asset is, if you want to install this asset or after usage of this asset in my business, while dismantling it I should incur some cash flows. Okay, in the future I should incur some cash flows with respect to dismantling of this plant and machinery. Those costs also should be included in the cost of the asset, but that cost should be incurred in the future. Future cost should not be included today, right? So that's why I should bring that future cost into the present, then I should be added to the cost of the asset. Okay, so I didn't understand this word. If you have that feeling, we will solve one problem. So illustration 7. So illustration 7. Actually there is some mistake with respect to the illustration numbers. Okay. So previously we have solved alpha limited, right? So alpha limited machinery cost as 4,800. That is illustration number 6. So this is illustration number 7. Okay. So don't worry, in your books the illustration numbers are in order only. So in my soft copy it is different. So look at the question. So our Shivali will brief all these amounts. Okay, you no need to remember. Just kidding. Okay. So on 1/4/2020, Vishnu Limited installed a mission in the rented premises at a cost of 25 lakhs. So there is a company called Vishnu Limited. So they wanted to install the machinery. So but they don't have a own premises. So what they did? They installed in the rented premises. What is the cost of the machinery? 25 lakhs. And after that, whose life is 3 years. So after 3 years, we cannot use that asset in our business. We should de-recognize from our books. Then as per the rental agreement, the machine should be decommissioned and the building should be brought into the original position. So what is the rental agreement? In the rental agreement, one condition is there. So you are installing your machinery, right? So after 3 years, I should remove this machinery from this building. Why? Because this is rented building. For removing this machinery, I should incur some cost, right? And after that, after removing of the machinery, the floor will not be as like at the original, right? So the floor might be, so it breaks down, right? The floor might be break down. So I need to restore it. I made to this floor reconstruct into original position. For that, I should incur some expenses, right? So in the rental agreement itself, the owner strictly told that you should restore the floor and you should lay the original tiles as before, and after that you should remove, you should leave that building. So what is the future cost with respect to this machinery? Removing that machinery from the building. After that after that some construction expenses with the restoration of the floor. So these two expenses should be incurred in the future. This future cost should also be included in the cost of the asset. So what is the expenditure? The company should incur 4 lakh rupees at the end of the third year to restore the premises into the original position. So what is your future cash flows here? 4 lakh rupees. What is the today cash flows? 25 lakhs. For the purchasing of this machinery, I need to incur 25 lakhs, right? So I paid 25 lakhs, I bring that machinery and I install this building. But at the end of the 3 years, okay, after completion of 3 years, what is my future cost? 4 lakh rupees. Why should you are incurring this 4 lakh rupees? Because of this machinery, right? If you are not purchased this machinery, these 4 lakhs rupees are not at all incurred, right? So these 4 lakhs are incurred for the purpose of this machinery. So this 4 lakhs should also be included in the cost of that machinery. Okay. So can I include 4 lakhs? No, because this 4 lakhs is incurred in the future. So 1 rupee today is not equal to 1 rupee after 3 years. So there is some time value of money. So I should bring this 4 lakh rupees. What is the value of this 4 lakh rupees today? So this is the 4 lakh rupees is there at the end of the third year. What should be the today value of this 4 lakh rupees? So here they are giving the discount rate. By using this 10% discount rate, I should find out the present value of the dismantling cost. So coming to concept book, while calculation of the cost, I should include this purchase price. Here in question they are giving with the name of the cost. So this is the cost price and second element is dismantling cost. So but I should include the present value of the dismantling cost. So they are giving only dismantling cost. I should do the present value, then I can include to the amount of the cost. So that is the element here. So tell me what is the present value of the dismantling cost? So tell me the present value factor. Cash flow is the 4 lakh rupees. I need the present value factor at the rate of 10% for at the end of 3 years. Right. So 1 divided by 1.1, 1, 2, 3. What is the value? 0.751. Please take it to the 3 decimals. Let's follow the standardized format. We will take up to 3 decimals. Okay. Then we got the discounted cash flow into 4 lakh rupees. What is the value? 3 lakhs. Sorry? 400. Okay. 3 lakhs 400. So how many values he has taken? Up to 3 decimals. Okay. So 3 lakh 4,000 rupees. So what is the cost of this machinery? Because of this machinery, initially, okay, on day 1, I have incurred the cost of, purchase price of 25 lakh rupees. And after that, I have incurred 4 lakhs after 3 years. So I should discounting this 4 lakh rupees. What is the present value of this 4 lakh rupees? 3 lakh 4,000 rupees. This 3 lakh 4 lakh, sorry, this 3 lakh 4,000 rupees also incurred for the purpose of this machinery. So that's why, sorry, 400. So 3 lakh 400. So these two elements are incurred for the purpose of purchase of machinery. So these two elements should be included. Okay. And what is the value? 28 lakh 400 rupees. Okay. So record the journal entries. So now I need to record the journal entry. So here what is the value here? 28 lakh 400. So this is the value at which I should record asset in my books of accounts, right? I wanted to bring one asset into my books of accounts. What is the journal entry I need to pass? I just bought one asset. Illustration number 7. So there is some mistakes regarding with the illustration number. So I revised it actually. So this is an illustration number 7. Whatever the problem we have solved in the previous section is the illustration number 6. Okay. Now tell me what is the PPE here? What is the name of PPE? So machinery account debit. Okay. So this is the name I have given for this recording of the asset, machinery account. What is the amount? So I have purchased now itself, right? So initially I am recognizing this machinery in my books of account. As per the Ind AS 16, initial recognition should be at cost. If you purchase any asset, the asset should be recognized in your books initially at cost. What is meant by cost? They are given the definition. Cost includes purchase price, directly attributable expenses, present value of the dismantling cost. So purchase price plus directly attributable expenses value is 28 lakh 400. 28 lakh 400. Then what is the credit aspect? To, so okay, to cash. What is the credit aspect? So machinery account 28 lakh 400. Okay, so I need to incur 28 lakh 400 rupees with respect to this machinery. So what is the cash amount? 25 lakhs. Okay, then remaining balance, so it's a present value of dismantling cost. Sorry, 8 lakh 400. Yeah, present value of the dismantling cost is it is refund amount. Okay, deferred liability. Yeah, this is a deferred liability. Yeah, actually I need to pay 3 lakh 400 rupees today. Normally, if I wanted to pay this dismantling cost amount today itself, I should incur 3 lakh 400 rupees. But I am not paying today. Okay, I am paying it in the future after 3 years. After 3 years, what is the value? 4 lakh rupees. But I cannot include that 4 lakh rupees today, right? So that's why I did dismantling cost, present value of the dismantling cost. In other way, we can interpret it in such a way. So generally, I need to pay 3 lakh 400 rupees today. But I am not paying it today. So I have to pay at the end of the 3 years. At the end of the 3 years, I should pay along with the interest. What is the principal amount? 3 lakh 400 rupees, and remaining balance is the interest. So along with the interest, I need to pay 4 lakh rupees at the end of third year. So what is the journal entry here? Out of 28 lakh 400 rupees, I settled through the cash 25 lakhs. Remaining balance I told I paid after 3 years. So it's like treated as a liability, deferred liability. Okay. Then second thing, so this is the liability, right? But I am not paying it today. So what will happen to this liability? This liability should be increased year by year. Okay. So how you are increasing the liability? Interest account debit to present value of dismantling cost. So tell me the interest amount. 3 lakh 400 into what is the discount rate or interest rate? 10% is. Sorry. 30,000 40. Okay, okay, sorry. 30,000 40. 30,000 40. So this is the journal entry I need to provide. So this is for first year. Okay. Then what about second year? Of course, we need to transfer to the P&L also. Okay. This interest is an expenses. This interest should be transferred to P&L also. If you want, you can write that entry also. P&L account debit to interest account. So 30,000 40 and 30,000 40. So in the same way, I need to provide the journal entry for the second year as well as the third year. At the end of the third year, your present value of the dismantling cost becomes 4 lakh rupees, and this 4 lakh should be paid through the cash, because at the end of the third year only cash outflow should be incurred. In question they are asking journal entries, but in answer they are not providing the journal entries. So please note down the journal entries also, because in question they are asking record the journal entries. So please provide the journal entries at least for the first year. Okay. Did you note it down? Okay. So let's see the illustration number 8. It's a completely theory. Okay. It's not at all related to whatever the concepts we have learned so far. It's not it been related. It's a different concept. Actually, it has been linked to different Indias. Indias 8. Okay. Indias 8. Changes in accounting policies, accounting estimates, and errors. Okay. The standard name is accounting accounting for changes in accounting policies, okay, and accounting principles and errors. Okay, then here there is a change in the depreciation. Okay, there is a change in the depreciation method for an item of PPE. For the calculation of the depreciation, how many methods are there? So SLM, written on value, units of production method. I can follow any of the method, right? So what you did? So now I changed SLM method to written down value method for the valuation of or for the providing of the instead of straight line method, whichever already I am following for the calculation of the depreciation in the previous years. In current year, I wanted to calculate depreciation by using written down value method. Simply saying, I wanted to shift from SLM method to written down value method for the calculation of the depreciation. Okay. How to account for this change? We have shifted from one method to another method, right? So whatever happened in your business, it should be reflected through your financial statements, either passing through journal entry or either providing information in the notes to account as a disclosure parts. Okay. Now he is asking whether this change is considered as a change in accounting estimate, not a change in accounting policy. Okay. So generally, I am just giving the small introduction with respect to India side. There are two elements: change in accounting estimate and change in accounting policy. For the calculation of the financial statements aspects, so there are accounting policies and accounting estimates also. Okay, few aspects are accounting policies and few aspects are accounting estimates as per India said. So they are providing the definitions also, what is an accounting estimates and what is an accounting policies also. Accounting policy is nothing but the rules and regulations or principles or guidance given in the Ind AS. Okay, and what is an accounting estimate means? Estimate means there should be involved some uncertainty. We don't know the exact amount. So then only estimations are coming into picture, right? So if you recorded any value in your books of accounts without knowing, okay, you don't know the exact value. So but we are recording it by using your expectations. That amount should be called accounting estimate. Okay. So here what happened? So the company is shifted from SLM method to written down value method. Whether this change is considered as accounting estimate or accounting policy. Sorry, estimation or policy. I have shifted from SLM method to written down value method. Whether this change is considered as accounting policy change or accounting estimation change. Accounting estimation change. Why you are saying accounting estimation? It seems like it's a change in the method, right? Then, but why you are saying it is change in estimation? So 1 minute. Okay. For the calculation of for the subsequent remeasurement of the asset, I can follow two methods: cost model or revaluation model. Initial recognition is at initially I should recognize my asset at cost. But what is the subsequent treatment? Subsequent measurement means at every year balance sheet date. Subsequent recognition. So at every year ending, I need to check my assets whether this value represents my real value or not. So for the valuation of the assets at every year ending, India 16 provided two methods. First one, cost model, second one, revaluation model. So I can follow either of the model. Okay. If you change it from cost model to revaluation model, whether this change can be accounted as a policy or change in policy or change in estimate, change in policy. So this is one rule, right? So you can follow cost model rule or revaluation model rule. You are just changing from one rule to another rule. So it's nothing but a change in the accounting policy. But coming to here, you are changing. So it seems like a similar. You just shifting from SLM method to written down value method. But why it is considered as a change in estimate instead of change in policy? Because for the calculation of the depreciation, what is the formula? Tell me under SLM generally. Total carrying amount minus expected residual value divided by expected remaining useful life. So for the calculation of the amount, so then I got the depreciation. What is the depreciation? Let's say 20 lakh rupees is the depreciation. For the calculation of this 20 lakh rupees, it involves lot of estimates. So do you know the exact residual value? No, it's an expectation. Do you know the exact expected useful life? No, right? So it's all our estimations. So for the calculation of the depreciation, it involves lot of estimations. Here you are just changing your estimation. Okay, here just treat it as a change in the estimation because you are shifting from one method to another method. For the calculation of the depreciation, it involves lot of estimations. Simply saying it's a shifting of estimations. Okay, from one estimation to I am shifting to other estimation. So that's why it is treated it as a change in. Tell me, it's a change it as a sorry, treated it as a change in accounting estimates, not accounting policy. Okay, this is the reason. So you no need to write everything whatever here reflecting in the answer. I just want to highlight for you again. You try to remember these aspects, that's enough. So first, write down the depreciation method. What is the depreciation? So depreciation method in itself is an estimation of consumption of utility in the asset. So out of this entire asset, what is your usage of this asset during this year? So out of this 500 lakh rupees of worth, so you have utilized 100 lakh rupees during this year. Okay. So depreciation method is itself an estimation of consumption of utility in the asset. Okay. So write down this definition. After that, write down the change in accounting policy. So change in accounting policy only occurs if the rules of either recognition, measurement or presentation of line items are changed. So how when we treat as a change in accounting policy, if there is a change in recognition, measurement or presentation of the line item. Okay. So the change in depreciation method is changes neither of these. You are changing from one depreciation method to another depreciation method. So it's not with respect to the recognition. What is the recognition criteria? Recognition should be at cost. What is the measurement criteria with respect to the PPE? Cost model or PPE model? We can follow either of this, but this is not changing here. Next one is the presentation. Okay, presentation of the PPE in the financial statements. This presentation is also not at all shifting. Okay, then what about this? This is nothing but the change in accounting estimates, because change in accounting policy definition is not at all satisfied. So this is nothing but the change in the accounting estimates. Therefore, it is a change in accounting estimates. That's all. So, and after that, if you want to write more, write this point. Change in accounting estimates results from the new information or new developments accordingly, and not the correction of the errors. Okay. So you wanted to change from SLM to return on value. So depends on the circumstances. While you have purchased the asset, based on the information on that day, you wanted to choose SLM method. But later on that you got some more information. So you wanted to shift from SLM method to return on value method. So this is not, should be considered as a correction of errors. So it is not a correction of error, and it is not a change in accounting policy. So it should be treated as an accounting estimate. Okay. When you change the accounting estimate, now you wanted to change from one accounting estimate to other accounting estimate. So when you wanted to change, only if you get new information or new developments, and accordingly you need to change from one accounting estimate to another accounting estimate. So I will give one example. There is a change in the useful life. Previously the useful life is 8 years. Okay, the previously the total useful life is 5 years at the initial recognition. What is the life? 5 years. So after providing of 2 years depreciation, what is the remaining useful life? 3 years. What is the remaining useful life? 3 years. But I wanted to revise my useful life. So what are my expectations? My expectation is the useful life is going to be 3 years. But after, at the end of the 2 years, I got new information. Okay, this machinery useful life we cannot use in the future up to 3 years. So this usage will be expired within the 2 years. Now what is my revised useful life? 2 years, right? What is the actually useful life? As per my original information, this is to be 3 years, but I have changed from 3 years to 2 years. Okay, how to account for this change? Useful life is changed from 3 years to 2 years. If you wanted to gross amount, so useful life is changed from 5 years to 4 years, right? Originally you are thinking that useful life is 5 years. Now what is my remaining useful life? 4 years only, because already 2 years is expired. Remaining I am expecting only 2 years. So what is my revised original life? 5 years, sorry, 4 years. Here change, shifting of useful life, change of the useful life from 5 years to 4 years. How to account for this change? Whether this change is a change in accounting policy or estimate or error? Estimate. Why? Because for recording of these 5 years you don't know the exact useful life value. So this 5 lakhs is recorded with some estimation. Okay, what is an accounting estimate? Accounting estimate means, so you can record the value with some uncertainty. Whatever the value recorded, so that value is involving some accounting uncertainty. So here 5 years is not the exact useful life. This is our expectation. Expectation always involves some uncertainties. Okay. So what is the remaining problem in this chapter? Okay, you don't know it, right? Wait. So don't worry, I will share you the soft copy. So whoever watching online, you can take the printouts. So after 2-3 days, you can get your handbooks. Okay. So in the meanwhile, I I will share those PDFs with you in online too. You can take the xerox and you can use for the reference until you reach the books. So I think first problem we have completed, right? So one, two, second problem also completed. Third also completed. So fourth one is also completed. And what about fifth? Fifth also completed. So completed. And yesterday Alpha Limited is also completed, right? So on today, the illustration 7 is also completed. Illustration 8. So what is the balance? Illustration 9. Okay. Whether illustration 9 is completed? No, right? Okay then. Let's complete the illustration 9 also. So it is the same concept. Already we have completed this kind of problem. So I just wanted to given this this problem to revise that one. Okay. So it is the same similar problem we already completed. So for the revision purpose, I have included this problem. So kindly look at here. D Limited has incurred the following transactions. Okay. So D Limited include the following transactions for acquiring a plant in exchange of the old plant. How I am acquiring new plant? By giving another asset. Okay. The old site was dismantled at a cost of 16,000 and the scrap value is 2,000. Is it that same problem or values are different? So values are different. Same problem, just the values are different. Okay. What is the old dismantling cost? 16,000. Now if you wanted to, okay, if you wanted to install this new plant here, okay, the already your old plant is there. Already your own plant is there. For that old side dismantling cost is 16,000 rupees and the no dismantling cost should be capitalized for the old plant. And the scrap from the old side sold is 2,000 rupees. What is our definition? Cost definition. I should include the cost price, directly attributable expenses. Third thing, present value of the dismantling cost. But here what happened? What is the dismantling cost? So this 16,000 rupees, he forgot to include it in the cost of the old plant. Cost of the old plant. Okay. Generally, if you wanted to include in the old plant, I should include the present value of the dismantling cost. Okay. If you wanted to include the dismantling cost at day 1, you should include the present value of the dismantling cost. But here we are standing on the at the end of the useful life of the old plant. That's why we are replacing it with a new plant. So we are standing on the at the end of the useful life of the plant. At the end of the useful life of the plant, at what dismantling cost should be included to the cost of the asset? If I included the dismantling cost on day 1, I should include present value of the dismantling cost. But here I forgot to include this dismantling cost to the cost of the asset, cost of the whole plant at day 1. Now I am standing on the end of useful life. Okay. So end of the useful life, I should not include present value of the dismantling cost. I should include cost. What is the dismantling cost here? They are giving 16,000 rupees. First thing I should do, this 16,000 rupees should be included to the cost of the whole plant. Okay. Then after that, scrap from the old side sold was 2,000 rupees. What is the total dismantling cost? What is the total dismantling cost? 16,000 rupees. Okay. What is the scrap income? 2000 rupees. What is my net dismantling cost? 14,000. For dismantling that structure, I have incurred 16,000 rupees. Okay. So after that, the scrap is will be there, right? So I sold the scrap. I got 2,000 rupees. So my total expenditure is 14,000. I got 2,000 rupees income from the scrap. Then what is my net expenditure? 14,000 rupees. Then what is my net dismantling cost? 14,000 rupees. This net dismantling cost should be included to the cost of the whole plant. Okay. Why you are included this 14,000 rupees, but you forgot to include the present value of the dismantling cost at day 1. Now I wanted to include the entire dismantling cost today itself to the cost of the plant. So this is the information with respect to the whole plant. Then now I am I am acquiring a new plant, right? I am acquiring new plant. For installing of that new plant, I bought one. I am preparing one new site for installation of the new plant. What is the new site expenditure? This 96,000 rupees should be included to the cost of the asset. Then supplier of the new plant agreed to take away the old plant at a fair value of 3,52,000 rupees. So I went to the vendor and I wanted to buy some new asset. But I already have old plant. So what I said, please take this old plant and give me that new plant. Then what value you are giving for this old plant? They are saying the supplier is fixed the fair value of the old plant is 3,50,000 rupees. For example, I am saying the new plant price is 4 lakh rupees. What amount I should pay in the cash? New plant price is 4 lakh rupees. I already giving my old plant. The value of the old plant is 3,50,000 rupees. What is the remaining balance? 8,000 rupees should be paid in the cash. Okay. Now here, but what is the new plant price? 6,40,000 rupees. Out of 6,40,000 rupees, 3,50,000 is settled by giving the old plant, and remaining amount paid through the cash. Then, what is my carrying amount of the old plant? Already in my books of accounts, in my balance sheet, the old plant is showing at a value of 2 lakh rupees. But is this the correct carrying amount? No, because I forgot to include the dismantling cost. What I am going to do now? I should include this dismantling cost. After including of dismantling cost, this carrying amount of the old plant should be increased by 14,000. What is the next dismantling cost? 14,000. For increasing of this carrying amount of the old plant, I should pass the journal entries, right? So I cannot do open the balance sheet. I can give the 14,000 rupees. So I should increase the old plant value by giving journal entries. So illustration number 9. So illustration number 9. First journal entry, old plant account debit to, tell me. Okay, say dismantling cost. I understand. We cannot use the word dismantling cost, right? Give me the journal entry. So old plant account debit to cash account. Okay, so you can use the word dismantling cost also. So old plant account dismantling cost. After that, dismantling cost account debit to cash account. So instead of providing two entries, I can provide the net journal entry. So old plant account debit to cash account. What is the value? 14,000 rupees. I should increase the value of the old plant by 14,000. How you got this 14,000? 16,000 minus 2,000, 14,000. Okay. Now what is the revised carrying value of the old plant? Revised carrying value of old plant 2 lakh plus 14,000 rupees. Already in my books of accounts, the whole plant value is 2 lakh rupees. Now I increase it by 14,000 rupees. Then it becomes the 2 lakh 14,000 rupees. Okay. Then. So 2 lakh 14,000. What is my fair value of the whole plant? Fair value of whole plant. Shivali, what is the fair value of the whole plant? 2 lakhs. Okay, 3 lakh 20,000 is the fair value. Okay, 3 lakh. I am just checking whether you are aware or not. 3 lakh 52,000. So here what happened to our whole plant? Indirectly, we are selling this whole plant at a value of 3 lakh 52,000. Okay, this is the essence of the transaction. But we are not selling it for cash. We are giving it for acquiring of other plant. Okay, then what is the value included to you because of this whole plant? 3 lakh 50,000 rupees. It is nothing but the sale. What is the sale value of the whole plant? 3 lakh 52,000. But what is the carrying value of the whole plant? 2 lakh 14,000. So what is the profit? So we can say profit on, for our understanding purpose only, I use the word sale. Okay. But we can use the word exchange. Profit on exchange of whole plant. 1 lakh 38,000. Okay. Now I should record the new plant. Now I want to record the new plant. If I wanted to record any asset initially, at what amount I should record? Cost. Tell me the components of the cost. Purchase price, directly attributable cost. Directly attributable cost means all the direct costs incurred to bringing the asset for the present location and condition as intended by the management. And the third one was present value of the dismantling cost. Okay. So 3. 1, 2, 3. So please help me to identify these costs. So classify these costs into 1, 2, 1, 3. I will tell you the expenditure and please identify under which classification it is going to do. So leave it the whole cost, whole plant. Okay, it's the information regarding with the whole plant. So new site was constructed at a cost of 96,000. This 96,000 is 1, 2, 3, 2. So directly attributable expenses. The second one is about new whole plant fair value. Then coming to new plant was 6 lakh 40,000 rupees. This is the purchase price. I should pay the vendor 6 lakh 40,000 rupees with respect to this new plant. Then the next information is the carrying amount. Then what is the present value of the dismantling site? 32,000 rupees. This is 3. Then what is the wages paid for the installation? Tell me. 2 or 1? 2. Trial run? 2. What about freight? So usually this is GST. Ignored. So this is refundable amount. Okay. So generally this is refundable amount, should be ignored for the calculation of the cost. For the providing of the journal entries also, usually you can write the note word. So GST accounting treatment is ignored in this calculation. So there is no need to provide the journal entries with respect to the GST treatment. Okay. Next, loss amount was 80,000 rupees. Why you have incurred this loss? For the low capacity utilization after installation. And what is the next amount? 20,000 rupees. Why you have incurred this 20,000? 20,000 paid was cost of launching the new product. So now tell me, What about this 80,000? 1, 2 or 3? Do not consider in the calculation of the cost of the PPE. So it should be transferred to P&L account. And what about this 20,000? What about this 20,000? This also is transferred to be P&L. Then what is that? Tell me the reason. We are not included. 1 minute. Let me finish, okay? We are not including 80,000 rupees and this 20,000 rupees to the cost of the PPE. What is the reason? So these expenditures are incurred after installation of the plant. Once you have installed this plant and machinery, you can generate revenues. So you are generating revenues by using this plant. Because of this plant, you are generating revenues, right? So because of this plant, you are incurring some expenditures also. I am talking about after installation expenses. After installation, you have incurred just because of this plant. And you are also generating revenues also, right? Because of this plant. So these revenues are transferred to the P&L. Okay, as per the matching concept, if the revenues are recognized in the P&L, so okay, the respective expenditures which are incurred for the purpose of earning this revenues also should be transferred to P&L. So that's why whatever the expenses incurred with respect to this plant, after the installation should be transferred to P&L account, not it should be the capitalized to the cost of the asset. Okay. So this loss is installed after the installation, and this 20,000 is also incurred after the installation. How you are saying after the installation? Because this 20,000 is incurred as a cost of the launching of the new product. How you launch or how to produce the product? After installation of the plant, right? So now tell me the total cost of the plant. So 96,000 plus 6 lakh 40,000 plus 32,000 plus 8,000 plus 3,200 plus 16,000. And after that 7 lakh 95 200. So new plant 7 lakh 95 200. Then so I have incurred or I have spent total 7,95,200 rupees. Okay, this is my total expenditures. These expenditures are incurred today or I might incur in the future also. This includes the present cash flows and future cash outflows also. So that's why I have recorded at 7,95,200. So how you are settling this 7,95,200? Are you paying entire 7,95,200 in cash? No. Then there are three aspects are involved here. First thing, few parties through by exchanging of old plant. So what is the settlement value with respect to the old plant? If you are given 3 lakh, sorry, old plant, they are saying that you no need to pay 3 lakh 52,000 rupees. Okay, you no need to pay 3 lakh 52,000 rupees. But what I need to do here? I need to de-recognize this old plant, right? Why you are recording this new plant? Because it is bringing into your business. That's why you are giving the debit aspect. Now what I am going to do? So I need to giving this asset. What asset? I am giving old plant. So what I am going to do? I should de-recognize this asset from my books of accounts. So what is the at what amount I should de-recognize it? At 2,14,000 rupees. But this is the value it is showing in my balance sheet. So to old plant 3 lakh, sorry, 2,14,000 rupees. But what he is saying, for giving of this old plant, I can set off your liability to the extent of 3,52,000 rupees. Okay. What is the extra amount he is setting off? 1,38,000 rupees. So to profit on exchange. What is the profit on exchange? 1,38,000 rupees. So what is the total amount? 3,52,000 rupees. So out of 7,95,200, exchange of our whole plant, we have settled the amount to the extent of 3,52,000 rupees. Then, what is the remaining aspects? So, out of the remaining amounts also, this new site cost is 96. How you paid this 96? Cash. So this is cash. Then what about this is 6 lakh 40? What about this 6 lakh 40? So out of this 6 lakh 40, 3 lakh, so 3 lakh 52. Sorry. So out of this 6 lakh 40, 3 lakh 52 settled by old plant. Remaining balance 2 lakh 80, 88,000. So this is paid through the cash. So out of 6 lakh 40, I paid through the cash to the extent of 2 lakh 88. Okay. This is also cash. Then what is the present value of dismantling cost? 32,000. Whether you have incurred cash today, are you incurring any cash outflows today? No. So this 32,000 rupees will pay in the future. So this is should be recorded as a deferred liability. Okay. So present value of dismantling cost. So this is not incurred out of cash. I will incur in the cash, but not now, in the future. Then what about wages? Cash. Trial run? Cash. Freight paid? Cash. So these are the amounts. So now tell me, 96,000 plus 2 lakh 88,000 plus 8,000 plus 3,200 plus 16,000. What is the total amount? 4 lakh 11,200. 4 lakh 11,200 rupees paid through the cash. What is the balance amount? Present value of dismantling cost. What is the value? 30? Okay. 32,000. So out of 7,95,200 rupees, 3,50,000, 3,52,000 settled through exchange of old plant. Okay. And 4,11,200 is paid through the cash. And remaining 32,000 is not settled. It's like an outstanding expenses. You need to pay today, because you have been recorded entire 7,95,200 as an asset, right? So, but you haven't paid today 32,000 rupees, and this 32,000 rupees should be treated as a liability. Okay. And what about third journal entry? Here I am incurring 20,000 for the cost of launching the product, and loss also there for 80,000. Okay. So all these are transferred to P&L account. Cost of what are the cost name? Launching the product. Cost of launching, account debit, loss account debit. What is the loss? So 80,000. What is the cost of launching new product? 20,000. this entire expenses are transferred to P&L account. So instead of costing, sorry, you can write it as a cash first. Okay. After that, P&L account debit to 1 lakh rupees to cost of launching product to loss account. 20,000 and 80,000. P&L account debit to cost of launching new product 20,000 and the loss account 80,000. What is the initial cost? At what amount we should recognize? 7 lakh 95 200. After that, here passing the journal entries separately. So, but here I am passing the net journal entry. So, instead of 16,000 increase on 2,000 reduced, so I pass the net of 14,000. Then 7,95,200 is settled through exchange of gold plant. Supplier, he used the word supplier or cash. The cash and liability for dismantling. So for this one, he need to pay 6,40,000 rupees for the supplier, right? So out of 6,40,000, 2,52,000. Sorry, what is the word here? 2 lakh 2,88,000, right? Okay. So out of 6,40,000, 2,88,000 paid through the cash. 1 minute. 3,52,000. Okay. Sorry. Okay, okay, okay. 1 lakh. There is some pending mistake. So I already I already corrected these mistakes. Whatever the material you are going to get, I already corrected these mistakes. Okay. So no need to worry. So that's why you no need to follow this answer. You better to follow our notes. Okay. For few problems, you should ignore the answers given in the board book because we are doing all the problems with one pattern. Okay. So you better to habituate to those kind of standardized format for solving the problem. Okay then. So only one problem is left, that is illustration 10. Okay. So we will discuss it in the next session. It involves a lot of values. Okay. This problem involves a lot of values. I cannot keep on shifting the page. Okay. If you have the reference material, then only you can understand this problem. It involves some complex nature, and I wanted to revise some basics also with respect to the when we start the depreciation and when we stop the depreciation. Okay. And what is the put to use of the asset, up to up to what date I should capitalize the expenses. Okay, all these basics are I should revise it, and after that I should use the all the values also here. So that's why without having material it might find difficult for you. So that's why I will discuss it in the next session after you are getting the materials. For the temporary purpose, I will share this entire material in the group. Whoever watching in the online, you can take those papers. Okay, and whoever there, I will provide you the hard copies, don't worry. Okay. So thank you. So enjoy your day. Today I am leaving early.